coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Woo. How's everybody feel day after Super Bowl, watching the game, having maybe a libation or two, maybe eating a little bit too much or two? How are we on Monday? We good?
Yeah, I'm good.
Feeling good?
Nice. Very nice.
The game was so boring.
It wasn't.
Oh, it was.
I was like, I don't even need to take my magnesium. I'll just finish watching this game.
It was.
You didn't have to spray the what is the fragrance that
Lavender?
Yeah, lavender. You didn't have to
Yes.
spray the lavender to get to sleep. That's great. That's great.
It was a good day to go from golf to football. It was just like a full nap day.
Where was their goal? Oh, the waste management. Who won the dumpster open? Who?
Got her up?
I don't know.
Younger guy.
I don't know who that is.
Is it Chris got her up?
Didn't he go like almost bell to bell or something? Was he like 16?
No, Hideki was winning the entire time and then just exploded at the end.
Gotcha.
Oh no.
Gotcha.
Sad, yeah.
Oh no.
So
yeah, he was like 16 under or something like that.
But I had my two guys, Jake Knapp and Mav McNeely. I bet on them every time. I love both of them.
Okay.
Jake Knapp
you fanboy them?
Fanboy. Jake
You
Knapp,
bet on golf?
Yes.
Okay, go ahead.
Jake Knapp.
He's that guy.
He has the smoothest swing I've ever seen. It's amazing to watch.
Sounds like you're in love.
Sort of. He's amazing. He was a bouncer and then just like randomly took up golf and now he's like.
So there's hope for us all.
Pretty much, yeah.
Right.
Yeah.
I mean, if you
No,
can do it,
no
we can all
cap.
do it.
That's like almost the plot of a romance book that I read.
Oh, my wife's on chapter 4, by the way.
Oh, nice.
cool.
Yeah.
Yeah, hey.
Unbelievable. I make fun of her.
One chapter a week, pretty much.
Hey, it's
Hey,
more
look,
than
we don't
Better than
denigrate.
nothing.
Reading is reading. Everyone should read more,
Yeah.
whether it's just a couple pages a day. Like, it just makes a difference. Did you have people over for the Super Bowl?
No.
It was just you and your lady?
Yeah, it was just kind of a chill.
just him, his lady, and his new curtains.
You got new curtains?
I did get hurt.
Is this a euphemism?
No.
No, it's mid-30s. You have like little projects, and
Dude,
You're turning into your father, you
this was-
poor bastard.
Yeah.
do they match your carpet?
Ooh, wouldn't you like to know?
Curtains are expensive. Like, it's quite the racket.
I actually got a pretty good. I got a spot.
You got a guy? You got a spot?
They did come from.
Because they are expensive.
I had to get custom ones because
Of course
Are
you
they
did.
blackout or like
in the bedroom.
thermal?
Yeah.
Oh, okay.
The other ones are just normal ones.
Normal ones.
And,
Oh, okay.
blackout.
Oh, it's all like a whole house curtains.
Yeah.
Oh,
Yeah,
okay.
Both
But he put him in himself. How'd that go?
Yeah. It was. So I have like it's a lofted apartment.
Sure.
So I have really high ceilings.
Yeah.
So I was
Do you
on
have a ladder that's
Overlooking the city in this economy?
It's a nice place, but I have a ladder, and it's like the curtains were 138 inches, so it's like 14 feet, 13 feet.
Wow.
My ceilings.
And they get heavy. You holding them up.
They get
you put 'em
heavy,
in.
yeah. So, and you had to be up on a ladder. It gets a little dicey up there.
Yeah.
You're half Jewish. Yeah, go ahead.
Yes. What is
What does that have to do with anything?
Not very mechanically inclined, half of them. Go ahead.
Yeah, but it got a little dicey at points. Like the ladder it's a good ladder, but it's like one that like folds up, so it's not like a construction ladder where it's,
Big A-frame.
Yeah,
big
like
A-frame,
scaffolding.
Like 600 pounds.
yeah, like this one is like it supports like 350.
We're gonna be okay.
And yeah, you're not supposed to go above like a certain
Second rung on there.
the rung and I'm like
It's only 8 feet.
I'm like all the way at the top, and
Did you almost kill yourself?
pretty much, yeah. No, there were times.
You can pay people to do
Yeah.
things.
Well, because I got a whole and the bar.
Right? No, I've hung my own curtain. Yeah.
You're all by yourself. I get it,
Yeah.
man. I'm an only child. I get it. I know.
So
Yeah.
it was. It
And then
got.
do you have were your walls did you have to get a special bit? Because I had to get a special bit because if your wall it's not just like drywall, if
concrete,
it's
it's all
more
concrete.
Yeah.
Yeah,
You need a
so-
masonry bit.
I got good drywall anchors that were just hammer in.
Okay.
Metal ones. So I hope it stays up. We'll see if it.
You'll find out when you come home tonight.
Yeah, if I'm doing the show on a Friday and you hear like a clanking, it might be my.
But he told me, Dad, I almost died.
Yeah,
I almost didn't get to watch the game.
It got a little dicey. It got a little dicey.
Yeah.
Did you have anybody hold the ladder for you, anything like that, or you were doing a solo? So if you fell, I fall and I can't get up kind of thing. You don't have the life alert. You got nothing.
No,
you would have just been stuck there.
It was one of those points because I've told my sister, I'm like, I'm doing all this stuff. I'm like, if you don't hear from me for 3 days, you gotta call somebody to come to my place or come yourself because I'm there with a broken back or something.
Well, I'm glad that you survived.
Yes,
me too. Me too.
Harrowing ordeal.
It was very dicey. It was very
putting up curtains.
Well, I have to say, this is something that every year you have to deal with this, and you thought you were no longer having to deal with it, but we hit another square pool.
A big one. No. A big one. Unsanctioned. I can't really talk too much about it.
But you won.
We hit one.
Because it was a goofy score, right? Like it was.
We had what would you say the probability? We had
0.28% probability
of hitting.
But that's just on the numbers themselves. The numbers didn't actually hit. So at halftime and game, they do +1 and -1 on the score.
It's like a voodoo thing that you wouldn't understand.
It just seems like another way to rig this. That's why I don't gamble. But okay, yeah.
So it was $1,000 square pool. So it was a big number.
At the halftime and game, they go -1 and +1 on the score. So the score was 9-0.
Right.
So the score for +1 would be 0-1, and then for the -1, it was 8-9. We had 8-9,
which are horrible numbers.
Horrible.
So wait, how much did you win?
Don't worry about it.
Wait,
enough for bagels. Maybe we'll bring bagels.
Yay!
Yeah. Or donuts.
If we can find a store that opens before 6 a.m.
Yes.
You have DoorDash. We have Uber Eats.
Yeah, we could do that.
I don't do that.
I can't believe you won a square pool. Of course I can.
Yeah. I don't know if it was him that was the lucky one or my buddy Justin is good.
Is it?
So wait, did you put in 500 each or you put in 1,000 each?
500 each.
Oh, 500. Okay.
Yeah.
So, but what about your other bets? Like net.
Hit them all.
You hit.
It was a
fantastic look at you.
outing. Yes.
And I won Lindsay's square pool too.
You won Lindsay's? That's sad. You should give that money back. I think she's doing something for
She is for a for running or something.
For running. You should donate the money.
I did donate, and I told her, I said, I won. So when I got the square pool, I didn't even know what my numbers were. When she gave me the square pool, I go, I'm so winning this, is all I wrote her, okay? And she wrote me back.
Sosnov.
And she wrote me back, LOL. And then this morning when I woke up, she was like, you won. And I said, no way. I said, this is great. I said, well, I'll donate it back. She goes, I don't expect you to donate it back. I go, well, how close are you to your goal? She goes, I'm close and I have until October. And I said, okay, listen, if you don't hit it by October, come knocking again. I'll give you the money back and, you can have it. So.
Bagels, donuts.
Only enough to share. You don't get not one person.
So it was a great Super Bowl. I don't care what anybody says about anything.
Yes.
It was a boring game. Not like the halftime. Go do whatever you did. Who cares? It's a great Super Bowl.
Yes.
We are happy.
Yeah. I'm sorry, Vanessa.
It's the worst.
Vanessa hates this.
The worst. But
it's better than
rigged.
Tom winning.
Not really.
Why?
It means very
I'm a normie. I'm just
not really.
you. Come on.
Not really.
I'm just trying to make a buck.
No, I don't. Yeah.
No?
I don't know.
Yeah, I got to pay for my curtains. Come on.
They are expensive.
And life and limb that he lost. It probably took a year or two off of his life.
It was close. Really close. Too close. I shouldn't have been doing that.
What did you win this weekend, Vanessa?
My peace and quiet, my sanity, just being in my house by myself.
There's no price you could put on that. So
right?
For you.
Right?
For you. Absolutely.
Yeah.
Absolutely.
I didn't. My weekend, I was pretty uneventful. Didn't get up to a whole heck of a lot. But did you have people over for your or did your son have people over? I guess I should say.
He had people. Well, he's driving now.
Sure, yeah, he's got his license.
He doesn't care about them anymore.
Yeah, I haven't seen.
Time has come.
I haven't seen a lot of him. Although Saturday night he had a couple of friends over, 6 or 8 of them, or something like that.
Does he have a curfew, or do you just let him?
Well, 11 o'clock is supposed to be the curfew.
Supposed supposed to be.
Yeah.
It's a soft line.
yeah,
it's a
it's
soft line, but he's been in around 11:30. It snowed like Saturday, like night. Like he left at like 9:00 and it wasn't snowing. And then by 9:30, it was snowing pretty good too.
Yeah.
We got another inch or something in a short period of time. But yeah, he's out driving.
Are you live tracking his location or
Yeah,
is
for
you okay?
Yeah. Well, the worst thing about it is, now that he's not home that much, the wife and I can get jiggy with it kind of thing.
No,
You know what I mean?
Oh,
no,
my
no, no.
God.
Nope.
Because he's driving, but we've got this, the Find My iPhone or whatever it is.
Yeah,
or something like that. So it makes a special ring when he gets close. It goes ding ding. Like the phone goes ding ding when he's close. So that's our key to to get everything going. But we live not too far from a
Can
main.
we get into Omaha? Where are my people?
From a main road.
I'm throwing up.
Yeah,
Yeah.
I mean, you're like supposed to stop this as it happens.
So we live by like a main road. So like when to get from one part of town to the other part of town, you almost have to go through this main road. So
Lot
when
of
it goes
false
off,
alarms.
there's a lot of false alarms.
Oh,
There's a lot of false alarms. So we have to wait until the dog starts barking.
gotcha.
And we really got to get moving.
Then yeah, gross.
I hear you guys laughing out there. And there's no Omaha.
Gross.
But it's been fun. It's been good. We're like empty nesters for the first weekend. I don't know. We'll see how it goes so far. I mean, I miss the little guy being around, but it's got to have his independence. Got to go. Oh, so for a birthday present, I got him a car wash, like a monthly car wash.
Oh, that's
so
nice. Yeah.
So I thought actually one of his sisters wanted to do it, but we had already done it. So
I'm still available. I mean, I have a birthday. No one literally cares, but I would like some car washes.
No, I'm going to bring you bagels.
well, he found out this weekend you can't go multiple times intraday. Because he went like one time in the morning, it got dirty or something like that. He wanted to go back in the afternoon. I'm like, no, you can't go back, multiple times. He goes, well, it's free. I go, well, it doesn't work that way. It's once a day.
Sure, there's fine print. Like, yeah.
So he learned that. And we got our ass kicked by York in the playoffs. So it's a best of 3 game series, but we got beat pretty good by them. But the whole team has the flu.
Oh.
Yeah.
Oh, it's like the Swedish women's hockey team.
Yes.
That sucks.
Yeah. The whole team has the flu. So 2 kids were out. One of our best defensemen was out. And they beat us up pretty good. We'll play them again Thursday, I think. And that was it. It was a good weekend. Like I said, we hit a couple square pools. It was a great weekend. Every weekend should be like this weekend.
Did you guys have a favorite ad from the Super Bowl? Favorite commercial?
I like
Commercials were weird this year.
Yeah, kind of
they
weirdish.
were.
I agree.
Yeah.
There was no theme to them.
Yeah, the tight end ad was the
The
best.
tight end ad was
The
great.
prostate cancer.
Yeah.
That was good.
was
Relax your tight end.
Yeah, that was good.
William Shatner. William Shat.
Oh, for Raisin Bran, yeah.
William Shat was pretty good.
Yeah.
I thought that was funny. I thought Tyson was okay. Mike Tyson.
That was weird.
Yeah.
He was like, I wanted to kill myself because I was so fat and nasty. And I was like, what is happening? It's like I was eating a pint of ice or a quart of ice cream every hour. I was like, what is this an ad for?
I agree.
I didn't know what was happening. I like the Dunkin' ad. I'm a Dunkin' girly.
Dunkin' was good, too.
It's weird though when they like de-age you. So
Yeah.
it's not like quite AI, but it's like they just use the technology
I agree with
to
you there.
de-age everybody. But it was. But I'm a Dunkin' girly, so I like
Yeah.
that. And they needed more animals. I wanted more animal ads. I like the Budweiser ad with the,
Otherwise, there was nice.
with the horse and the like. I was like, it's fine. I cried.
I can see that.
It's very on brand for me.
Yeah. They were good. Not
I
memorable.
did like the anecdotal people that were having Super Bowl parties. They really liked at first the Coinbase ad was like the karaoke with the Backstreet Boys, but then they realized it was for Coinbase, and then everyone just booed. Anyway, well, don't boo us. We only have tasty live ads, but we have a great show for you today. A lot of good stuff is headed your way. I do not have a schedule.
I have a schedule for you if you like.
fine.
We got an option jive at 8:00, which is beautiful.
Little
That is
research
beautiful.
corner.
Yes.
Yes, okay.
Then we have the skinny on options, abstract applications as we do. Nothing says Monday like that, man.
For his Seahawks. right?
No, didn't we bet him? Didn't we?
No, Dr. Jim is
He owes us money too, doesn't he?
yeah, Dr. Jim is a Pats fan.
Yeah,
so.
that's his. I thought that was his first team, and then when the Pats got bad, he switched to the Dolphins.
Well, yeah. Oh, now I have it. Thank you.
Yeah.
So, skinny on options, abstract application, delta and theta impacts over time. So that's what Dr. Jim will be talking about. And then 9
And
o'clock.
he's got to give us $20 too.
Did we bet him? I don't
believe we did.
I don't know.
Oh,
We'll see.
but we'll
tough to
lie. If
lie
we didn't,
on
we'll lie and say we did.
Yeah.
And then 9 o'clock, market measure zero DTE breakdown, part of
Yes.
our zero DTE series.
A good one. A good one. Last week was one of the most volatile weeks we've had all year. So we're going to look at just volatility. We're going to look at some of the trades themselves. There was one trade that was a full loss. So it was our first full loss of the year
Okay.
on zero DT trade.
Slow down, girl. It's only
Yeah.
February.
Oh, I mean, it's been a couple weeks.
Slow your roll.
I know.
You expect to have more than one after
Sure.
this long. So
And then we got live from the trade desk at around 9:20. Quentin counting down the top trending tickers over at Tasty Trade. And we got Ryan in the house investigating all things crypto. But hey, in the meantime and in between time, do you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story,
today's
breaking news,
Breaking
coming across the wire. Our leading story, top story, jump in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It is February the 9th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Do you know what I did learn, though, that is fun? The couple during Bad Bunny's halftime, they actually got married.
I saw that.
So
Oh, I
it was
didn't know
a
that.
real wedding. So they had invited Bad Bunny to their wedding, but he was like, "Look, I can't do your wedding." He's like, "But you can come to the Super Bowl and get married during the show." And then they
good for
did it,
them.
and so it was a real wedding. Oh my god!
Very sweet. Very sweet.
I was like, "That's nice." Anyway, earnings, Mr. Bat.
Nah. Coke, CVS. You're not gonna be
that sucks.
interested
Yeah,
in
that's not
that.
good. Hey, we do have an interesting week ahead, though. We're going to get a just slightly delayed January jobs report this week. We're also going to get CPI inflation data release this week. The delayed January jobs report releases Wednesday, expecting 70,000 new jobs added, while unemployment looks to be holding steady at 4.4%. January CPI inflation data comes Friday. That's forecast to show 0.3% monthly increase and a 2.5% yearly rise in consumer prices. December retail sales report publishes Tuesday, and then earnings this week include Cisco, Coca-Cola, McDonald's, Ford, and Robinhood and Coinbase.
Yeah, that's later in the week. I mean, Hood
Yes.
is tomorrow after the close,
Sure.
I believe. So you have another day before you do anything there. And
Shopify.
Shopify.
McDonald's,
Coinbase is on the
yeah.
12th
Sure.
after the close.
Yeah, there's
Today's
a
only
couple.
the 9th. There's a couple.
Yeah.
A couple of things.
APP.
Yeah, you know me.
Yeah.
All right. Good.
Yeah, this stuff does it really even matter?
Ilya and Chris will have field day
will
with
give
it.
us the.
Yeah.
I don't know. We're back at 69.50. Nothing happened.
Violently
unchanged. Every single day. It's crazy.
Blah.
It really is.
Hey, the yen strengthened overnight as intervention risk trips up the Takashi trade. The Nikkei 225 saw a new record high as it looks like the new prime minister has a mandate with the lower house winning 2/3 of a majority of the votes. So she's going to be able to push through
landslide or
all the
something.
stuff. Yeah, all the stuff that she wants to do. But let's talk about currencies.
Yen's higher. Euro and pound were higher. I believe they both are. I can do that for you right now, /6E. They are both higher. So it means the dollar's a little bit weaker. New all-time high.
Dollar rallied last week, though.
Dollar
was
did rally
strong
last week.
Last week.
Yes.
Yeah. So
Giving up a little bit this morning. I mean, 720 ticks in the euro.
my
Mickey-
currency trading has been horrific. So
I was going to say, how is your
Yeah.
old Swiss franc?
well, that one has been a good one. I actually still have that, and
Hey.
I'm now giving back a lot.
Well, then that's the
of
one
what I
we'll
made.
talk about into perpetuity. If that's the
Yes,
only
that
one.
it was good for a while. Now it's bad. I've learned that you got to be out of these.
Yeah,
These are like-
hit it and leave.
Yeah, yes. These are like quick and you got to be out. Like I got some of these I've been holding for a month now and I'm like, this thing This is dead.
What about U.S. bonds?
What about U.S. bonds? Bonds 115. That's where they've been hanging out. Although they are giving up about 17 ticks, but they've been around 116, 114. That's where they've been.
They rallied last week, though.
They did rally last week. Finally rallied a little bit last week. Yep.
Oil looks seemingly dropped over the weekend as U.S. and Iran pledged to continue talks. It looks like oil prices fell Monday. Brent crude futures fell 49 cents or 72% to 67.56 a barrel. Let's talk about oil.
I mean, I would actually say that oil's quite a bid. I mean, as of late, I mean, it was in the high to mid 50s a month ago. Now it's in the low 60s, 63 and change. It's basically unchanged this morning. Good IV rank of 59 in there, higher end of its range. Going to have call skew in there. If you're looking for something, if you're a little bit more bearish on a trade, maybe some sort of ratio spread or something like that. We
have iron condor
risk.
There.
Yeah, iron condor in there. Yeah.
So.
Oil, I think for us option traders in play.
Yeah, volatility at 55 right now. So if you do OVX CGI, that's the VIX style volatility for crude oil. It's at 55. It's been in like the 30 to 35 handle. Is kind of the lower end of where volatility has been. So volatility is high there. If you don't have a position on there and you're looking for something a little different than equities,
get some.
Get some.
What about natty gas? Like brutal temperatures in New York over the weekend, and it was real windy and cold there. But what's natty gas doing?
Down 22 cents. That's 6.5%. That's a big move. I can't figure out nat gas, and I don't.
We have some short delta though.
Yes,
even in the money long.
It's a directional play. You got to trade it small. It's such a big product. It's like earnings every day in nat gas. Spreads don't move that much because there is so much volatility in there. 98 IV rank, not the best markets unless you go into the futures side of it. Again, 3.20 down 6%. You can't follow whether it's the news, the cold, or whatever. It just has a mind of its own.
Bitcoin bulls spot bottoming signals as longtime bears take victory laps. Crypto's been on a multi-month downturn, and that accelerated into a free fall last week as bulls were frantically grasping for technical signals. But the crypto market has just been all over the place. What do we do to start this week in crypto?
I mean, it got cut in half from its highs, which was only 6 months ago or something like that. Yeah, I mean, quickly cut in half from 120 and change to 60 and change. It's sitting just under 70,000. It got over 72 last night, down to 69,200 and change. I mean, it's the type of product you're usually long it or you're out of it. It's hard to get shorted unless you're trading the futures, and the futures are big, 5 coins. I don't know too many retail investors who are doing that. Although you did tell me last week that one of your friends who's been like a
he was riding me.
Right.
He was riding me.
So I figured that was probably close to the bottom. I should have loaded up a little bit more. Yeah. But I didn't. I didn't buy any in the 60s.
I mean, it looked good last night, and on Friday it was up like $6,000-$7,000. I mean, it was like 60 to basically 70.
70.
I mean,
without a downtick. Yeah.
So, but
it's
volatility's high there. I mean,
volatility is high.
And if you trade like a Coinbase or even Robinhood, like Hood.
Hood is definitely a pseudo crypto play.
Yeah, it was trading like in the
80s. In the 80s. Handle.
Yeah, but it was
82.
On Thursday, it got into like
Hood.
Traded at like 70-ish.
I know it got into the 70s. I don't think it got into the 60s. Let's see. I'll look at 77 and change. Yeah. 82 is where it closed. 85. It's actually up $3 for Hood, and coin is actually down $3. At least it was the last time I looked. Yeah, 162 and change. Maybe down 2.5 or so.
Yeah. So some volatility in those products.
Yes, definitely volatility in those products. Yep.
Well, here's something interesting. Just in time to create a new Super Bowl ad, Crypto.com made the priciest domain purchase in history. They bought AI.com for $70 million. The deal was paid entirely in cryptocurrency to an unknown seller. Imagine squatting on that like you had the domain rights to AI.com.
Good one.
It shatters all previous records. And I guess they debuted the site during the big game. I did not personally see the ad, but okay.
Yeah. I mean, there's only one, and they ain't making any more of them. So
AI.com.
Yeah,
Now owned by
.com. Good
crypto.com.
job out of you.
Yeah. For
Yeah.
70 million.
Yeah.
That's bonkers.
Yeah, that's a good one. So is that the highest price paid for?
For a domain, yeah.
Wow. I would expect, I guess 70 million is a lot. It's a big number.
It's a big number.
It's a
That
big
is a big number.
Big number.
Yeah. I wonder what they bought it for originally.
Yeah, I don't know.
Whoever had it.
Good vision.
Right.
Was that like a GoDaddy in like 2002?
His name's probably Anthony Ignatius or something like that. And he just took AI.com. Who knows?
Investors are turning to cheaper, smaller companies while reassessing how much risk they're willing to take to own volatile assets after the market whipsaws pounded some sectors and assets. It looks like people are turning away from tech stocks and funneling their cash into energy, materials, consumer staples, industrials, healthcare, financials. What is your favorite alternative sector right now that is not tech?
I mean, you got stocks like, have you looked at Pepsi?
Oh, it's through the.
Oh, I like that polar bear ad where they're making fun of the couple at the Coldplay commercial. It was funny. What? No? Okay.
I mean, I don't remember seeing that one, but it went from 150
Yeah, the
to
two polar
170.
bears. So it was like,
Yeah.
yeah, I saw. Yeah.
Yeah.
I mean, it's not like Cindy Crawford, but it was okay. Yeah, I get
Okay.
it. I get it.
All right.
But Pepsi, $170. Unbelievable. I don't think it's
And the
sustainable.
Dow, too. I mean, the Dow is a reflection.
Caterpillar. I mean, a lot of these.
Goldman
Yeah.
Sachs.
Yeah.
you know.
Yeah. This is when the dividend play.
Amgen. You don't have
Yes.
an Amgen in your portfolio?
No,
Come
I don't
on,
think
dude.
so. I don't.
So,
think
but
so.
is there any opportunity in like the small cap in something like a Russell, just like on a?
No, I think you can. I think you can hang back in tech. I mean, if you're looking to scoopy something, if this
Yeah,
market catches
I
a
agree.
bid, tech is going to be like a.
How do you look at Microsoft at 400 and say, I'm going to buy some Pepsi?
Yeah, you can't.
How do you do that? You know, Microsoft is down 25%. Pepsi's at new all-time highs. How do you do that?
I agree with you.
I don't know
agree
if
with
I
you.
have the-
Well said. Well said.
I don't know if I could do that.
Wall Street, top Wall Street analysts like these stocks for long-term growth potential. The latest earnings reports from major tech companies have revived investors' concerns about payoffs on elevated AI spending. But here are three stocks favored by some of Wall Street's top pros, the ones that are getting upgraded. iPhone maker Apple is this week's first pick. In a recent note, analysts reiterated a buy rating with a price target of $330. Also, MongoDB also got upgraded to an outperform rating and a price target of $380. And Western Digital, they also got upgraded to outperform with a price target of $285.
What were they saying about Apple last year?
That's what you want to know.
That was, because it's always at the top when they like come out with these things.
I know.
Yeah.
It's like last year was Apple's not fast enough with AI. The Apple's dead.
Yeah, but the iPhone 17 sales just kind of shut up a lot of the haters because they were like, okay, these numbers are legit. So, but of the three, who do you like? Apple, MongoDB, or Western Digital?
I mean, it's hard to take Apple again at all-time highs and Mongo, which is
And Apple's been the strongest. Like last week, Apple was up basically every day despite the volatility in the market.
from 240 to almost 280 without a downtick.
Good job, Apple.
It almost got looped into the Pepsi group.
Yes.
Yay.
Well, it's a dividend-paying
like-
stock,
yeah.
Apple now.
Yes,
It's
exactly.
become a.
Exactly.
I don't know, it's hard to
Value
take any
stock.
of them, but it's hard to take Apple here at all-time highs.
Yeah.
Just off all-time highs.
Yeah. Well, I mean, Western Digital is up like 5,000% in the last year. So it's like, I don't know if that's the one that I would pick out of this group, but yeah, I don't know.
I'm going to abstain. Can I take the under?
Yeah. I want to take Microsoft.
Yeah.
Well, tech AI spending may approach $700 billion this year. The mega caps announced major increases to CapEx for 2026, with the four hyperscalers now expecting a combined spending of close to $700 billion. But reaching those numbers is going to mean a big drop in free cash flow, maybe some more stock buybacks. I don't even know how they're going to finance this, but that's a big matzo ball that's just out there, $700 billion. And that's just like four companies. But that is your Microsoft, your Meta, your Amazon, your Google.
Add that in with a bunch of big name IPOs. I mean, there's going to be cash infusion into this market.
But where's it going to come from?
AI and the cloud.
Yeah, it's printed. The Fed prints it.
Don't ask for the devil's not in the detail. It's just it's coming.
Yeah, okay.
Yeah.
Cool.
I mean, these companies have a lot of cash.
No, I just mean from investors though. Like where is like so for you've got like trillions of dollars in IPOs that are going to come out. Like how are investors going to move in from where to?
That part, that's a good question. I mean, I think some of that is happening now, but I mean, where do you get $1 trillion just?
Well, I mean, Google alone is holding about $98 billion in cash.
No, that's for their investment. I mean,
Yeah.
like Anthropic, ChatGPT, when all those
SpaceX, OpenAI,
that money's got to come out of, or maybe I don't know. They always talk about cash on the sidelines. Maybe that's where it comes.
Did it come out of Bitcoin? Like where is it coming from?
Yeah,
I mean,
don't know if it's coming
there's
out of
nothing
Bitcoin.
left in Bitcoin. So
Right.
I think the crypto market cap has to be like under $1 trillion at this point.
Oh, for sure.
Anything to start the week in Meta, Microsoft, Amazon, or Google?
They were all a little bit. Oh, Meta's actually
Microsoft is up
3.
a couple. Meta's up a couple.
Oracle's up.
Oracle is up.
I'll get to that in a second. Yeah.
Yeah, Oracle.
$7, $8.
Yeah.
Yeah, I mean, I don't know. These stocks have all looked horrible. So
Yep.
who knows if this holds? The market, I mean, we were up like 25, 30 for most
Well,
of the night.
Friday was. I mean,
Friday was
the week. I mean, of to the upside. I mean,
we came in thinking it was going to be like a
we came
crash.
in on Friday thinking that we were going to be taking phone calls
Suckers.
to the
Yeah,
downside.
seriously.
Suckers.
How's your eye?
What?
How's your eye?
Oh, it's good.
Oh, good.
Good. I had to go to the eye doctor, just
Yeah.
my like yearly checkup or whatever. I will say my
You have to do one of these, like
no, I have to see a retina specialist because like whatever. But my eye doctor, he is so attractive. I've never seen this man in focus in my life, but he looks like a Disney prince.
Perfect for you.
Even blurry. He's just like I just don't know how
I can't see, Doc.
I can't talk good. Yeah, I can't talk good. And I was just like nope,
Omaha.
Nope. But anyway, it was good. NVIDIA shares ended the week on a high note, rising around 8% as Jensen Huang says that company's $660 billion CapEx build out is sustainable. So between the four companies, you have like $700 billion, but then NVIDIA itself was like, we're going to do $660 billion. What are these numbers?
They're huge.
You know, my wife has a knee doctor like that too. I always know when she's going to the knee doctor because she wears something nice. You wore something nice, right?
I always look nice.
I know, but a little extra something special,
Yeah,
right?
I always look nice.
NVIDIA 185, basically unchanged. It's
Huge
been
move on Friday.
huge move.
Huge move.
It
It
had
was up like $10.
6 days of downturns
Yeah.
and one
It's
day of
just been
upturn
shopping
brings
at
us.
185. 185 is like the price. I don't know. I worry about NVIDIA because it's kind of in the. It feels like it's in the Google realm where it's gotten to a price where.
$4.5 trillion.
Yeah, where that's like the
It's
ceiling.
Big app.
It's like-
But it seems just sort of just like not going anywhere for a while though. Like it wasn't
Yeah, you're
doing-
right. It hasn't gone anywhere since August. It's been $185.
Yeah.
185 straddle. Sell it until your hands bleed until further notice.
Yeah.
Don't worry about it if it gets down into the 170s. You'll be fine. Don't worry about it if it gets
buy that
into
dip.
to the 90s. Just 185.
A Friday bounce may have left some investors feeling better heading into the weekend, but a violent sell-off in the software space had Wall Street strategists trying to steady clients' nerves. Everyone's pretty much saying that this probably seems overdone, but software names got crushed for like an 8-day streak. We mentioned like Oracle had its worst 8-day run in decades. As we
I'm sure puts there. I
reset-
felt it.
As we reset for a new week, what are some maybe opportunities with like an Oracle? Cisco's going to have, I think, earnings this week, but in a Salesforce, ServiceNow, whatever.
Yeah, a lot of people are trading this IGV, which is like an iShares software sector ETF.
What is it? IG?
IG.
B?
It's down to like the lows that it had during the tariff tantrum.
Mm-hmm.
And
Tariff tantrum, did you call it?
Yeah, tariff tantrum.
Yeah, I know. It's
Yeah.
good. Yeah.
I think the biggest part of it is Microsoft. I think Microsoft is like 20 or 25%, but it includes,
She got Adobe down 23%, Shop down 30. I'm just reading from her slide here. Snow.
it's got all these
Palantir.
stocks in it, but We've got some long, I like the cyber stocks. I'm long CrowdStrike. We've got a little bit of long Delta and Oracle and CRM. Adobe, I haven't really been messing with. So the list here is it's Microsoft, Palantir, CRM, Oracle, Intuit, Adobe. Those are all in the IGV. So
Okay.
kind of this basket.
It's a better way to play it, maybe.
Yeah.
Okay.
Oracle gets Oracle just under 150, 149, up around $6 or $7. If it could just get into the 160 handle, I promise never to do anything stupid like sell puts.
Yeah, you took
again.
us
I
down.
promise. I
Took us
promise.
down. It's okay.
New sentiment coming out of the EU seems that more and more countries are looking to follow in Australia's lead and to ban social media for people under the age of 15 or 16. Germany is weighing the decision, as well as the Czech Republic, following a decision from Spain, which I announced in news last week. More and more EU companies, like I said, want to ban the use of social media by children. So now Spain, Greece, Britain, and France are also weighing tougher stances. What does this mean?
You got to watch out. I saw France is investing $30 million into AI. So we got to watch out.
That's nothing.
It might be. I know.
30 million?
Yeah, they had like this bit. It was all over like Twitter. Palmer Luckey was like roasting them. It was like 30 million.
It was like,
house
oh,
costs more than that.
Slow down. Oh no. Oh my God. But yeah, it's not. I mean, what are your thoughts on this stance?
Can this actually stick?
I mean, if it's the entire
You know.
EU,
Yeah, I know, but you can't police this.
I don't think you can, but you could try, I guess. I mean, I mean, as a parent, I would love to see it stick. I don't think it can stick, and I think it's silly, but I don't know. I mean, I'm optimistic, but I don't think practical application is going to come to fruition.
sure.
Yeah.
Well, we will see what happens. Goldman Sachs is tapping Anthropic's Claude to automate accounting and compliance roles. Embedded Anthropic engineers have spent 6 months at Goldman building autonomous systems for time-intensive, high-volume back office work. As someone who has to work with compliance sometimes in a very, I don't know, divisive basis.
Love-hate relationship.
Yes.
Yes, compliance. But if you could just automate that, like that's wild. Because you upload like, okay, here's all the rules for being a broker dealer or whatever financial space, and then technically,
Compliance
AI
won't let you do that though, because then it replaces compliance. So compliance is going to say that this isn't compliant.
No.
But yeah, Claude. I mean, who would have thought that Claude was the best AI out there?
You
You my
had it.
friend.
You
You
had
my
it.
friend. You my friend. Hey, some of my Taiwanese peeps just said that AI.com.
Yeah.
It really is the initials of the man who did it, and he was registered in 1993.
Oh,
wow.
Yeah, so
What a
waited a
time
long
to be
time.
alive. That's
what
crazy.
do you buy that for? Like
I don't have that.
A nickel. A
yeah,
nickel.
nickel.
I got to thank my friend Shark for that information. Yeah.
I mean,
what do you do?
Diamond handed that too.
What are you doing in Goldman Sachs?
Yeah. Goldman Sachs just continues to go higher, so buy every dip. I don't know what to tell you
Yeah,
there.
925 here, and I mean, it sold off a little bit into.
Yeah, it's
last week,
Yeah,
100 and something.
it had a 3-day sell-off
Marty trades Goldman
from all-time highs. Who does?
Marty.
Oh, Marty. Who comes
Marty
in
on the
here
desk?
from the
Goldman
trade desk.
Sachs,
He's a
yeah.
big Goldman. Yeah, because we have friends that are pretty high up in Goldman Sachs as kids from Rogers Park. Okay, not me Lord status, but kids from Rogers Park that did well. Run a lot of the Goldman Sachs here in Chicago.
Jack Dorsey's fintech Block, aka Square, aka XYZ, is considering cutting up to 10% of its workforce during annual performance reviews. Block didn't immediately confirm or deny the proposed claims, but could be cutting up 10% of staff. XYZ.
XYZ, horrible.
Yeah, it got
The
caught
company
up.
facilitates Bitcoin purchases.
Hasn't had a good week from around 65-ish down to around 55-ish, where it sits right now. Maybe it's up a couple of pennies this morning at 56 and change. IB rank of 57 is pretty good. I haven't looked at Block to trade it in quite some time. It has earnings February 26th. March options are okay. Good, not great.
It got caught up in both problems last week. Bitcoin and software. In both those buckets. So, I mean, it went from 70 to 55. And
gotcha.
it too is back at the tariff tantrum lows, near the tariff tantrum. Yes.
Maybe if you were watching the big game last night, you might have noticed that automakers largely sat out on the advertising sidelines during this year's Super Bowl amid broader uncertainty in the U.S. automotive industry. General Motors, Toyota, and Volkswagen were the only automakers that advertised during the game. Automakers accounted for 40% of Super Bowl ad minutes in 2012, but dropped all the way down to 7% in 2025.
GM's the only one that probably could afford it. I mean, the stock over a calendar year has gone from around $50 to $84. Ivy Rank's only 18, so it really is a directional play there. What do you think of the Volkswagen? Have you seen them on the road, the electric one that looks kind of retro-ish?
I saw it at the car show maybe 2 years ago when it was like more of a
car show this
concept.
weekend?
No, but I sent Gus and E. You
sent your minions?
Yeah, no, they love it. They are
Yeah.
gonna put out some content for the like. It's a young kid's game now, man.
Is that still a thing though? Like the
auto show?
Oh, man, I would
the
go-
auto show was amazing when I was a kid.
yeah,
We went, I feel like every year.
Yeah, and when I was a kid, my mom used to
Yeah.
take me, but I would love getting the patches and the decals
Yeah.
and the
Yeah.
stickers.
Do people still do that though? Like
Yeah, it's busy. I think so, and they've added some stuff, and there's test tracks and
Where was it?
interactive stuff. It's at McCormick Place,
Oh, it is?
and it's going through. I think the 15th or so, like it's running for like at least like almost 2 weeks. So it runs through this week and this weekend, I think. So, but yeah, I think the VW bus, it looks cool.
Yeah, a little retro-y.
Yeah.
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 I know.
Hey, Kroger, grocery
Kroger?
giant Kroger, plans to hire Greg Foran, who previously headed an airline, and Walmart as their new chief executive officer. If you care,
Well,
congratulations.
if he's responsible for the prices of some flights that are going on, because Kroger's going to catch itself a bid because if you've tried to fly anywhere these days, it's unbelievably expensive. But
Are you okay?
67's where
I know.
where it closed. 71, 72 is where it is right now. So it's up about $5 on this news.
Who cares about Kroger when you got Walmart, $1 trillion company? Have you looked at Costco?
Let's go back at 1,000, right? Or
Back at
close,
1,000.
close to it.
That's crazy.
But I mean, it's rallied to $150 in the long
Yeah, it started the year around 850. It's 1,000.
Yeah. And it was dead.
people
gonna split again.
like the new Nike Costco dunks.
Yeah.
Man. I don't know.
I think I got long Costco back in like November of last year when
I believe Vinny doesn't have you like camped out at the Costco
for what?
for the dunks.
Oh,
I don't think they've got this way.
I don't think they've.
all-
Yeah, I think it's
Not
all
all
been
the-
California, Oregon,
Right.
Nevada, or Arizona, or something.
right.
Yeah, it's all been on the west. Hey, Bojangles, the North Carolina
Jim's
fast
favorite.
food chain, makes their Michigan debut. They launched a location in Wyoming, Michigan. I've actually been to Wyoming, Michigan. It's near Grand Rapids. So it's Bojangles are headed into Yankee territory.
We're gonna have to tell Jim about this.
Yeah, it's the first
he's a big
Michigan
Bojangles
location.
guy.
It is part
is.
of the chain's expansion into new markets that also include openings in Texas, New York, New Jersey, Nevada, Ohio, and Louisiana. So
Bowberry biscuit.
gotta
makes
get
its way to
yourself a
Michigan.
Bowberry biscuit.
What else do they have? Do
They don't have anything else.
Is it
Just like it's
It's
all
not even
chicken.
the Bowberry biscuits.
Oh, it's chicken.
Yeah.
Yeah.
All right.
Yeah.
I haven't had it.
Eh.
You've had it?
Yeah.
Where'd you have it?
In an airport with Dr. Jim. I mean, and the Bowberry biscuit.
Not good.
I mean, it's fast food chicken and it's not Chick-fil-A.
Chicken fillet.
Yeah.
Yeah, but they're open on Sunday, so.
This is true. They're open on Sunday. That is true.
Hey, sad news to report and hard to watch, but on a torn ACL, Lindsey Vonn crashed as her right pole clipped a gate and ended up being airlifted off of the mountain by helicopter in her Olympic women's downhill run bonkers situation.
What
But
a badass.
props to
What
this
a badass.
photographer.
Right.
Props to this photographer for capturing this shot like right before
Yeah.
it happened. Obviously, the response to this is mixed, like she shouldn't have been doing this in the first place. And then others is like, well, what, a heroic thing. But she fractured her leg. It is now in stable condition. So
Crazy.
Just
Crazy.
Fish
I mean,
got to swim, man.
Yeah.
I mean, I get it. I mean, you train. I mean, think about the training that they're doing. I mean, it's unbelievable then not to be able to compete.
Flying like 80 miles an hour down. I mean,
I know.
I watched you do about 65 on the mountain that you were doing.
I was a little slow.
You realize how hard this is now. Yeah.
It is interesting. The alpine downhill skiers are equipped with airbags, like safety airbags. So it can tell the difference between you just getting some air and then you being in a crash. So I think her airbag did deploy, but obviously her injury was
It was a nasty crash.
to her lower leg. Yeah.
Scary.
Sad news. Wish her pleasant recovery. But for my viral video of the day, if you are just taking it to your recreational slopes, gotta be careful because if this guy is riding by, he might make fun of you. Watch this.
Oh God, I was scared of that. That's good. I had enough of this. I mean, like,
How did he get a trumpet onto the chairlift?
That's good. That's good. See, that's good fun right there. That's good fun.
That's
right
you
there.
gotta
That's
laugh.
good.
Yeah.
no, I had my girlfriend doing this
That's bad fun.
on my first run down the
Say it again.
Aspen.
What happened?
No, instead of somebody
Oh.
else making fun of me, it was my girlfriend that was.
Oh, she was doing it to you.
videotaping me and laughing at me. Yeah.
I'm gonna need a
giggle
copy of that video.
Yeah.
Oh, it's good.
Get
It's
a copy of
The
that.
giggle at the end
Yeah,
is
the
the one that
giggle at
makes
the
the
end
video.
is good.
Yes,
Yeah.
I agree.
Yeah.
What's coming up next?
Good job out of you. We're going to take a quick 90-second break. We're going to come back. We got confirm and send, and we're going to take a look at the market on this Monday, February 9th. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back. son, and you know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send, where we go to you, our viewers, and answer some emails. But first, let's take a look at the market. E-mini S&Ps down 10, the opposite of where they were last night. I believe they opened up around $10 higher, went to around $20 higher. You can see here they've had a good size $50 range up to $69.79, down to $69.20, and we are sitting right in the middle of that range, down 11 after the big day on Friday, erasing most of last week's movement. As you said before, $69.50, just a skosh underneath that. We really violently unchanged here. NASDAQ down 63. It too is the opposite of where it was last night. You can see here it got over 25,345 and change, about $100 off of its lows for the day. Down around the same, basically unchanged on the market. I think after Friday's big move in the market higher, you can see here that the NASDAQ is significantly underperforming even the E-mini S&Ps, which they have a high correlation with. NASDAQ would be more like down like here. The Russell has been the one that's been keeping us higher. The Russell's actually unchanged after yesterday's, Friday's big move. And the Dow up 60 and change.
Now at 50K. Get the 50K hats. Come on.
50,140. Where were you?
We got that on Friday.
Yeah, we got that on Friday is right, because we're unchanged, down $65 right now. Dow and the Russell has been the leader in the clubhouse to the upside. The E-mini S&Ps and the NASDAQ have been the lagger. Volatility, I can't believe it got into the 18 handle, 1805 last night on a thin market. You could see here how it really kind of collapsed exponentially, and I didn't trade them overnight either. I think trading overnight is, unless you really have some sort of conviction. I thought that was obviously volatility is mean reverting, but I didn't think we were going to see 18 handle. I was actually trying to think about doing something if volatility was down there this morning on the long side of volatility. Good little, especially if you have long delta in your portfolio, a good little kind of hedge to the long delta would be long volatility in the futures there. /VX, or the micros would be the one that most people would probably go to. Bonds are down 9, back over 115, 115.07, just a skosh off of their highs, which is 4 ticks from where we are right now. Pretty tight range. Again, bonds, not as violent as the market, but you are looking at basically a big wide 116, 114, and we're sitting right at 115.07. Bitcoin down around 1,200 or so. I'm looking at the futures, trading at 69. You can see they got up to 70, flirted with 73, 72.7, down to 68 and change where we are right now, about $500 off of the lows after catching a small little bid on Friday. I guess 10,000 is a big bid on Friday, but after making recent lows, kind of. What do you think about Bitcoin? Let me see here at 70. What are you doing?
I mean, it's just not in focus right now. I think it'll probably stay around here. I don't think it goes much lower. At least I hope not, because I'm long it. So I would like it to stay here, but it's just not. It's not the flavor.
What about Ethereum? Ethereum's getting whacked just as much, if not more. Smaller product, $2,000. Ethereum
doesn't have the attention.
Yeah, it doesn't have the attention. Oil down 30 cents to 63, but you can see here it's been on a nice little run. Good IV rank of 60 in oil. We talked a little bit about that before. The oil might be something that you might want to take a look at from a volatility point. Gold up $52. Gold is violently in the middle of its most recent move from 5,500 to 4,500, sitting at 5,000. Place your bets. Good IV rank of 64. GLD options, I wish they were better. GLD, when you take a look at it in March, where I think most people are going to be, you got dollar-wide markets in here, sometimes a little bit tighter than that, but a tough product to trade these days. Silver is a lot easier to trade, at least from SLV. SLV up $3.5%, up $2.67, back to 79. Not quite the middle of its range, right? From around 120 down to around 70 or so. So it's only sitting at 79. So silver's been an underperformer. The gold-silver ratio, which when silver was back at 120, was trading at $45. And when silver sold off, got into the 60s, got over 70. It's now sitting at 62. on the gold-silver ratio, 2 gold to 1 silver, depending on which way you want to be. Net gas down 25 cents. That's your biggest mover on a percentage basis, 7.5%. But again, much like other products, I think it's kind of a dead product to trade for retail investors. Some of the stocks that are higher, we mentioned Oracle, which was up $5 or $7. Coke and CVS for earnings. That's all I got, son. Even the S&P is making the lows that I've seen so far this morning, down 14.
How do you feel about this week? Last week I had the ick.
Yeah,
I don't know if I still have the ick.
Which, isn't it amazing? Like, we're higher and you don't have the ick. Well,
I think it's because they took the wind out of the Microsoft, all the software stocks getting murdered last week. Like, I feel like they took some of the
well, that's the great thing about the markets. It's subject to change, and you don't have to marry a position. I think with volatility at 19 and you sort of go in the 18 handle last night, if you get any kind of weakness in volatility, which is completely unchanged right now with the market, which is where I think it should be, watch volatility. If volatility gets weak, then maybe we catch a little bit of a bid. I'd be a little surprised if we were, 25 handles on either side of unchanged today. It has that feeling to me, just like it's going to rest. Yeah. What do you think? I mean, that's what I think. And I'd be pleasantly surprised if it goes either way. I reduced a lot of my positions that I was sucking wind on the way down, getting a little bit too long, hung in there, got out a little too early on some, captured a lot of others. Now I'm looking for market to give me opportunity. Right here, it's kind of like
volatility is the only thing that's been kind of weird to me. I mean, these 3 or 4 point intraday, like on Friday, vol was 20. We had a 22 handle.
Yeah, we're talking about /VX overnight. That's why we said let's get the hell in this off.
And that's the third time it's happened. We got on Sunday into the Monday face ripper. I mean, I don't know. I think we sit 69.50.
All right,
there.
See, maybe a 0-day trade today. Then quickly after the opening, we'll see what goes on.
Cool.
All right, let's get to it. Confirm and send, where we go to your viewer emails. When doing a pairs trade, how do you decide which side of the pair to buy and which to sell? Also, do you just do one contract of each?
So buying versus selling depends on if you want that spread to tighten or widen out. So, we've traded both sides of the gold-silver pair, but it depends on what kind of pair you're trading. In terms of how many contracts you do, it depends on the size of each of those products and the volatility. So you can volatility adjust the pairs trade. You got to size adjust it as well. So the typical ones that we do, gold and silver, so SIL, 1 contract of SIL to 2 contracts of MGC. I think the Russell NASDAQ is 3 to 2, roughly.
Yeah, close. You notionally and then vol adjust it.
Yeah.
I mean, the simple answer here is you want to buy the one you think is going to go higher and sell the one that you think relative to the other one is going to go lower. I mean, that's really what it comes down to. And typically doing these 1-to-1, unless the pair is more like you just explained, 3-to-2, and then you'd have to use more buying power. Maybe it's not a pair that you want to trade, right?
Yeah.
But futures already provide leverage. So going any more than 1-to-1, at 1-to-1, it's probably as big as what you're trading notionally to any other product that you're doing. So I'm not looking to go more than that. And I'm not even looking at it from an interesting, everyday trade. It's more when it hits extremes. If it's down near its, 100-year number,
100-year average?
100-year average, I'm thinking about maybe a little bit of reversion to the mean. It's going to go in the opposite direction for a while. But again, it's all subjective. So for me,
Gold, silver got a little big.
Gold, silver got a little big and too big very quickly.
Yeah. Very quickly.
Yep, agreed. Not for the faint of heart. Next one, please.
So what does it mean when someone says a trade is unwinding?
Yeah, I think I brought up this question or this saying because I talked about the gold silver trade and the metals just unwinding here a little bit. I mean, listen, it's all subjective.
Yeah. Market awareness.
It seemed when a product like when you get every pundit coming out and saying we don't have enough silver, we don't have enough gold, it's in everything, blah blah blah, all the BS, and it had a meme. Like if you were watching the market, like if you're asking this question, you're watching the show, you're watching the market, you watch silver double, triple, quadruple in a very short period of time, and we start talking about how it has like meme stock status these days. The unwind is when, everybody is done kind of buying and the hot potato is there and you're looking for the next person to give it to, and there is no next person, and it just moves exponentially. It gets cut in half in a weekend or a week. That's the unwind. How do you know when it's going to happen? You don't know when it's going to happen, but we did mention it a couple of days before it did. Listen, I didn't get short silver or gold massively into that. I actually got a little bit long in it.
We had some short.
We had some short delta, but we didn't sit with it from 120 to 60.
No.
I mean, we sat from 120 to 111, or something like that, or 111 to 98. I mean, or 105. I mean, you took a couple of dollars out of it. I got long gold on the way down a little bit, took a little bit of heat on it. Was lucky to get back into the middle of its range now. Now it's kind of more of a premium selling product for me. So, I mean, you knew it was going to happen. Nobody knows when it was going to happen.
Yeah.
That's
or the magnitude.
Or the magnitude of it. That's correct.
I think the other thing that you can kind of tie into this.
And anybody says does lies.
Of course.
Lies like a rook.
But the other thing you can tie into this is just volume, right? So like silver was the top traded SLV from an option perspective was trading more options than SPY. I mean, that's kind of like okay, this is probably at its peak, like that sort of thing. So when you see, stuff where volume is 3, 5, 10x what it normally is, that's kind of where you start to say, okay, maybe this is kind of over with.
Yes. I believe gold is going to trade above 7,500 at some point this year.
Coming from Vecchio?
I want to use futures to trade that because of their buying power efficiency. But I don't want my trade limited by March expiration. Is there anything wrong with buying the September contract /GC?
I mean, no. I guess you could do that. You could also look at like GLD and doing leap options or something like that. I know you want the leverage, so you're going to GC or MGC. I mean, there's not a problem with buying a further out contract. It's just not going to be as liquid. If you're looking at the options, they're probably not as tradable. I would say in gold right now, it's probably as liquid as it's ever been. So if you're looking at those options and they're pretty wide, if this move kind of settles in, those markets are going to get even wider. So that's one thing I would look out for. But I mean, no, you can go to September.
No, you could certainly go into /GCM6, which would be the one that you're looking at here. The one that we're trading right now is J6. The one that you would want is M6. You certainly could go in there. Markets are on the future going to be a little bit wider. I mean, they're basically $1 wide in the front month with a lot more liquidity. 65,000 contracts have already traded in the front month. And I know you have a longer time frame, but you're going to be holding this future for if you're doing the front month for like 45 days, and then the roll is half a tick. It's so easy to roll these futures.
You might as well just be in the front, most tradable.
Yeah, I think you'll lose more on slippage in the back month right now, having such wide markets. Let me take a look.
I was going to ask you, what do you think the delta of that is? I'm looking at the 136-day contract. What do you think the delta on 7?
What do you mean the delta?
On 7,500. Like, what do you think the probability of hitting that is?
I haven't looked. In what time frame?
I'm just looking 136 days out. It's our longest expiration.
It's probably 20 delta. 15 to 20 delta.
5 delta. 6 delta.
Is it really? Because I'm looking here. It's got a 7,500. I'm thinking 5,500. I'm sorry, because there's a $500. $500 expected move. It'd almost be 50-50. Yeah. No. Yeah. I'm looking at your future right now back in M6, and they're $1 wide too. I don't know. I guess you could do whatever one you want. I think it's so easy to roll it. I would probably trade the front.
You might as well just.
But you could do whatever you want. Yeah. The world is your oyster.
Agreed.
Sure. Go ahead. Yep. Next one, please.
In a 50K account, how many new trades per day would be appropriate?
Are these winning trades or losing trades?
Only winning trades.
Only winning trades, and do as many as you can.
Of course.
Listen, what's the time frame? If you're like now and you have just around 45 days, 39 to 40-ish, 5 days till the market monthly expiration, you probably should be putting on more than you would with 10 days from now or 2 weeks from now, where you'd be looking to probably trying to take some off. So it depends on the time frame. For me, a lot of times, like I'm in no man's land right now. If I was just starting to trade with this $50,000 account and volatility is just come off of its highs and market is violently unchanged, I would probably be a little bit more selective with my trades. If you would have told me, we did this 2-3 days ago when the market was kind of looking like it was imploding, I thought it was a lot more, volatility was high and you're looking to sell premium, I thought it would be a lot more aggressive. So it all depends on kind of the time frame. I think right now you could be a little bit selective, and if you're just starting this, a couple of trades. Just remember 1 to 3% of your total risk on any trade.
$200 on each trade.
Yep. So I would be a little bit selective here with volatility at 19.
You don't want to overdo it, though.
You don't want to overdo it.
In a 50K account, there's only so much.
The money gets used up pretty quickly.
Yes, especially if you're using futures or naked positions. It's gonna go pretty quickly. So I don't think you have to kind of tie yourself to a specific amount of trades. And it depends, to your point, are you doing like 45-day trades or 0-day trades?
Yes.
You don't have to get too crazy with that.
No, you don't. All right, my friend. Good questions from you. Good questions from the crowd here. We're going to take a quick 90-second break. All 4 indices are red ever so slightly. The NASDAQ is the leader in the clubhouse with the E-mini S&P to the downside. Russell and the Dow.
I'll get a little bit.
Vol percolating a little bit, 1925. We'll take a quick 90-second break and come back. We've got more Tasty Live after this. We've got an option jive next, and the opening bell you're not going to want to miss.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number, and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world. and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option. Jive. Nicky, we are back, son, and that's right. It is time for an option jive. You mean the S&P is exactly where they were when we left you just about 90 seconds ago, down 16 and change. Go!
Cool, let's do it.
Option jive research corner.
Research corner, recapping last week. A lot happened last week.
Yeah, big week.
Yeah, for being violently unchanged.
The Dow, I like that for the first one. Above 50,000 for the first.
CNBC had the hats.
Did they?
They had the hats ready. The people on the floor had the hats.
Who did?
Like when they would go to somebody on the floor, they would have the hats. Because they have them all.
They did that again?
Yeah.
Good for them. Stay true to their content. That's good. Yeah. All right, 50,000 for the Dow.
Yeah, so the Dow closed above 50,000 for the first time following the tech-led drawdown earlier in the week. Kind of amazing that you had the Dow at highs and then the NASDAQ looked like duty.
Yeah,
whole time.
Yeah. It's like somebody picks up the torch and continues the rally right now. That's what it seems like, just a little bit of a rotation back and forth. I mean, the Dow 30 stocks leading the clubhouse here makes for a shaky ground, in my opinion.
For sure.
Rather have the NASDAQ or even the S&Ps. Go ahead.
The other big story, obviously, Bitcoin. So this was a huge liquidity shock. You had a huge move in Bitcoin. I mean, what did we start the week at?
Oh, in
90-ish?
In Bitcoin?
I guess we started the year at 93, 94-ish. So we've had about a 30, 40% drawdown.
Yeah, the year, January 2nd high was just under 92. January 2nd. Went a little bit higher after that, but yes, you're right, down to 60 or so. It's been in a free fall.
Couple things to look for coming this week. On Tuesday, you got retail sales. Wednesday, you have the jobs report. Friday, you have CPI and core CPI. I don't know if those really matter at this point.
Not to me, but they will to some. It doesn't matter to me, but again, to some it'll be very important. So anything that brings volatility contraction or volatility expansion to the market, and these do. We've done the research. Like, I would say I don't care about anything that's coming out, but when you have these numbers come out, they usually do support volatility, and that brings opportunity. Yeah. Opportunity brings trades. Trades hopefully bring money. That's what I'm
for sure.
So I'm excited for it.
In terms of performance, violently unchanged has been the flavor of the week. So we had another week where the S&P was basically unchanged, but it definitely had a lot of big movement underneath the surface. Single name volatility has been way higher than equity volatility. When you look at some of these stocks like your Microsoft, your ServiceNow, your Shopify, these stocks are moving 30, 40%, while the markets are basically unchanged here. NASDAQ was the weakest of the group, down 2%. You had the Russell and the Dow keeping markets afloat here. Obviously, the Dow, kind of the story of the week, being the strongest of the group, up 2.5% on the week. But it's been flip-floppy, dispersion. Like all the phrases have been used this year so far. I mean, we've gone pretty much nowhere for the whole year with big moves underneath the surface.
Exactly. And the other thing you can take from this is the NASDAQ being the weakest of the group. It doesn't have a green and a red or a red and a green. It's just red.
Do you like that though? Like, is that a bullish indicator for you that the NASDAQ down 2% and the market has gone basically nowhere? It seems like that's a good thing. It's like everything else catching up and kind of holding the weight a little bit. We talked about RSP, which is the equal weighted S&P 500 ETF, hit all-time highs last week. Is that like good? Is that bullish?
Going nowhere and having the NASDAQ weak is bullish because you would think that you would get a little bit rotation back into them and they would catch a little bit of a bid. So I'll revise my volatility, watch volatility and the NASDAQ. So if NASDAQ starts catching a bid while volatility contracts, then you might get yourself a little bit more movement to the upside. Next one, please.
So looking ahead, so we got basically the same thing. I mean, we've started each week with a 19 vol. We've had a 20 print at least one time each week so far in 2026. So got $111 expected move, about 1.6%, and pretty low VIX. VIX at 1861 right now.
So you know what that means to me? It means that I'm not getting paid on the premium that I'm selling, and I'm getting paid on the time. Which means if we get a day like what I think might happen today, where we have an inside move, 25 handles one way or the other, the volatility will come in quite nicely on your existing positions, even if it doesn't come in on /VX and some of the others. That's the way I look at this slide.
Need to get bailed out on a couple.
Need to get bailed out. Yep.
Delta wise.
Excellent.
In terms of IVR, so you've had volatility contract a little bit across the board here. Bond volatility has come in. You've got gold and silver volatility, which has come in nicely. A lot of those we were selling like 1 to 2 or 3 strangles and SLV and gold in terms of contracts. Those have been awesome. And
they've been money.
With the bounce today, it's going to be even better.
Yes.
That volatility has come in significantly. Crude volatility still high. I know it's come down a little bit, but crude is one that's had some relatively sticky volatility there. Natty gas as well, volatility coming in, but still at relatively high IV ranks there. Bitcoin volatility.
Yeah, that's 85%. It's down, but it's not down 85%. It's just down to 85 from 100 plus.
Yes. And then Bitcoin volatility, if you're looking at like IBIT, Coin, Hood, all have pretty high implied volatility. So that has definitely increased over the last week.
Yeah, and they've been catching this volatility like on an IBIT and everything on the way down, which is a little bit unusual.
Change.
So if you were kind of bullish or still bullish now, I mean, I know IBIT is $38 or $39, and I know it got down to around 36 or 37, but there's some premium to be sold in IBIT, especially if you're a little bit bullish. Buy stocks I'll call, some sort of Jade Lizard, something like that. If you're bullish in there, this call skew, take advantage of it.
I, by default, have to be a diamond hands at this point because I'm just so underwater that's the only way I can get bailed out at this point.
It's a horrible feeling.
Yeah, it
usually takes months.
Stinks. It stinks.
You're welcome.
Biggest movers last week. I mean, to the upside, this is not a list that you typically see. You have 3M, Bristol Myers in there, Amgen, Pepsi up 11%. I mean, these are...
More interesting to me is Amazon down 12, Oracle down 13%, the CRM, Qualcomm down 9%. I think looking to the red side is easier to find something to do than looking at the green side here in some of these stocks that are up there. They're the ones that are kind of
tells you the story of last week, though.
Yes, it does.
I a couple of those on the top. Triple M, Amgen, Pepsi. I think those are all Dow stocks. Is Pepsi in the Dow?
Ooh.
Coke is, I think. Either?
I don't.
Those feel like Dow stocks.
Let's see. Upside. Dow Jones Industrial. Here you go, son. What do you want to know?
Pepsi. Is Pepsi in there?
LMNOP. No, Pepsi is not. Coke is.
Okay, there you go.
KO definitely is.
I knew one.
But Pepsi is not. Sorry.
So we got a VIX spike to 23 intraday, the highest level since last November. Average daily realized volatility reached 1.48% despite going absolutely nowhere.
Yes.
The entire week, which, I guess sort of a surprise. I don't know.
As a look back, I mean, it's looking at the left side of the chart. I didn't think it was going to happen.
I didn't think we would be back at just off of 7,000. I thought we would at least stay down there for a little bit.
Agreed.
Not so much.
Agreed. Next one, please. That's the great thing about the market. It always provides something that you don't expect. And then the other side of that is, what are you going to do about it? Like, you have to say to yourself, all right, well, I didn't expect this. What am I going to do about it? So if you didn't expect it, then do something about it.
Mm-hmm. So the Dow performed exceptionally well during the last week's swing, reaching a new all-time high on Friday while other indices lagged, especially the NASDAQ. That NASDAQ Russell, NASDAQ Dow pair finally worked.
Finally worked.
They waited years for that, and it worked last week.
That is correct. And good on you?
No, we didn't. I know.
I
was on the other side of that.
I know, me too. Good thing to know. I don't know what you can do about it. Doesn't seem to affect anyone one way or the other. The Dow, DIA, I know in Europe they trade a lot of it, believe it or not. For us here, DIA markets aren't that great. Dow 30 stocks are not as interesting or as volatile, I guess is what I should say.
We did scalp the micros before.
You did.
For a couple
you
points.
got in that all
before
by
the face
yourself.
ripper.
Yes. So good on you. And you from the short side too.
Yeah. Took like.
If you ever learn to
50,
buy something, you'll be unstoppable.
I know.
Next one, please.
So silver was only down 0.1% over the last week, but realized volatility was insane.
Nobody had that on their square pool.
No.
Unchanged for the week.
No. Huge moves there. Do you think that move is done? You think we stay here at like 70 to 80? Is that the new spot? Gold at 5,000, maybe you get like a 4,800 to 5,000 range kind of thing.
Maybe for the day.
Maybe for the day.
Yeah, maybe for the day.
I don't think these moves are
I don't think
done
it's over.
Yeah.
So volatility. I mean, no. It's volatility in silver, 84, 85. I mean, it's telling you it's going to move, and that's a great thing right there. I mean, volatility surging 7%. If you haven't been trading these products and you're looking to do something, you on the option side,
you still have time. You haven't missed anything.
Yes,
Volatility is still.
You haven't missed a darn thing. Nope.
Yeah. Getting out to crypto here. So it was an absolute bloodbath in crypto. So you had February 5th was the crash, 14.8% historical volatility near the 95th percentile. So we were down 16% on the week. It was the worst. It was in the worst 5% of its history. So you've had some huge moves here. Averaged about 8.4% daily volatility, far above the 10-year average of 3.5%. And that's percentage moves. So 8.5% percentage move is a big move. Crypto just getting absolutely hammered all week.
So if you've been a hater and you had FOMO,
there's a little chance to nibble.
Maybe you throw a C note at it. You know what I mean? See what's going on there. You could be one of the cool kids too.
Mm-hmm.
If you've been holding the bag with diamond hands, I don't think you do a thing. I mean, what are you gonna do here? I mean, if you had that personality where you've been holding it from 20,000 to 120,000 back to 60, you're probably looking to nibble.
Yeah.
I don't know. I mean, it's probably worth an opportunity shot here at some point if you've been late to the game.
Mm-hmm.
I don't know. I think you'll have time to manage a winner if you bought some here. I don't know. I mean, nobody knows the future, but it's certainly a lot more interesting here than it was, double this price.
Yeah, for sure. Yeah. We got bailed out on our MET position on Friday, which was nice.
Yeah.
Yeah.
Next one, please.
So for earnings, couple big moves. You had Enphase, MSTR, SMCI, and Eli Lilly to the upside. On the downside, I don't even know why we include Snap there. It seems to go down every single day. But AMD, big move there. PayPal, which is another dog. I think I've permanently removed PayPal from my list of tradable symbols. That stock stinks.
Yeah, and even the stocks that went higher didn't have great markets in them. I mean, maybe MSTR you could have traded, but that was about it. And MSTR was down on Sunday.
It was down like $50 into earnings. But that was when we hit. It was below their $76,000 basis. Everybody was talking about it blowing up.
Next one, please. I can't believe any of that stuff.
My favorite slide. Look at this. So 50% winners, 50% losers for earnings. Average return 0%. So it comes in like this every single quarter. It's basically a 50-50 shot on any sort of earnings trade. When you net it all out, the average returns are basically nothing. So the sentiment for earnings trades depends on which ones you're in.
Yes.
So if you were long Delta into Amazon, you thought every move for earnings was a huge move to the downside. That's just not the case. It's all
subject to your experience, right?
The experience.
I never traded earnings as a floor trader. Never traded earnings as a retail investor. Got suckered in by somebody else to start trading earnings, and then a few years ago decided that I was going to go back to what I knew, which is that earnings are really just a 50-50 shot on
keep them small
direction. Keep it small if you're going to do anything, or abstain and post earnings. Like for me, earnings trades make for good post earnings trades. Like I like trading post earnings on stocks. Some of them work, some of them don't, but it's a lot more like trading normally than waiting for earnings.
For sure.
Next one, please.
So this week we're kind of at the end of earnings season. You got a couple names in there. You got Lyft, Datadog, McDonald's, Shopify. We have a position in Shopify, a little bit of long delta, bought the dip there. Cisco, you got Crocs, Coinbase, DraftKings. A couple names this week, but definitely towards the end of the earnings season here.
That's correct. Let's take a quick 90-second break. We'll come back. Even the S&P is down 18. NASDAQ down 94. That's your weakest of the group. Russell down 4. And the Dow down 120 and change. Volatility massively unched right now at 1915. We'll be back in 90 seconds. We got more Tasty Live after this.
Violently unchanged.
Violently unched.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So why are we all doing all the things that we do inside of the active trading space? Simple, to make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're gonna break down all the details of each one of those keys. So I'll see you inside.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back. You know what that means. The opening bell is imminent, about a minute and a half. Even the S&P is sitting down 17. I think volatility is actually the
tell today.
Yeah, I think it's going to do the opposite of what it did on Sunday night when it rallied up to, last Sunday night I'm talking about, when it rallied up to
crush.
Yeah. And I think we'll see. Bonds are down 8 ticks. Bitcoin is down about 1,000, hanging in there. Gold, I haven't mentioned gold and silver. Gold up $65, just about $20 off its highs. Silver on a percentage basis up much more than that, 4%, $3 to just under 80. But silver's kind of been underperforming the gold move so far. Both have good high IV rank in them, and the gold-silver ratio, which I think is in no man's land for us right now, is 62 and change.
It got to 72 on Friday.
It did get to
towards the end of the day.
It's a $10,000 move in the small
ones,
micro futures, not SI, which I just showed you. SIM, the small ones, or SIL, sorry, the small ones. Well, the opening bell is set to happen here in about 40 seconds. You got
turn on the machines.
Turn those machines back on. Oracle, which has been higher, it's been kind of a dog, is up $6 right now. We'll see how it holds for the rest of the day. Coke, CVS have earnings this morning. Well, tomorrow. This morning into tomorrow, so you can do something there. Well, there's your opening bell, my friend. Violently unchanged after a huge move on Friday. Let's see what's moving this market. Kind of has an eerie, complacent feel to it in my eyes. MU to the downside, down about 18. SanDisk down 14. Crowd. Oh, HIMS. Here's one you could talk about. Down $5. That's a 22% move on top of a lot of downward movement in HIMS. It seems like all the bad news is out in HIMS. It has earnings February 23rd with 39 days to go and high implied volatility. These puts are pricing like HIMS is going out of business here. What do you think about HIMS? I know they lost.
Yeah, they something with Wegovy, or they got for
having a pill. Yeah. Might be something to do later today and there. Even the S&P is trading about as low as I've seen them all morning, down 24, volatility up 11 cents. Google is down around $4.50. Coin down $4. CRM down $5. ARM, which had a big move yesterday, down $3. On the upside, you got Lilly up 33, AppLovin up around 18, Costco over 1,000, 1,006, up $5 and change, silver up 2 and change. Roblox catching a little bit of a bid, you big stud.
You had a scratch on that trade finally?
I'm going to take a look right now. Roblox up $3.
I closed out of one of the gold strangles. So we had the short puts, and I've been selling more calls to puts. And I mean, into the move today, you got a little bit of the move that I needed delta wise, but you're also getting a nice vol contraction there. So I just closed out. I took some of the size off. I still have the trade on, so.
I don't blame you. I think you probably should.
Yeah, and I can probably do that. Do I still have that in silver? And then I bought the dip in Robinhood last week. That was a call diagonal spread. I closed out of that. That too is kind of taking off a little bit of size. Earnings in the middle of this week, I believe, on the 10th.
Yep. You're correct.
So I have in the money short puts there just because the move has been so violent to the downside.
What's Hood doing into this move here? It's up like $1.50 or so in Hood. Good IV rank of 49, and you closed your goal too, right?
Mm-hmm.
Don't blame you. Good job out of you. 2 cleanup trades, right? Cleanup on aisle 7.
I actually think I'm going to roll these silver puts that I have. So I had some of my position in February. I had the 70 puts in February. You got a $3 move this morning, 73 and change. Those puts, I mean, it ended up working out very well, but I rolled them to the 65 strike. So now I'm wrapped around my puts are kind of like net about 70-ish, and I'm short the 90 and 95 calls on the upside. So now I'm all in March. And this one is equal weighted. Maybe you add a couple calls against it.
Oh, beautiful.
Because my delta there is what?
See what you can do. I have no problem with that.
25-ish.
Yes.
Should we sell like an extra? You want to do it like 1 to 2?
Sure.
Puts and calls.
Sure.
Just to give us a little bit.
I have no
of short
problem with
delta.
that. Yeah.
All right. So I'm going to sell out the 95 strike calls, 275-ish.
Okay.
Into this rally.
Yep. I have no problem with that. Good job out of you.
All right, so we have a little bit of short delta in silver. We're trading SLV instead of the futures.
Makes you a little bit smaller, right? And probably the intelligent thing to do.
And GLD, we're short delta, but it's upside delta.
Understood.
Like on calls.
Yep. Good job out of you.
What else do we? I think we should probably take off some of this. We bought the dip in NVIDIA as well, so.
Even the S&P is down 11 now. NVIDIA up $2, 187. Good little scoopy there.
Yeah. What else do we have here?
You're really just looking to clean up.
TLT close last week.
Say again?
Missed out on your TLT close last week.
Yeah, trade up to around. I bought it at the stupid at like 39. It traded up to about a $1.05 or $7 or so. It's now trading at 80. I'm trying to make $1 in there. I'm going to make on $300 worth of risk. I'm going to make a full buck, 33% on that. That's at least what I'm trying to do. We'll see how it works out. So far, no bueno. I mean, it's a little bit winner, not that great. What are you doing here in your cues?
It was a 1x2. We did a crab trade.
Very nice.
Into the rally. Took like $100 out of that.
Very nice. Why not?
Why not?
Good job.
You got vol coming in, so it's like,
You do have vol coming in, /VX in by 4 cents, even the S&P's 14. You want to do a little something in SPX?
SPX, yeah.
Let's look at what the even the S&P expected move for the day, 34. Now, remember last week it was in the 40s and 50s, so it's come in a little bit. So my take on the market is kind of being reflected on what volatility is reflecting here too. You want to do our $15 wide one?
Yeah, let's do it at the 20 delta.
Somewhere around, if you go to the put side, you want to do the 90.75. And if you want to go to the upside, I'm just going right to the 20 delta. The 70.85 looks like it's trading for around 480. Put it up on the screen. That's the 69.7. You're a little bit closer on the call side than the put side. You're getting about maybe you can move the puts up a little bit if you wanted to. It's entirely up to you.
Let's do it, Rowdy. You got to.
Oh, okay, okay.
I mean, come on.
All right,
what do you want from me?
I'm very sorry.
I need you to place the trade so I can blame you if it doesn't work.
All right. I'm going to get there right now. I'm so sorry. Let me do this for you. 40. I am unchanged and nothing at the moment.
Right. Do we close out of this natty gas position we have? Long put spread?
Sure, why not? Net gas down 260. It's about 5 cents off of its lows, but sure, why not? Even the S&P's down 11. That is that's me and ES getting filled.
Oh, you did ES and not...
I made a mistake. I'm so sorry.
I can't leave you to do anything. I mean, you had one job. You just had to do the SPX trade.
It'll be a little bit smaller. We'll just leave it on. The results will be the same.
Should we do SPX as well?
The money will
double
be different.
dip?
No.
Don't. You want to close the ES and then I'll put the SPX on?
Okay.
Just scratch it.
Yes, sir. Yes, sir, Senator.
All right, so we're looking at the 68.90, 68.75, 69.55, 69.70. It trades at like $5 and change.
So sorry about that. It was my mistake.
No, that's okay. I'm just giving you a hard time. Gotta have thick skin, Dad. Come on. 510.
Beautiful.
And we'll put an order. What have we been taking? Like 75 cents?
Sure. Why not?
All right. I'm going to route that too. So that'll be at 4:35. We're going to try and close this out.
Awesome.
And we got our 0-day segment later for market measure.
Very good. Yeah. Even the S&P is catching a little bit of a bid, down 5 or 6. NASDAQ down 75, Russell down 9, and the Dow down 100. Volatility in by 19 cents. You know, I got to start my Monday. Nothing says Monday like Dr. Jim and the Skinny on Options abstract applications. Immediately following these messages, we'll bring in Dr. Jim. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this man. Nothing says Monday like Dr. Jim of Skinny and Options Abstract Applications. What do you have to say for yourself in the Super Bowl, Dr. Jim?
Man, I mean, guys, listen, just go back. Go back to day one. I've been telling you guys about that Seahawks defense from the very beginning.
No.
Dude, ferocious, bro. Just pain. Just pain from start to finish. And so I called it, which is not super surprising. And so there you go. That's how you do it.
Of course you did. Of course you did. You know, everybody has Venmo these days, so make sure you pay up.
I lost money to Tom Sosnoff. Is there anything worse? Is there anything worse than losing money to Tom Sosnoff? Like when you have to start your work week and you know that you have a debit balance with Tom Sosnoff?
Nothing worse. We don't allow him in the squares pool anymore because him and Scott have won that too many times.
Yeah, that's true.
Yeah.
That's true.
Oh, that's too funny. That's too funny.
Did you enjoy the game?
Yeah, I mean, it was fine. I mean, for Super Bowls, it was obviously pretty boring.
Yeah.
And I really
I agree
felt
too.
like, I mean, commercial wise, I mean, 35% of it was kind of AI slop driven. You could kind of tell. I mean, it was pretty obvious in my opinion.
Did you have a favorite?
Yeah. Oh, definitely, dude. Definitely. The best commercial, in my opinion, was the Guy Fieri commercial. Oh, dude, that was the Bosch commercial. Oh man, that was strong, dude. Because we have a Bosch dishwasher, and it's changed my life.
I got one too. It's a good dishwasher. I've never really thought of dishwashers.
What are you doing with a French dishwasher? Seriously, what kind of class are you trying to get? Okay.
No, I understand, dude. Like, I mean,
who are you? Okay, I mean, you're a week away from going down to the river and washing your dishes. I mean, who are we kidding?
No, man, not at all, not at all. And the Bosch dishwasher is so strong. Like, I didn't choose it; it chose me. Like, it selected me, and it's been a match made in heaven. We've had it for like 5 years. It's been amazing. But the Guy Fieri commercial was my number one. What do you guys got? Give me number one commercials.
I like the tight end one, the prostate cancer. I thought that was.
I thought the tight end one was good.
That was good with all the.
I liked William Shat.
Tony Gonzalez in there, like all the old tight ends.
Yeah, I liked William Shat. I like that one.
Yeah, that wasn't bad. Yeah, that wasn't bad. The first ones though, like the first couple commercial breaks were very lackluster. Yeah. Like the decent ones didn't come out until like third, fourth, fifth round.
Yeah.
You know?
Yeah. I'll give you that.
Yeah. And so it is kind of funny this morning when I was listening to you guys on the opening bell, and Tony messed up.
My
messed
peeps are
up the
saying
SPX
Bosch
trade.
is German. It's not French.
It is. I was thinking Fisher Pickel. I'm so sorry. Because I had
Patel.
Yeah, I had a Fisher Pickel. I believe it's French. It was horrible. It was horrible. Not because it was French, but just because it was small.
Do they make them anymore?
I believe so. I don't know.
Okay.
I don't know.
Okay. All right. Very.
Whatever happened with the fence? We never got a fence update.
Dude, let me tell you something.
From your guy that's working out on the fence.
If you guys got an extra 11 minutes, I'll tell you all about my fence. Okay. And so my fence, I get compliments from people walking through the neighborhood, just random passerby.
So it's finished.
I get people driving down the road, and they actually stop and they alter their schedules, their daily schedules, to come and tell me how good my fence looks. And so it is. I mean, it is sturdy. It's aesthetically pleasing. Like, yeah, sure, it kind of bends and bows, but you can't really see those parts from the street. It's unbelievable. It is one of the best pieces of construction that I've ever been a part of.
Under or over cost? How did that work out with the one-man team?
Yeah, it wasn't really. It was kind of neither, because I had my boy do it. And we just kind of, we cracked back some ghosts, and we figured out. I'm like, hey man, just let me know where we're at. It's whatever it needs to be. He was kind of between jobs, and so I was like, hey man, like, work as long or as short as you want to. It's all good. So it was kind of neither.
All right, if that's your story, you're sticking to it. I'll let you have it.
That's how I treat my people, Tony Batista. Isn't that how you treat your people?
Hey.
Like in the Italian terrazzo floor inner circle, like you treat them the same way, right?
Dr. Jim, be nice to people on the way up, because it's the same son of a bitches on the way down. And I've been up and I've been down.
That's what I'm saying, dude.
So
that's 100% what I'm saying.
Yeah, 100%. I agree with you.
Yeah.
Yep.
That's right. That's right.
Yep.
All right. So speaking of up and down, back and forth, man, let's do some finance. Let's do
it. I'm ready.
I'm ready, man. So this is something that didn't really dawn on me it was several years into like kind of actively trading. And when I finally saw it, I'm like, wow, this is kind of an important piece to the puzzle, I think, because this is one of those things that, in my opinion, you don't really see or recognize until you're actually in the arena, like doing the thing. Which, I mean, we can all obviously, we all agree on that. It's very different listening to a podcast or watching a YouTube video, whatever, and then you're actually in it and you have live trades and you're seeing how they react.
Yeah.
Oh, it's completely different. Yeah,
completely different. I agree with you.
Yeah. So delta and theta, the impacts over time. I think this is going to help some traders out there kind of really understand how we use these Greeks, what to expect from these Greeks, and kind of how to move forward. So, Beth, go ahead and hit us here on the introductory slide. So the Black-Scholes option pricing model sets the stage for the lion's share of the quantitative analysis that we might do for a given position or even our entire portfolios. And without question, the two Greeks that we lean on the most are delta and theta that output from the model. But how these metrics move on a daily basis and even their reliability over the long term couldn't be more different. This is kind of like, the Patriots offensive line and the Seahawks offensive line. Right, Nick, it's like your boy Will Campbell. Like you were telling Tony this morning, he's got one job to do, and he couldn't do it.
Oh, the memes were so good. They gave
one job.
They gave him like little T-Rex hands.
Yeah.
He got roasted the entire game.
He got roasted the entire game.
Didn't he get roasted? Didn't he get roasted all season?
Pretty much.
Pretty much. Yeah.
Yeah. And he was like he was like their number 4 pick, right?
Yeah. Your Pats didn't look good.
I'm just saying that, my Seahawks came to play. That's all I'm saying. And I tried to tell you guys that several weeks ago. But he looks, is it my eyes that are deceiving me in my old age? He looks pretty small for a left tackle. Is he not pretty small for a left tackle?
I don't know about that. These are big humans.
Yeah.
In general. I don't know. Comparative wise.
Normally, right-handed quarterback, your left tackle, like you're putting a 380-pound
behemoth. It's the blind side, dude.
Yeah, it's the blind side.
I know, man.
He just couldn't pick up that blitz. I don't know what it was. He just they did the same play.
Is he even cracking 3 bills? Like, I don't know, man.
Yeah, I don't know.
It looks a little, Anyway, we'll be back next year. So I'm not worried
Dr.
about it.
Jim, Nick and I want a good-sized square pool. Do you want us to help you with some of the losses that you have in?
Well, I'll tell you what you could help me with. So my boy that did my fence, he's a little slow on the staining process. If you want to send me a little cash to get this bad boy stained,
that is definitely
awesome.
That is going over cost. The staining has to be a one-man staining job. That's got to take a couple weeks at least.
So what? No.
Who'd you hire?
He'll
Huck
not-
Oh.
Finn?
Yeah.
No, he's gonna knock this out in 5 hours, man. Are you kidding me? No. So what do you guys think it's gonna cost me to stain this fence? So we've got, it's hard to. I have a very normal house, right?
Why are you
1,500 square
staining
feet.
it? Why don't you just leave it cedar and let it, weather?
I don't know. I don't know. I think
stain
it'll
it.
look a lot better.
Stain it all the time.
What do you guys think the cost is going to be on the stain?
I don't know.
Out the door, product and labor.
That's just.
I've never done a fence. This is new for me. You had to do your fence.
Yeah, but I didn't stain it. I just let it weather. I don't know, Dr. Jim. It's the long term. It's the long term cost here that's going to get you. I don't know how much.
So how often you think I got to restain this bad boy?
Once a year. I'm just kidding.
No.
I'm just kidding.
Okay.
No, you won't probably have to stain it ever, to be honest with you. It'll probably hang in there for 8 to 10 years.
Oh, perfect. Okay.
Yeah.
So the cost out
So
the
it's
door
worth
on
it.
the stain, it's going to be like $700. That's product and
That's labor too? What is it?
Oh yeah.
Oh my God.
Yeah.
He's
he's gonna knock this thing out in like 4 hours, man. It took him 3.5 weeks to do the fence, but he's gonna knock out.
Yeah,
this
this part he'll be really quick with. Yeah, totally,
Oh, yeah.
definitely.
That's what he's told me. He's like,
Yeah.
man, I'm gonna knock this out. Yeah, he's my guy.
Perfect.
Anyway, all right, okay. So Delta and Theta, stage is set. Fence is gonna get stained. Yeah, if you guys want to send some cash my way, I would really appreciate that. What did you guys score on the square?
We had 9-8, and you've given out donuts and bagels already. You're spending my money here. I don't like this. Yeah,
we say we're going to do that. We don't do it.
That's true. That's true.
we say we're
we had a goofy square. So like at halftime, they did minus and plus 1 on each of the scores at halftime.
We had a 0.26 or 0.28% of winning.
Probability of hitting it.
Anybody could have had our numbers. They wanted to share them with us.
Yes.
But we
it's
got lucky.
the worst number, 9-8.
Yeah.
No,
Pat's
9-8. Look at you, luck boxes, man.
Yeah.
9-8 in the cash.
But we got it with the -1. So you had it was 9-0, so it was 8-9 with the -1 on the halftime score, which we hit.
Even still, though,
got
man.
lucky.
Yeah,
got lucky.
I think it's the chair. I think I can actually give it to the chair. I got a
Why
little
not?
bit of the Sosnoff luck.
Why not? Give it to
chair.
something.
Yeah.
Yeah, let's do it. Okay, all right. Well, good for you guys, man. That's really awesome.
I can hear your enthusiasm in your voice.
No, I think it's amazing. I think that's incredible. I'm shocked that you scored a 9-8, even with the handicap deal. That's pretty incredible.
Yeah.
And so, all right. So how are we going to look at Delta and Theta over time? Okay, so let's do. So which one comes first? So Beth, go ahead and hit us on the next slide. So generally speaking, these are the two Greeks we look at the most. Nobody's going to disagree with that. But I'm always curious. So Delta, we're monitoring our Delta levels, position level, portfolio level. This gives us a gauge of our directional risk. And then Theta, we want to know typically more of a portfolio level Theta. From time to time, might look at an individual position level Theta. But generally speaking, we want to know how much aggregate decay do we have working for me. So just to make sure we're all on the same page, day to day, we're looking at Delta far more than Theta. Is that correct?
For sure. Delta is where your risk is. Theta is like, we know what side of the decay curve we're on. And Theta, especially now with like 0-day trading and all that sort of like those positions are way bigger and skew that number way more than Delta. Delta is going to tell you day to day where your risk is. The Theta number, if you're trading 0-day iron condors, your Theta is going to be 2x what it actually is for your like 30 to 40 day trade. So it's all about Delta.
Tony, agree?
No, totally agree. All about Delta.
Yeah, definitely. I totally agree. And it's an interesting point you brought up too with the 0 DTE, because I completely agree. In my mind now, I start kind of bucketing off my Theta to where I have more permanent Theta and more like temporary Theta. And the 0 DTE or like 1 DTE or whatever, that's not permanent Theta. That's not the same as an in a 45 out of 21. It's completely different. And so I think about them very differently. Do you guys kind of think about them similarly? It sounds like you do, Nick.
For sure. But that's why looking at just your theta number, it's not like a daily paycheck. It's going to depend on where your positions are, whether you're mostly in those 30 to 40 day trades or if you're doing the kind of shorter term stuff. You got to kind of take it with a grain of salt.
Yeah,
the theta number
agree.
for sure.
Yes, definitely. But we're all looking at delta to control directional risk on a daily basis. Okay, exactly. And I think most traders are going to follow the same learning curve as they trade more and learn more and gain experience and whatever. But here's what's really interesting. So go on the next slide here, Beth. So let's look at a short put example. And this is what really kind of captured my attention so many years ago when this first kind of entered my mind. And I'm like, God, they're so different. They're so different. So let's say that you sell a 30 delta put in QQQ with a theta of $6 a day. Very standard, plain vanilla, Betty Crocker trade. We do it all the time, right? My delta's 30, my theta is 6. So over a 5-day time horizon, I just want to keep this pretty simple. Over a 5-day time horizon, let's suppose that the first day QQQ goes up $1, the second day it goes down $2, the next day it goes up $3, the next day it goes down $3, and the fifth day and the final day it goes up $1. So in the end, it doesn't go anywhere. So in the end, it just goes back and forth. So day to day, you can see the movements from option P&L from delta are significantly greater than theta. Right. And I think this is a big reason why we're all looking at delta to control directional risk, because we know that this is the thing on a daily basis that could potentially cut us the worst. This is the thing that could potentially do the most damage. Obviously, theta, like you said, Nick, being on the right side of the decay curve, it's not going to do damage as long as we don't have, too much unit risk out there to, our theta numbers are out of control and they're too high and we can't control it. But that's obviously going to be working in our favor. But what's interesting about this is if we look over this 5-day time horizon, theta is just kind of slowly doing its thing. Right, it's just kind of slowly like finding some holes in the defense, kind of like your boy. What was his name? Kenneth Walker III. Like my man, dude. When he got those handoffs, I mean, he stood there for like 3 seconds.
I mean, he hit his over 98.5 combined receiving and rushing. It was a great one.
Didn't he do that in the first half?
He hit a hole.
Oh,
with
he
acceleration.
runs with violence.
Unbelievable.
He's awesome.
Yeah. Michigan State, I think, right? Wasn't he Michigan State? Yeah.
Yeah, well, Michigan State and Wake Forest. It was kind of a combo deal. I think he was at Wake Forest first.
I didn't know that.
He's from Memphis, Tennessee. We actually saw that last night, which my wife is from Memphis, Tennessee, and that's where I went to grad school. That's where I earned my PhD.
So you're a big Kenneth Walker Seahawks guy.
Of course.
I mean, I've been one since day one. I'm shocked you had to ask, actually. I mean, I've been all over Kenneth Walker for a very long time. Kenneth Walker the first, the second, and the third. Like, I've been doing this for a long time. But if you
had all the Walkers, even Herschel Walker.
Antoine Walker, like
Antoine Walker.
That was NBA, right? Was that That was Celtics. You're Celtics.
Celtics fan.
Yeah, you're Celtics. Look at you.
Yeah, let's go, man. Let's go. But Theta's just going to slowly move forward, right? Whereas Delta, man, I mean, day to day, it can do anything, but it's going to hurt the most and potentially lead to the biggest swings in your P&L. And so here's the thing that really, I mean, this kind of set the stage. Thinking about these Greeks on a daily basis, it's like, man, my P&L is going to move around quite a bit. From Delta, it's not necessarily going to move around a lot from Theta. Theta's kind of operating behind the scenes, right? Like Theta's kind of in the backdrop, just kind of putting in work, just kind of ever so slowly, like allowing us to move closer to our P&L objective. So when it comes to Delta Theta day to day, have you guys ever thought about it this way?
I mean, yeah.
I haven't gone this deep into it.
Yeah,
but sure.
Yes. I don't think each position I'm looking and being like, oh well, the theta is 5 and I'm only making 4. What gives?
Right.
I think that is something that people kind of hyper focus on, and it goes to not only delta but changes in volatility. I mean, that's another big key here. Like volatility changing is going to affect all of your metrics from delta to, both delta and theta, but it's always about delta. So, I'm not looking at the, $4 versus $5 decay day to day.
Yeah,
I agree.
Yeah. I mean, I think that's really, really valid. And I think that's the right way to think about this. Mm-hmm. So Beth, hit us on the next slide. So here's the big takeaway for everybody out there, right? Theta wins in the end. I mean, this is why we're doing what we're doing. This is why we have the short premium foundation, right? So day to day, it's very clear to see that delta is going to be far more impactful, right? This is an observation that supports the simple fact that, we're using Delta to inform our position management, right? We're using Delta to inform what we do from an adjustment standpoint. But when it comes to the long term, so longer term, what we're trying to do, I think zero DTE is very interesting. I think zero DTE, there's a lot of opportunity there. I'm still not necessarily ready to kind of make that the foundation of what I'm doing. Are you guys to that point yet? I still view it as a complement to the core foundation. Where are you guys at when it comes to the really short-term zero DTE opportunities?
I'm actually routing in order to close ours. I just moved it to take 60 cents out of that. I mean, we did that
We did that one right before Dr. Jim started his long-winded segment here.
Yes.
Dude, I'm ahead of time. I'm usually 10 minutes over.
You are.
What? No, you're perfect.
No, you are right. For us, it's managing it quicker. I know, you can see a lot of people that follow what we do on X, and they wait a lot longer than we do, and they've been quite successful with a lot of them. They take some heat sometimes too. I mean, that's the nature of the business, is 0-day trade being what they are, usually feast or famine. We like the quick little hit, just showing everybody that you can, even in a smaller sized account, you can manage these for, smaller winners. And
all the research has shown that the quick management is the way to do this from a P&L swing perspective.
Yeah.
Right?
Yeah.
So, I mean, taking the 10 or 15% out of these as it comes is the way to manage risk. You remove most of the outlier risk towards the end of the day. I mean, like, if it doesn't work before noon, it usually doesn't end up working. So that's been our trade. But it's clearly a huge part of the trading world right now. I mean, they just launched the 0-day for like Apple, Nvidia, Tesla, some of the Mag 7. So I mean, I think everything's going to have 0-day at some point. So
you're already seeing that they're doing the Monday, Wednesday, Friday, and a lot of the
well, they have dailies now.
Dailies.
Apple has
Do they have dailies now? They've already moved to dailies?
No,
they did the Monday. I think we're still at Monday, Wednesday, Friday.
Oh no, you're right.
Yeah, I think
Monday,
it's
Wednesday,
Monday,
Friday.
Wednesday, Friday.
I think that's
but I mean, it's only a matter of time.
It's a matter of time. Yeah, I mean, that's just the popularity that it's had. I mean, certainly makes sense.
But I really I mean, treating them like scalps, right? You're really treating them like scalps. And I think that's the mentality you have to have in that world. But so from a portfolio breakdown standpoint, just eyeballing it, what percentage of your portfolio, capital allocation wise, do you guys think you're allocating towards kind of the bread and butter, like what we've been talking about for many, many years now, 45, 21, those kinds of things? And what kind of percentage of your portfolio you think you're in the shorter term 0 DTE? You think it's 50-50?
Oh, not even close. I mean, we're a fraction of a percent on the 0-day trading. I mean, I would say our portfolio probably 80% options,
there you go.
30 to 40 days out in time. The other, 19% is going into like futures trading scalps that we're usually in and out of, just from a buying power perspective. And then like 1% goes into an SPX trade or less on a day-to-day.
Okay.
Yes.
It's tiny.
Maybe if we were sitting at home trading, you might get a little bit more aggressive with it. But just doing the show here, taking profits in 30 minutes or less usually if we can, it's minuscule amount.
Yeah, okay. So the lion's share is still with the tried and true. Okay, exactly. This feeds right into my point.
No change there at all.
Yeah. So if you're doing that, and I think a lot of people watching the show, listening this morning, are going to be doing something similar, right? Because obviously the research has backed this up for so many years now, right? Over that 45-day window, here's kind of the irony. So we just saw on the previous slide that day to day, Delta is going to be the thing that's going to swing things around the most. But over the longer term, Delta is very unreliable. It's extremely unreliable when it comes to the P&L expectations, requirements, whatever goals you might have, right? Because that's all going to be directionally based. And as we've talked about many, many times on the show, direction, man, that's a tough thing to predict really over any length of time, 45 days for sure. And so Delta is extremely unreliable, but Theta is extremely reliable. Like, this is the thing that we've shown over and over and over again. But what I really wanted to highlight this morning is just how differently they move and react on a day-to-day basis, and then, of course, kind of wrapping it up and tying it off with a bow with the reliability and the unreliability factor, which I think is a really important point.
I totally agree with you. Good job. Yep.
The number, the Theta number, I would say, is not reliable. Day to day. You can't look at it like a paycheck, like the actual number.
No.
But the curve of the decay for sure. And like the position wise,
it's not a paycheck. Yeah,
it's not. There's no paycheck.
Not a paycheck.
Yeah.
It actually could cost you money.
Yes.
Right. If volatility expands, it could cost you money.
Yes.
That's right. And that's what, and that one more quick comment. That's such a great point and observation. And I talk about that in From Theory to Practice all the time. Quick shout out to From Theory to Practice every day at 1:30 Central, 2:30 Eastern. And so I'll see everybody later today. But that's exactly right. That's 100% right. Right? It's not income. It's not a paycheck.
No.
Like, that's why we have the different management things. That's why you're looking at, okay, how much directional heat am I taking? Where's my risk? What, is it still out of the money? Like, these are the types of things we're managing, even though the theta is still quote unquote positive. Mm-hmm. You're not just, picking up a pile of cash in the corner and moving on with your day. It's never going to be that simple.
That is correct.
There you go. All right, let's get them a few takeaways. And we'll send them on their way. As quantitative traders, we're always looking to shore up our trading with mathematically based principles, and using delta to direct our day-to-day adjustments makes a lot of sense as we look to shield our portfolios against the runaway move. But over the long term, it is still theta that will have a far more reliable impact on our P&L. Go Seahawks.
My peeps are telling me to let you know Wood Defender stain is a good stain to use. It'll last really long. So it's called Wood Defender. That's the one that you should be using.
Wood Defender. Okay.
Wood Defender. Right. Talk to your guy. I'm sure he's got his own special stain. Maybe you throw him that one.
He's got a little deal where he's getting some soft dollars.
A little kickback.
So I don't know.
Kickback, yeah.
Okay, yeah.
Do people tell you how often they got to do it?
No, I can ask. I'll ask Sean. I'll get back to you on how often you'll have to
please do. Yeah. Okay, cool. All right, there you go.
Good job, Dr. Jim. I'm going to take a quick 90-second break. We're going to get more Tasty Live after this. I could have sworn we had a bet, but I'm going to let you go. Doesn't matter to me. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. We're back in 90 seconds. Even the S&P's up 5, about as high as I've seen them.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure. Go.
E-minis, unched.
E-minis.
Session here. They've gone nowhere.
Oh, they're up 5 handles.
Yeah, 5 handles.
Yeah,
They've gone nowhere.
NASDAQ's actually caught a little bit of a bid here, up 33.
You were right about volatility, though.
Yeah, volatility contracting 1875. I thought we'd go nowhere for the day so far. We've really been going nowhere for the day so far. Yeah.
Cool.
So far, so good.
Good stuff.
That's good. I'm ready.
Market measure sponsored by the SIBO.
Sponsored by our friends at SIBO.
Weekly 0DT breakdown. How do you think last week was for 0-day trading? End of the week, basically nowhere.
Yeah. I mean, intraday violently unchanged. Man, I saw the tweets out there that people were doing pretty good. So I think if you managed them, you did pretty good.
Because you had volatility a little higher, you're selling further out of the money.
I think you did pretty good. I think we were okay. We weren't that aggressive. I think I shied away from doing the 0 days last week. But we had 1 or 2 winners, I think, on the week.
Yeah.
Yeah, we didn't do them every day.
You're going to be surprised by this.
All right, let's go. Let's go. I'm ready.
So SPX was violently unchanged, our phrase of the week, or mostly of the year, over the past week. However, intraday price action was highly volatile. We had some huge moves underneath the surface. You had some of the AI stocks going nuts, software stocks, Bitcoin. You had gold and silver going crazy. It was kind of a crazy week in all markets, ending up basically unchanged, violently unchanged, our phrase for the week. Just to quantify volatility, so on this next slide here, volatility last week, including the close-to-close volatility intraday and overnight, was well above average. So we broke down implied volatility here of the 5-year average versus last week. So you can see across the board, it was very volatile. So you had almost 2 times the realized volatility as you did on average over the last 5 years. So definitely one of the most volatile weeks here for 0DT trading and just trading in general. So we're going to look at our classic 20 delta for the short options, $20 wide iron condor. We actually did $15 wide this morning. We've been doing like $10 to $20 wide, depending on the day and depending on how much risk we want to put.
Yeah, which I don't know how valuable that is. I mean, I think we're kind of...
how valuable what is?
Going $10 wide when you're less aggressive, going $20 wide when you're more aggressive.
I think you got to be more mechanical. If you're going to do this day to day.
Yeah, if you're going to do it day to day, you probably should just stay with the $20 wide. I think we should probably stay with $20 wide and just continually do that. We've been going to the $15 wide, being less aggressive. I don't think that really pays off in the long run.
I agree. Okay. So looking at the trades from last week, it was the first losing trade in nearly 2 months, 0DT. So we're talking about the 20 delta, $20 wide. We're doing a 25% take profit on these trades. We've been a little bit more aggressive with our trades of like 10 to 15%. For the data, for the studies that we've been doing, we've been using a 25% profit taking order and then no stop loss if you don't hit that. So we had a first losing trade in nearly 2 months. It occurred on February 3rd with a full loss of $1,600. Was February 3rd, was that Monday?
February 3rd? I can look for you right now.
Tuesday. It was Tuesday.
No, you did quicker than me.
So
Tuesday.
That one loss pushed the cumulative P&L into the negative territory for the year. So we're going to take a look at why that occurred. The other ones here, so the way you can look at this chart is the green ones are ones that were profitable, and it's the point in time they were profitable. You could see last week with the volatility, if you were targeting 25%, you really had to hold these towards the end of the week, which is contrary to what it's been for the rest of this year, where you're out before like 10, 11-ish. That's kind of like the limit on these trades. And we've been trying to do that, anyway, just to get them off before we end the show. But last week, the volatility led you to holding these trades a lot longer. So just an FYI for you here. So they were longer holds.
Yep.
And you got the big loss.
And you have the big loss, yes. So looking at this, if you were just looking at it from a point of view where I want to incorporate this into my trading, and yes, it was last week was probably one of the most volatile weeks that we've seen. Would you, knowing this, would you think about it as something you would want to do?
Well, I think this points to kind of being a little bit more aggressive with profit taking. If you're, for the purpose of the study, we have a pretty strict, 25%. But in real trading, you can look at a trade and say, you know what, this moved like we did just now with Dr. Jim. I had a 75-cent order in to take profits at 75 cents. It moved 60 cents in 15 minutes. Yeah. And so, when you're actively trading, you have that flexibility. I think that's what the takeaway from this slide is that, if you can be a little bit more subjective day to day, you can take those profits quicker and avoid the big loss. And then, for the ones that ended up being winning trades, you miss out on a couple dollars there, but you avoid the $1,600, loser by just taking the, the quicker profit or loss.
Perfect.
So just looking at February 3rd specifically, so February 3rd finished down 0.86%. That's on the market itself, but the strong one directional move lower from the market open made the session particularly difficult to manage. On the last slide, you didn't really have any point in time where you could manage this trade for any sort of profit. It went against you basically from the start of the day. Thursday and Friday both experienced large total moves, raising the question of why those days remained profitable. You had two-sided action on those 2 days, which is something we're going to look at on the next slide here.
Even going to today's trade, I know it's only 1 day of study sample set. You closed it at $4.50. It's trading at $5 right now. So, yeah. I mean, it might end up being a full profit.
You put it back on.
You actually could if you wanted to. But I mean, usually after we're done. Yeah, kind of thing. Move it on. It worked. It's we see you later kind of thing.
You don't like the risk. I get it.
I don't. We got the win. Why turn the win into something else?
I agree.
So you at home could do what you want, right? Like if you're sitting watching. Well, we're going to talk to the trade desk in a minute. I'm not going to watch the market.
We did do a segment on if it works before 10, does it make sense to redeploy it? And it did actually make sense to redeploy it.
If it was before noon.
I think it was before 11. If you opened it at like 9 and then closed it before 11, if it made sense to redeploy at those same deltas, so you adjust based on where the market is, but I agree. I don't think we need to push the chips. So this next slide, we're looking at February 5th and 6th. No, go back. Sorry. So unlike February 3rd, other large move days either swung within the range or remained in the profit zone long enough for the positions to be managed successfully. Again, this is why we manage these trades, because you had huge moves in the market. I mean, you're talking by the end of the day, it was up 100 points on February 5th. You're getting your face ripped off on both these trades if you're not managing this at some sort of profit target. 25% is a little past where we manage them, but it just goes to show you're sometimes you'll miss out on the other 25%, and then sometimes you'll avoid a $1,500 loser, and those $1,500 losers are a multiple of what you're missing out on each trade day to day. So
it takes a lot of rights for that one wrong.
Yes. For sure.
Managing early.
For sure. So this just gives you an idea of why we manage those trades. Next slide here. So last week's price action differed meaningfully from the long-term behavior. So SPX spent a similar percentage of time outside the short put and short call strikes, and the time spent beyond those levels were significantly longer. So this tells you that we had big moves and then we stayed up at those levels. There was no real two-sided action there. You had big moves in both directions. It was kind of one-sided. And so you can see from, and this is the time the SPX was above or below our short strikes here. Long-term average is about 10 to 15%, which is, works out to the probabilities. If you're selling a 20 delta put, you expect it to be tested about 20% of the time. It actually comes in inside that because volatility is typically overstated. Last week you had volatility that was understated, right? So you had a little bit bigger moves there.
Sweet. People love, and again, sponsored by the CBOE, so thank you. People love the 0 days. I mean, and you could see that in the Mag 7 getting the Monday, Wednesday, Friday, and it's only inevitable before they get the weeklies there too. I mean, a lot of, remember when they first started this, they were talking about how, this was gonna explode volatility.
Yeah, explode the market too. It's going to make the big moves in both directions.
Right. And we've had nothing but. I mean, it's been really the same as it ever was. And volatility is really kind of muted. You can buy now volatility on a daily, weekly basis, event-driven, if there's some sort of news that you're trying to protect pretty easily. I mean, it really had the opposite effect. And look at volatility right now, down 60 cents on 1850. We talked on Friday how you were not going to get paid over the weekend.
Now you're
volatility. You're getting paid on that volatility right now. We also talked this morning about how it was going to be kind of a quietish inside day, and it's really a third of a percentage point to a quarter of a percentage point. It really is an inside day in the markets. I think we made some nice calls here.
Yeah, and a nice bounce in a lot of these stocks that we've
needed a bounce.
Gotten long delta in via the move.
Yep.
Yeah.
Agreed.
So last week's 0 DT performance lagged long-term results because of that elevated trade duration and just the volatility we had in the market. So we had to hold the trades a lot longer throughout the week. Had a lesser win rate. You could see your hold time was almost twice what it was through the rest of our past studies here. So it was just a more volatile week, but you can't avoid those. You're going to have those sort of weeks if you're trading this every single.
Unfortunately, you are, son. You can't avoid them.
Finally, this last slide. So we compared iron condors to put spreads. So a lot of people just like doing the put side, which has worked historically. I know we had that one study that they were like 95% or something like that. The 0 day options have only been around for 3 years now, and it's mostly a big upside move. So put spreads produced results similar to iron condors this week, largely driven by last Tuesday's downside pullback. So basically what we're saying here is that the iron condors and the put spreads P&L wise were pretty much the same because they both experienced the max loss on Tuesday. So you lost, $1,500 on both those trades. So you've been, they perform the same. So the impact was concentrated on the downside with wider put spreads showing weaker average P&L, indicating that the structure with wider risk exposes more to one-sided moves. So if you're doing, wider spreads, you're going to have more risk on downside moves here. And so you can see across the board, they're all pretty much in line here from put spread to the iron condors there. But win rate has been 80%. Which is good. I mean, the maths.
The maths. Now, when you put these trades on where we're putting them, I think the probability of success is less than 80% when you're putting on. So it's overperforming.
Yes.
I mean, it's overperforming.
Yeah.
So you gotta like that part of it.
Mm-hmm.
I mean, I think that's why the public has gravitated towards that.
Yeah. But you gotta be careful because you get that one big loss, and then
you always gotta be careful.
Gotta spank you a little bit.
For sure. Let's take a look at the market before we say hello to our trade desk. Even the S&Ps are up 15, trading near their highs of the day, at least the highs for when we've been on the show. It's been a pretty tight market here. We've been inside the moves from last night. NASDAQ up 64. That's your leader. NASDAQ and even the S&Ps are your leader in the clubhouse. So this morning, they were the weakest of the group. The Russell, which is up 4, and the Dow, which is down 22, were the leaders in the clubhouse. Now they're small, but when you look at this, a 0.25%, 3%, very tight inside day. Volatility in by 70 cents, 1850. Big move lower, a little more than 3%, with the market really doing nothing, just showing you volatility really is mean reverting. And you're finally getting paid if you hold over the weekend. You're finally getting paid for your theta decay. Bonds are down 6 to 115.10. Bitcoin also not that volatile this morning, hanging out at 69 and change. Ethereum hanging out at 2,040 and change. Oil, we haven't put on an oil position, but it's back to $64, up 50 cents. about 30 cents off of its highs, significantly off of its lows of 62.62. The metals are catching a little bit of a bid here. Gold in the middle of its range, 5,057, up 1.5%. That's $78. Silver, a bigger mover, been a little bit of a lagger, as you can see here, trading up $4.65, a 6% move. So a big move in silver. Net gas lower. I know you've got a BE trade that you're trying to fill. Did you finally get filled on it?
Finally got filled on it.
You did, $5.65. So good job out of you.
Yeah.
We closed our SPX to go with the market measure that we did today. And now it's time to really take a quick
volatility really coming in. Like I had a Microsoft short put at 400. It's basically a scratch, and I did it almost $15 higher from where Microsoft is trading right now.
And you're selling puts. That's a long delta. You got the stock going the opposite direction.
I sold those puts into like day 2 of the sell-off, not day 7 or 8. And so those are basically a scratch now. So you got volatility coming in a lot of those names. A lot of the tech names, it seems like, with a little bit of a bounce, it's the best of both worlds here today.
Oracle up $12. It was up about $14, $15 a moment ago. Its volatility is still high too. Ivy rank of 98 with the earnings coming not until March 9th. So maybe you got something to do there. Maybe both sides. Unlike me, I'm stuck on the long side. We're going to take a quick 90-second break. We've got my friend Q and my man Ryan coming in here. Let's talk to them immediately following these messages. It's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live as the E-mini S&Ps are up 6, NASDAQ up 16, the Dow down 50, and the Russell up 3. All that means nothing when you got this, man. My man Q, how are you, brother?
Fellas, how's it going? I'm doing
a little more complacent on the trade desk. You don't have to rush out of here now. You're okay.
You get a little bounce of vol contraction and videos up, $15 from the lows. Everything's good now.
Everybody can just relax now.
Yeah, it's almost as if we weren't down 100 points the other day.
Yeah, nothing.
All is well.
Yeah.
Is it amazing what a difference a day makes? Just 24 little hours.
Yeah.
Yeah.
Yeah, no, I mean, it's really because, like, the way, like, the vibe on the trade desk is just, like, it can just change so drastically from day to day. Like, I mean, past couple of days, we were absolutely slammed. And then today, things are a bit more relaxed, you know?
Yeah.
And, I mean, the market's kind of just chilling where it is. And, it's not moving much as of right now. So, yeah,
that's actually how premium selling is, too. Like, you nibble one way or the other. Oh, you have a fire you have to put out. Oh, you got something good that works. You nibble. And then all of a sudden, one day, you get paid on your portfolio. And then you have to decide whether you want to keep that portfolio the way it is, close it, reduce it, add to it. That's the best thing. But you really are kind of micromanaging your overall position, waiting for volatility to contract. And you got that today, down 3.5% with the market going basically nowhere right now.
Yeah. And then some points last week you thought
you questioned every life decision that you ever made.
Yes, exactly.
You probably, your eyes probably went to gold and silver a little bit, and somebody mentioned nat gas, and then you went there a little bit, and then you saw Oracle or every other tech stock getting hammered, and you went there a little bit, and you went to some place you didn't belong, and you went there a little bit. Now you have an opportunity to do something about it. And that's the beauty, at least, of options trading. You don't have to be 100% right in direction.
Yeah, and then the hindsight's always 20/20, right? But I feel like a lot of the time is like when you're premium selling, like you mentioned, that it's always kind of like, I'm putting out this fire on this position, I'm putting out that fire on that position. And then on a day like today, there's probably not too many fires going on. And so that's always much welcomed.
Quick question for you about the Super Bowl. Did you invest in Lindsay's pool?
No, I did not.
Oh, you did not?
I did Super Bowl squares last year. I actually cleaned up on there.
Oh, okay, because I don't have any of your money then, because I won the final score. I just didn't know if...
Good job out of you.
I'll see if I have Ryan's money soon, but I don't have any of yours. I would like to have some of yours.
Yeah, we didn't do anything on the trade desk this year. Normally, Jason's always trying to organize stuff about anything really all the time. But yeah, no, we didn't really do much for that.
Okay.
I feel like not many people cared about the Super Bowl this year. Two kind of odd teams.
Well, I mean, the Buffalonians were still crying that they weren't in there once again.
Yeah, I mean, Chicago had it tough. I'm a Bears fan.
We were close to a Bears.
We would have given them a better game, I think.
Oh, for sure.
Than New England.
Maybe.
Come on.
Gotta have some faith. Well, no, you can always set. No, see, that's like a thing you can always do in sports. Like, if your team's not in it, you can always be like, my team would have been so much better for sure. This other team's garbage.
Or you
I don't know how
what
they
Dr.
made
Jim
it.
does and just pick a new team.
Flip every team you want,
team
right?
is winning is his team. Yes, you could do that too.
Yeah, no, I really like even though we're not in the game, but if we were, we for sure would have won or we would have. I like that. I like that angle. Of course. That's a risk-free trade, right?
Yeah, you got nothing to lose.
Yeah.
Nothing to lose. Nothing to lose by saying that. That's the truth.
All right, let's go through the top 20.
I'm ready. Let's do it.
Top 20 symbols going through the system and their IVRs at number 1, NVIDIA, 27, SLV, 82, Amazon, 24, Tesla, 3, GLD, 56, Microsoft, 31, HIMS, 55, AMD, 36, Oracle, 100, Palantir, 19, Apple, 15, iBit, 71, Micron, 68, Broadcom, 56, Google, 20, SoFi, 15, TQQQ, 28, Netflix, 29, MSTR, 57, and Robinhood, 44.
That's why we're not getting paid on Oracle today.
Volatility is still up.
Very, very
you look at an Ivy rank of 96. And if I could put this up there real quickly before I let you go, you look at Oracle here over the last 5 days, its volatility is up 10%, with volatility /VX at the numbers we haven't seen in quite some time, 1840. So, yeah, you're getting the $12 move on your delta. You had, let's say, 30, 40 deltas on your option. You're getting paid there, but you're not getting paid anything on volatility contraction. As a matter of fact, it's costing you.
Yeah, it seems to be expanding. I mean, that we were talking
If you had any intestinal fortitude.
We do. We have a sizable position here.
Yeah, no, I know. We're at position limit, but if you had any intestinal fortitude, you'd sell more.
Yes, definitely. Double down. Yes, of course.
Q, you're a good man. I hope you enjoyed your Super Bowl. I hope you enjoy your day on the desk. Maybe a little bit of complacency with the market catching a little bit of a bit here. All four indices are finally green with the Dow up 30. That was your lagger. But
does anybody have a Dow 50,000 hat on the desk?
No, I think. Oh, we've got a Dow like 30-something thousand.
Yeah, that was so like 2 years ago.
Yeah, right.
Wasn't that COVID? Didn't they?
There's some sort of hat on the. I think we have some sort of hat. If we do, I'll wear it tomorrow.
Okay, perfect.
Yeah.
Perfect. You could just put like a little piece of paper over it and just put a.
Yeah, I like that. Okay.
Put any number you want on it.
Yeah.
All right, I'm going to let you go. Who is our next victim? Ryan, everything's catching a bit except your crypto.
Hey, come on. We had a good day on Friday.
We did have a good day on Friday.
yeah.
From Lowe's.
Yes.
If you were just trading this thing, I mean, of course, if you've got the outlook I do, long term, you want to buy some dips here and just hang on to them, it doesn't feel so good. But from a trading perspective, yeah, you've had a ton of opportunity in this product.
I will say, I got a little gung ho because we did the MET futures, which are leverage wise are awesome. You use about $200 in buying power to hold one.
10 to 1.
It's 10 to 1. I got into the XRP futures. I did those a little couple because it's it looks so small. That grew some teeth.
Yeah.
That one was a big move into like a 30-40%.
You end up scratching it, right, or something?
I took one off. I still have one on, but I was like, that was one where I was looking in the after hours and I was like, my P&L is a little too big. What happened here? And I'm looking at this. I'm like, I'm losing $2,000 on XRP. What the hell? So that's my PSA for everybody out there. The MET, no problem. XRP one,
Did you give him a disclaimer when he went into XRP?
Maybe not fully. We can do that now. Yeah, I mean, I think XRP was down 20+%. Everything was down bad. But that, I think, is the difference between like a 60-70 realized vol and a 112 realized vol on XRP. So it moves. Of course.
We like some vol though.
Yeah.
But
you bounced back up to. You got almost 150 or so, I think, on Friday. So it's traded in a pretty wide range.
That's where I closed it. I bought it at 150, and then in the overnight session, it got down to like $1.
Yeah,
that was where I was like,
when something loses 30%,
yeah, I was like, this got a little big. This
right. Hey,
whoa, hey. But you can't really plan for the 30% drawdown in 4 hours.
No, it's a hard one, but
yes,
I guess it happens.
Yes.
Yeah, what we saw on Thursday, really, so depending on the time frame on your charts, it'll show as Friday or Thursday. But Thursday was that big move, and then you got that when Asian markets, equity markets opened up into the evening. Here, you flushed down to, I think the low in Bitcoin was 60. Maybe we broke 60 in some places.
Yeah.
But then you did get that bounce. And yeah, I think when you look at the signals in the market, and you guys see the same thing in equities at times, not all that often, once a year maybe, but we got that sort of volatility move in crypto, which doesn't mean that you won't go lower over time. And maybe your range is 55, 85. I don't know.
Yeah.
But when you see that sort of volatility expansion that quickly and it just jumps off the screen.
Yeah.
I think you do have an opportunity. You just look at some different technical indicators. You look at conditions being oversold. You look at volatility at almost 100% in ETH. You tend to get a short-term bottom. And that's what we saw. So you had a chance to maybe trade that, though it's pretty scary at the time. That said, this is going to continue to chop, and it's going to move quickly. So back to sizing positions, just trade that volatility appropriately versus where we came out of.
Yeah, easier said than done sometimes, especially if you have existing positions and you're watching your P&L go in the opposite direction, even if you don't have a lot of delta. But you're right. We talk about this all the time, how volatility is mean reverting. I actually said I'd rather trade the volatility futures. I'm going market now, not your crypto for a minute. I said I thought the bigger bang for your buck was the volatility futures than even the S&Ps. It came to be just about even in them. Volatility did contract a little bit faster than the market rallied until Friday. Then the market rallied a lot more than volatility contracted. So it was about 6 of one, half dozen of another. The thing was, you had to do something. Like even doing nothing, not adding more to your positions, but hanging in there on them was doing something. As long as you looked at the position and realized that, hey, you know what? I have good positions for my assumption. I'm losing money right now, twofold. Maybe my directional, I'm catching a little bit of long delta because we're moving in that direction. And volatility is expanding. You just mentioned it in Oracle, how volatility is expanding. It was expanding all over the market. Once you realize that, you say, all right, I'm going to sit back and I'm going to relax. I'm not doing anything additional, but I'm going to stick with my position. That's doing something, right? Yeah. As opposed to panicking. I know a lot of people in gold and silver had some positions that they looked at
a little big.
They got big, like in your XRP. Got a little bit big. And a lot of the emails I got from people, I was like, you know what? A lot of it was macro driven. And I said it on Sunday and I said it on Monday of last week. Listen, your macro view hasn't changed. You don't like the price action. Stick with your conviction. Now, if you want to close what you have on, like, you just had a future on and put it into just a long combo in GLD or SLV, which would be a smaller product, do that. But don't lose your conviction just because the price sucks.
Yeah.
You know what I mean? And I think I think that we're all saying the same thing.
Absolutely. Yeah, and I don't think that what you're seeing here is isolated to crypto necessarily, at least in terms of the price action last week. It's obviously been relatively weak over the last few months. There was a catalyst in crypto specifically, but you're seeing that big momentum unwind. You're seeing, very low volatilities. Obviously, you can get back to those highs, and that's what you saw in crypto was not only did you move very quickly, you came off of very low levels. I think just a couple of weeks ago, we were like IV rank 0. IV rank 5. So a big move here, but I think it's created some opportunities in the market.
What's the correlation with NASDAQ? Because it feels like it also kind of got caught up in the software kind of anti-tech, week that we had. Is that, this year, it's got to be pretty... correlation has to be pretty high with NASDAQ.
With the volatility expansion recently, you start to see things strengthening there as they're both going to the downside together. Yeah. Longer term, when you look at the correlation between the NASDAQ, the S&P 500, and more so the Russell at times, that correlation tends to bounce between 0.4 and 0.6 over a longer time frame in terms of a positive correlation between equities. But of course, when volatility picks up, you start to see everything move in the same direction, and that's what we saw short term. So
it makes sense.
I said, I think you continue to probably path of least resistance is lower here. I wouldn't be surprised if you take a look again closer
You're supposed to be my bull. Come on, tell me I'm okay.
I think it's just
hold me.
I wrote about this over the weekend. It's time frame is everything. Yeah. I still think you get to new all-time highs. These levels, to me, are attractive. But if you look at, how does this market likely trade after what just happened? I don't think that you get a V bottom in here. But I do think that you have to trade that vol appropriately or accordingly. And you could see 80 quickly on your way back down to 60, 55. So it's going to become a much wider range, obviously, than we've been used to.
I told my dad, one of my buddies has been riding me all last week. He's a very anti-crypto guy. And so this was his Super Bowl before the Super Bowl. And I feel like that is a good sign for at least bottoming out here.
Ultimate signal, right? When the same people every single time, the last 5-6 times are out again saying that Bitcoin is going to zero, it's tough to take that seriously. And I think that when that chorus gets a bit louder, that's a pretty good signal. It doesn't mean that, again, you won't kind of move a little bit lower here. But historically,
I never could understand that attitude. I could be bullish, you can be bearish. And we can have opposite point of view on something. But to not really have a position, because you really can't be short Bitcoin, just hate it because somebody else is making money in it or taking the risk or anything else like that. I just don't understand how, you can, I almost would say, even if you stuck $100 and you bought $100 worth of Bitcoin, say, well, I'm in at 60 SOB, you're in at 80. You know what I mean? Or something like that. I mean, like, just to hate on somebody else's fortune, I don't understand. I don't know how you how that occupies the time in your brain.
Yeah, I don't get it. I think if anything, as an investor, as a trader, you want this volatility in your portfolio. Yeah. No one's advocating that you put all of your portfolio into it, but most of the research that we've done shows that this sort of volatility over the long term, because it is asymmetric, it's beneficial to your portfolio if you have a 5 to 10% allocation. If you size that up, of course, you're going to have better returns in the good years and you're going to have big drawdowns. We know the largest drawdown historically tends to be about 80%.
Yeah.
And that's happened in numerous cycles. We'll see if we get down that far this time. I don't know. We're basically down or at the lowest about 50% or so.
Yeah.
But I don't get it either, Tony. I think you want to have a little bit of this just because as a trader, you want that asymmetry. It can go to zero. Yeah. Sure. It never has in history, and arguably it could have last time or the last couple of times versus here. But the upside return is well in excess of thousands of percentage points, depending on when you're in. I don't think that's a good point to measure it from. But if you just look at the last couple of years, it's still up more than gold. And maybe gold's playing catch up here to the same dynamic. I don't know. But I think you want to have a little bit of this in your portfolio.
I agree with
What
you.
if?
I agree.
What if? Yes, so the lottery ticket. You need the lottery.
That's kind of like, not all investments work, right? But you get these asymmetric bets as almost a venture capitalist. You have 10 things that you invest in, and maybe 2 of them hit for, a few billion, and the rest of them go to zero. You're still up.
Yeah.
Interesting that you mentioned gold there with Bitcoin. Do you think there's any correlation between the market, gold, and Bitcoin or any other cryptocurrencies? Do you think they're all independent these days?
No, I think as you get bigger players that are involved, you just look at the new money that's coming into crypto and where it has to come from in order for that market to grow. It has to come from bigger participants. It can't be retail. And so I think as that gets even bigger, you're going to see stronger correlations across these things. And I think you're going to see, just given what's happening in markets at times, as you always do, you're going to have new players that come in, run different strategies, are going to use leverage. And that can at times result in some of these moves that you see short term that are hard to explain. Mm-hmm. They don't really need an explanation. It's just flows. And so I think you see more of that as new participants come in. But I think that, these correlations probably get a little bit stronger over time.
Great. You got a slide here about expected moves. Let's take a look at that.
Yeah. For the week here, as volatility has popped a bit, you can see you're running a discount in terms of implied is actually lower than realized right now.
I did not know that and would not have called it.
Well, it's usually been volatility expanding to
On
the
the way
upside.
up.
Now we're getting.
I just thought the move was so violent to the way down, just like you had gold and silver having volatility expanding on the way down too. You would have had the same thing in Bitcoin.
Yeah,
That would have been my thought going into this, just because the move was so big.
The realized moves were huge, absolutely. But you did get, finally that expansion in implieds here. And you've seen that correlation between implied volatility and price has been as strong in negative territory. It's the strongest negative correlation that we've seen for some time. So you really want to see a continued kind of decline in volatility or collapse in the vol price here, but you're not, you're seeing that off of those highs, but I don't know if you're going to see that sustained. We want to see more of that mean reversion, and I think that'll support price. But for now, given where we are with volatility, looking for about a $5,500 move on the week for Bitcoin. And for ETH, you're looking at 224, Solana 11, 15 cents for SUI, and XRP is 22 cents. That said, when I look at a couple other measurements of just price action here, in terms of what's actually been happening, your average true range for Bitcoin on the daily basis over the last 2 weeks
got to be 10.
Is like 4,500. So vol is a little elevated on a 1 week basis there. But when you look at, okay, how much has Bitcoin been moving on a weekly basis? Recently, it's closer to 10 grand.
Yeah.
So, volatility is going to expand and contract. But just, I think to your point, Tony, like in the spot markets and everywhere else where this is just trading, short term, you can have these monster moves in this very small asset class, regardless of what your kind of 30-day implied vol is.
Did you tune into the MicroStrategy earnings call?
No, I did not.
I saw some interesting graphics. There was he incorporated a rocket ship. The visual was a rocket ship that incorporated all of the
other funding methods. Like he has all those STRK and like all those other, like debt instruments. And it was basically just fueling. That was the fuel to get the more Bitcoin at a lower price to then rocket ship to the moon.
Well, I think now
enjoyed that.
We know then, I think, what explains why there are the people that say it's going to go to zero. We're kind of seeing both ends of the spectrum there.
Yes.
But, when I look at, there's a lot of FUD in the market, fear, uncertainty, doubt, as they like to say in crypto. And so some of the themes are things like quantum computing is going to disrupt this, and there's a certain amount that will just be stolen. The wallets from earlier in Bitcoin's history can be hacked via quantum computing. I think that's a semi-real threat. I just don't think it's tomorrow, but it's something that the network has to solve
my friend's
for.
been calling it Epstein coin because there was that that was in the emails. There was a Bitcoin reference. So that's another FUD for you to add to the list.
Yeah, I mean, you see all of that. That's on X, right? But I think largely what you're seeing is just a big reversal in flows, obviously big outflows in the ETF space. And so some of those narratives that have existed to support this. And then you also have, on the FUD side of things, it's, look at BitMine. They're $7 billion underwater. What's MicroStrategy's average purchase price? And people talk about these things as if they have an obligation where they'd have to unwind the whole thing.
Yeah.
The reality is BitMine and Strategy out here again buying more. So if they were going to unwind, I doubt they would be buying more. And so I don't think that's a real concern at this point. I mean, anything can happen, I suppose. But this is a pretty typical drawdown historically that we've seen. It doesn't feel good. It's big, but they're big. This is something that can go up 200%. It absolutely can go down 50%. So again, trade accordingly. But I think when you look past the FUD, it's hard to argue that there's a real true fundamental catalyst here as to why you should see sustained lower prices. And I think this is more of a bigger just correction.
Do you think the stable coins are kind of taking away a little bit of the oomph of the Bitcoin move?
I don't think so in terms of the Bitcoin move. I think when you look at stablecoin market cap expanding, that's positive for crypto. That's more fiat dollars turning into digital dollars in this ecosystem to be put to work. And you're seeing more and more financial institutions that are building on chain. You should only see stablecoin market cap grow over time. It's not going to be up every single day, but I think we go from about 300 billion today to easily well over $1 trillion in stablecoin market cap. And that'll be on the back of more regulatory developments. I think that's been a little bit of a headwind here recently. You have legacy financial institutions and more of those crypto native players right now kind of duking it out. There is another meeting on February 10th. So what's that, tomorrow? Maybe we'll see some progress here. The Clarity Act has been stalled in the Senate, and a lot of this hinges on whether or not those crypto firms can pass on stablecoin yields to the end user. And the banks are concerned because they think that there's going to be deposit flight because the banks pay you zero.
Yeah.
So I think stablecoins are largely a good thing for crypto if you get something that's a little bit more pro-stablecoin. But I don't think, to answer your question, Tony, I don't think it's taken away from the Bitcoin price action at all. What I think has taken away from the Bitcoin price action is the move in metals. And just about everything else that you could be in that's been doing pretty well.
It's FOMO.
Yeah. So like we talked about, not in play. I personally haven't been all that active in crypto, buying the dip here, maybe early, but I've been active in a lot more in defense tech, AI, precious metals, just stuff that's been
moving,
going back up on the correction,
Yeah. A little surprising as the E-mini S&Ps are up 25, the Nasdaq's leading the group up 120. If I told you Apple was down $5 and Amazon was down $1.50, I don't think you would think the Nasdaq would be up a half a percentage point or 122, but that is led by some of the other stocks like Apple 11, which is up 50, Oracle up 13, Microsoft up 10.
Yeah.
Some of these pigs like Microsoft, we've been trying to buy the dip in, finally coming to fruition. AVGO up 9, AMD up 6, Palantir up 6, Palantir and Snow up 6, Nvidia up 5 or 6. So you certainly got the rest of the market and some of these depressed tech stocks really catching a bit, which is where we've been leaning, I think.
Painfully leaning.
Yeah. You're always going to be a little bit early, but now you get paid. Good job out of you, Ryan. We're going to take a quick 90-second break and come back. We got more Tasty Live. As we leave you with the market highs, I don't know what Liz and Jenny are going to do to the market, but we'll find out right after this. Peace.
Peace.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party. High school kind of.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. The same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together. Yep.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Watch me go.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. Happy Super Bowl Monday.
Happy Super Bowl Monday. You look very dressed up today, Liz.
I've got pajamas and a blazer on, so thank you. Thank you for noticing. I appreciate that.
Yeah, happy Super Bowl Monday. What'd you think of the Super Bowl?
I had a wonderful time at the Super Bowl party. It was the most boring Super Bowl I've ever seen in my entire life.
It was a slow.
I won though. I won one square, and you told me that. I wasn't even paying attention, so thank you very much.
I had to text her and say she won a square.
Yep.
So congrats on your square. Last year, I don't remember what square pool was it where we had no idea. We do this pool on our train. We've got a train pool going. So we had no idea. We showed up on the train and they just handed me money. Do you remember what that was for?
It's happened to us 3 times because I'm always in his pools and he just walks up and hands me. The one time he handed me like a couple grand. I was like, Jesus, what did I win?
I think it was a baseball. I think it was like the World Series or something.
I have no idea.
I have no idea, but there's a constant pool on the train for whatever, any sport that's happening, there's a pool on the train.
Because the train conductor's the best. He's so fun. We'll get his picks of the day when he gets back from vacation.
Yes. Okay, so one thing that I did notice during the Super Bowl, I don't know if any commercials jumped out at you, Liz, but I guess the market doesn't like the Hims and Hers commercial because did you see Hims today?
No, was that the Hims and Hers commercial? No, it's because Novo Nordisk is now doing something with their weight loss drug better than Hims and Hers.
Okay, so yeah, Hims and Hers is taking a hit today.
Let's see it. Let's see Hims, and then go to Novo Nordisk because I just heard that they were rallying, but I'm sure it's probably up like $2. Hims.
Okay.
Oh my God, 22%. It's down to $17.
I know, and I've been holding on strong to my Hims position. I've still got Hims stock, thinking like one day one of the big pharma's just gonna like buy it or something. Like I have not been able to get rid of it.
Last Super Bowl. It was last Super Bowl.
Two Super Bowls again.
Oh,
okay. 2 years ago is when they kind of, came out with their Super Bowl commercials. And that was the first time I heard of it. And I've been trading it ever since. Today's not a good day for my Hims position. That's for sure.
And I feel badly for that. But check Novo Nordisk, because I'm pretty sure it was the Novo Nordisk news. Don't get me wrong. I don't know. I didn't see the ad. And I've never seen the ad. You keep talking about it on VO. Yeah, check it.
Wait a minute. You didn't see the commercial?
No.
Did you watch the Super Bowl?
Jenny, when I watch things, I'm not like sitting there watching. Was it on? Yes.
Okay, so you're going to have to, it doesn't look like Novo Nordisk is really up that much.
No, but it was. So something happened with Novo Nordisk and Hims.
Yeah.
Hims. This is breaking news from, and I love it. Thank you, Frank the Great. He totally keeps us in line. I only heard that Novo had something to do with Hims. So Hims has to stop their Wegovy because of Novo Nordisk.
No.
Yes.
I don't know. I mean, I don't know what to do with my Hims stock now.
Take a loss.
All I know is I got to get rid of TP's correlation.
Oh yeah, you got to get rid of that. There you go. When are their earnings? Because why does the 55 rank? Is it because it's all the way down?
Dang it. And Logan's got this in his account too.
Well, if you liked it at 50,
you love it at 17. So they do have earnings February 23rd. There's a lot of premium in these options, priced almost as if this could be going to zero.
Facts, as the kids would say.
How many picks have I made that have gone to close to zero?
A lot. But that's okay. We all have.
Okay, I can name them. Spirit Airlines.
CLF, but CLF came back as something else. It's like reincarnated as something else.
Cliff was never one of my picks. Like Cliff and Walter Energy and Cliff's Natural Resources might have been something we were in, but it was never like, oh, this is like my pick.
Oh, yeah, your picks. Spirit Airlines is one. Him is pretty close. What else did you have to go to?
JC Penney.
Yep. There's other ones. I mean, you believed in these you believed in these stocks.
With all my heart, Liz. With all my heart. I thought Spirit. Yeah, I don't know.
You met a pilot in a pool, and all of a sudden, Spirit Airlines was like, where you were going to send your kids to college. I was like, whoa, okay, all right.
You know how there's those books like The People We Meet on Vacation? I should write a book of like my stock picks from vacation, because so many people on vacation give me their picks, and then I bring them to the world on our show, and some of them have really not worked out.
No, but I'm telling you, one of my favorite things you ever did was bring me your brother, because that Oklo has been the gift that keeps on giving. Even though it's down a little bit, I'm protected.
Okay, so my brother is out right now. He's on a plane right now to go see he's going to like this big nuclear convention.
Ooh.
So
Did he come back with some stuff?
Yeah, I don't know. We'll see, because when I talked to him yesterday, I don't know. I'm not going to say anything about Oklo, but he was just, again, a lot of players in the game, a lot of people trying to get into this nuclear game. But my husband was just at a convention where they were talking about the people who are going to like clean the nuclear waste and turn it into something else.
Oh, the chat. I want to say thanks to the chat. NVO is suing HIMS.
NVO is suing him.
Yes. Thank you very, very much.
But if there's something happens and they don't win and the lawsuit turns around, HIMS could skyrocket right back up.
It could, but they did stop selling that drug, Wegovy. I do know that.
Okay.
So, I don't know. You're right. You keep believing. You keep believing. But I mean, honestly, look at this. There's so much premium 55 rank. Do something in here now. We need a position. We've been talking about HIMS for so long. This show about trading. Let's put something in now.
All right. Do you want to sell the 15 put for $1.45?
Is it cash? Oh no, my gosh.
Oh,
yeah.
God.
Yeah, I do.
Where else could you get a 100% return on capital?
Doesn't that seem insane?
Yes.
Okay, yeah, I do.
I'm going to get $1.45.
So let me ask you this. Would you ever want to do
no. Yeah, buying power effect.
Yeah, that's what I'm saying. It's exactly what the buying power effect is.
I mean, that doesn't make any sense. Do we have another position?
Would you want to do like a big lizard or something in there, or a jade lizard in there and get pretty far down? You could even do it before earnings. I don't care.
No, because then if it shoots back up, we're not going to make any money.
Well, I was going to say do it before earnings, or do a downside ratio. Look at they're all the same price and your earnings is good. Do a downside ratio spread. You can pull it right up. Get your break even to the 15. Go with 17, 16. You know what I mean? You're getting your break even to about where you were. We're selling that 15.
$1.37.
Yeah.
Sure. $1.36. This is killing me, HIMS. I'm not that happy. Honestly. I saw the Super Bowl commercial. I was invigorated. I thought maybe this is going to do something really good for my HIMS stock. No, nothing.
Nope.
Nothing. Nothing good. Nothing.
It's so funny because you've been talking about this commercial for 2 years and I still can't see it.
Okay, go and search HIMS and Hers commercial from the Super Bowl. It is so I will tell you,
it's exhilarating.
No, it's sad, and it's about how all the wealthy people, and we live this with our friends. All the wealthy people are getting like concierge medicine, doctors at their fingertips. They get their hormones tested, and these hormone they're getting all this stuff because they're paying outside of insurance. They're paying outside of the medical system, and they're getting all this service right to them, to their homes. This care that regular people can't afford, which you see it, I see it, we see that world. Like they're all doing it. I'm not, because
she means the people we were in Mexico with.
yeah, like the 12 people that went to Mexico with us of our 14. So
the 2 of us are not. Yes.
Yeah. And and how, shouldn't this be affordable to everyone? And that's what Hims and Hers is trying to do.
Okay, well, once again,
anyway, that's what the commercial is about.
The show.
That's what
about the show. Jenny had one lone tear streaming down her eyes during the Super Bowl because this was sad, and we came up with a trade because of it.
So we sold a put in Hims. Push that out onto the follow page, Liz.
Oh yeah, I forgot about that. I have a job to do. Sorry.
Yeah, one job.
One job.
One.
I will do that immediately.
Okay. So that's Hims. We've got a lot to do today. I have 2 trades in my mind that I want to put on.
I have an email from Joe, and I want to give Joe a huge shout out because this was the most concise email I've ever gotten in my entire life. And Jenny, you would have gotten it too, but Joe, she's JENNY, not JNY at tastylive.com. So I just want to let Joe know that. That's why you didn't get it, and I knew you wouldn't have gotten it. But he sent us a video, so I would really understand what was happening. I watched the video, and there's an email that I want to go over to. So that's one thing that we're going to do today.
Okay, perfect. We'll go over that. Yes, I'm JENNY. My trader badge was JNY, but my real name is JENNY.
Come on, put vowels in her name.
And speaking of, I'm bringing something to trading floor. I found my very first ticket.
You did?
Yep, I'm going to bring it tomorrow we'll be live from the SPX pit in the SIBO tomorrow, and I'm going to bring my ticket. It's my very first ticket, and I wish it had a date on it.
You don't have a date on it?
There's no date. No, there's no time. It says volume, how many contracts you did, the stock.
How many contracts did you do?
2. It's my very first ticket. So your volume, your stock, then you circle the expiration month. Yeah, because there are only months.
And wasn't it like it was a different color if you were buying or you were selling?
Yes, this is red because I was selling. If I were buying, it'd be no. The reds are calls and the green papers were puts.
Okay, I knew it was something like that.
I don't know. This says sell call. This is sell call. I'm gonna bring it tomorrow.
Yeah, because do you remember they were like a couple different ones? Like you'd rip one off, you keep one, and like if you were selling, you gave the red one, and there was something about a yellow one.
Well, yeah, obviously there's a sell call, buy call, sell put, buy put. Because if this is a red one and right across the top it says sell call.
Okay.
And then you would have to write. So you wrote the premium, you circled the month, you wrote the strike, you wrote the premium, and then you had to write the broker and his clearing firm and the execution time. And
LIZ 549. I remember that. It was my clearing firm number.
And then you had to write your badge and your clearing firm. And it's a lot to have to do to make one trade.
Well, and think about how many errors there were.
I know. JNY 325. Oh, 325.
Then that can't be your first.
No, this wasn't with Timber.
Yeah, that's not your first ever trade. That was your first ever trade on your own.
Yeah, the first trade on my own. I don't want to say. Oh, speaking of, did you see? I saw Thomas Petterfee in an interview on Friday.
Where?
I was watching. I had some other network on, and there was an interview with Thomas Petterfee.
Oh,
I haven't seen him in a long.
That was my first boss.
Yeah, I haven't seen him in a long time.
Yeah.
Okay.
Public service announcement. I know the boys did a 0 to TE SPX study today. We're going to go over another study on when we were on the floor in the SPX pit. But if you did any of it, I did the put spreads this morning and I butterflied them off already. Jenny did the put spread and she already closed hers. So it's been a great day for those.
Yeah. It's been, I put in mine on at 9:10. You put yours on at 9:07. And I think we've gone straight up since.
Yeah.
Because if we do, which I do like to do, I do like to look at the minute by minute.
And wasn't this what Jajun had said? Is like, look at the minute chart, and when it seems to settle down is when you put it on.
Yeah. So when did the minute chart start settling down? Well, I don't know.
It didn't.
Okay. So look.
It didn't.
I put this on at 9:10.
And I'm at 9:07.
And you're at 9:07. So we had a little bit of a dip, rally, dip, rally.
Yeah.
Yeah. We'll see what the day brings.
You know what we got to address too, Jenny? The ES that we did not close on Friday.
I know. We took a look at this ES and we said if SPOOs would end up at 69.25, we could make $4,000 extra dollars.
And we gave away our $150.
Now we need a down move.
Well, okay, so in this scenario, correct me if I'm wrong, because I mean you're running it, so everything's a little bit smaller for me. It can go all the way up to 68.50, which right.
Wait, 68.50 is our long, 69.25 is our short. So we've got 75. That's 75 points there. And then 75 points up from there is 7,000, but we paid money for this. We paid $18 for this. So we really needed at least $18 below 7,000, which we're right about there. But our long will still have something. You know what'll hurt us? I mean, this was a bullish trade and we're going up, but we're going up a little too far.
Yeah, we're going up a little too far. No. Yeah, you can't. You got to go to it, not through it.
But I think because it's $75 wide by $75 wide, and we paid 18, which was really 900. That if it goes through it, okay, there's still going to be something in that 68.50, unless we get so far from that 68.50. Because right now that 68.50 still has, $17 extrinsic value in it. And again, it's a 50% multiplier for ES, so cut that in half.
Yeah.
So there's still some, if we paid, there's still the extrinsic value in that about what we paid for it. So if we just don't, but if we rally every day, rally, this isn't going to be good.
Oh no, I know. And we're pretty, I would love it just at 69.25, but that now we need a big down move. All right, can we do a couple things in here before we get to the email? Sure.
Yeah, before we get to the email. Okay, so silver's up today, helping us because we have this short put. We have the 11-day short put, the 80 put. We need silver up. I don't want to just every day root for silver up. And I know I said I was done with my naked options in silver, but I actually jumped back in with another short call in silver just to kind of offset my short put. I don't know what you think about jumping in with another short call.
What short call did you do? The 100? The one we just took off?
I went to March. I wanted $3. I wanted $3.
It's still going to be about the 100.
Yeah, close to $3 for that 100 call in March. What say you, Liz, dear?
I don't like having a silver position on in March, but it's the right thing to do. Why don't you do a call spread?
We're not going to get any call. Here's the problem with metals. Huge call skew, you get nothing for a spread.
I mean, you could do a $10 wide and get $1.50. I'd get $1
wide for 89
cents. You're getting something, although then you're adding buying power to it.
Yeah. We don't have to do it. People ask me what am I doing with my silver? This is what I did. I added on a March 100 call onto my short put because I can't just keep fingers crossed hoping for silver to go up now when I was bearish on it.
But you know what I like? Do you know what I do like? And I don't know if this is right or wrong. So just you bear with me here. I like, I didn't mind being short silver with what's the other ticker?
SI.
No, where you're long it, but you're actually short. It's the ultra.
Oh, but that one, that's not a long term. Those super leverage trades are not long-term trades.
No, I know, but you can pop in and out of it. That's what I'm saying. If this turns around a little bit, then you're out of it. And it's something against your short put. So I closed mine. When it went up, and I'm probably gonna reload again.
So reload in ZSL. Now
it's just something to think about instead of SI. So these are two things you can look at and they can kind of bounce around a little bit.
So basically what would happen if we have the short put in SLV right here. Or
Jenny, freaking sell something in the 11-day. I just don't like you can sell a call or a call spread in the 11-day. I don't care because I don't think it's what bothers me about that trade is the 39-day ish of the SLV. Do you know what I mean? So go who cares? Go up to the 90.
I mean, we took off our 100 for $1.50.
I know, but
that's why I don't want to. I don't know. Then we'll do nothing. Because I don't want to sell an 11-day call for 50 cents.
But I don't mind loading in ZSL because you had the short put in the ZSL. Just buy.
Yeah, but we're already so at such a loss here. The one isn't going to wash the other. I mean,
no, they're not going to wash each other. That's what I'm saying. A call spread wouldn't wash this put though either.
Yeah. No, I was gonna I don't know. But we could just leave it. I don't think that ZSL is only making money on a bit when we get a big silver down move.
I had a decent chunk in ZSL.
I mean, what did I make in ZSL? I had like 2,000 shares of ZSL. I made $700.
Did you sell it?
My point of the ZSL is I needed 2,000 shares to make $700. What are we going to buy in ZSL? Like, in this show account where it's for demonstration purposes only, and we do one lots, 100 shares of ZSL isn't going to do anything for us.
No, it's not. It's not.
So that's my, like, the one lot of ZSL or 100 shares of ZSL do nothing for us. We need thousands.
Yeah, but you don't want a 1-for-1. You don't want your hedges to be identical. Like I don't mind. Like I said, I don't mind selling calls. I just don't want it in the 39 days.
I just think in order to make anything in the ZSL, you need a lot, because here was the run up. So it ran up from, we got the close was 226, and then it ran up to where's the high there? The high on this day, 227. And the day before it was at, I mean, this range is so little, you need thousands of these.
I know. So, I mean, if you want to sell a call in it, go for it. I do not care at all.
We'll just leave it. We'll leave our put. Okay. But when people ask me, what am I doing with my silver? It's different than what we do here.
You have both sides. I'm long silver. So, I mean, that's the hard part for me is I did diagonals in silver when it went down because I wanted to get back in and I thought it was too high.
Yeah. So, okay. Another thing that we wanted to get back into, or we talked about, and I don't know if you still want to get back into, but we had that big lizard in 6A, which all expired. It all expired on Friday. So
wasn't it an upside where we wanted it?
No, it was just a big lizard where our risk was to the upside. It was a big lizard where our risk was to the upside. And that all expired on Friday. And that expired at a full loss. And so I didn't know if you wanted to stay in 6A and get in with just a short call spread or another big lizard or something else, if you wanted to stay in 6A. Oh, wait. Hold on. This is why we're seeing nothing. I wish we would have someone in the chat say like, okay, girls, you're in the 1 minute chart.
I was like, I made so much more money than that in ZSL.
I know. It's like it had a 1 cent range. You need thousands, but you do need that.
Honestly, in my mind, I'm thinking I'm not going to correct her because I'm looking at the chart.
Okay, and now I'm back to a 1 day, which makes a lot more sense. Okay, so this makes a lot more sense, and we're looking at 6A because I know since we put that big lizard on with our risk to upside, 6A has done nothing but gone up. This makes a lot more sense.
So I'm not familiar with, and shame on me. I like to stick with what I'm familiar with. I'm not as familiar with these products.
Well, I mean, 6A, this is against the US dollar, right? So
I know. I'm well aware. But like I said, I'm not as familiar with them. Like you open it up, it's a little bit tricky for me. I don't necessarily, does this go like the commodities? Like could 6A go straight up like silver did? Do you know what I mean?
So I believe we're at, let me see. I remember, like I said, I heard Glenn talking about this on air one day. I believe we're at, highs. I don't know, when was the last time we've reached this level?
Right there.
In 2023. 2023. So
I don't know how it was before that. Like 2026, it's, you know what I mean? Like, if you went back, it was higher. I have no idea. I have no idea how this thing operates. I have no idea. And there's no, what's the IV rank in it? Let's base it on that. 41, sure.
41. So I would say just if we wanted to keep, because Friday that was expiring, and if we wanted to keep a position going, it's not that much. Like you can spend $110 using 3
Then it's something, then I was just telling my son this, like the only way you learn is by doing. So get in so I can keep an eye on the price, because my mind works where if it's not in here, I don't know it.
It's like any of the currencies. We trade 60. We've traded, we trade other currencies, and we have some Tasty FX positions here, but we definitely don't have a 6A position.
Yeah.
What do we have here? Just the shekel, the euro, GBP, the Great British Pound, and then the pound versus the dollar.
Okay.
So
that's shekel. Shame on you, shekel.
So I'll just let this work. I'll let this short call spread work in 6A, the Aussie dollar.
Yeah.
Okay.
Okay. Can we go into Joe's email just because I want to make sure that we get to it?
Sure. Yes.
Okay. Joe, like I said, I want to give you a huge shout out. It was very clear and very concise. And his question was about the Bob on Fire trades. Okay.
Which the Bob on Fire trade is.
So let's go to Microsoft.
Yeah, do you want to go through one?
Yeah, go to Microsoft. So this was his question. He had an exact question, and I wrote down the strikes. So his question was about the Bob on Fire trades. He really likes them, okay? So you go all the way to January, and I don't know if the strikes are going to be the same, but in the beginning, he started with the 400, 450 call spread.
This is Joe's trade?
Well, he started with the 410, then moved into the, yes, this is Joe's trade. So 400, go to the 400, 450, 400, 450, and then sell 2 310s.
And I mean, this is similar to the concept of Bob's trade. Bob's trade is...
This is Bob's trade.
Sell a call for half the price. Sell a call for half the price of the call you're buying. So here, if you're paying, $58, you could go further.
No, these were his strikes that he used. And I'm sure it was it was 50% of the time. He used all Bob's parameters. He referenced Bob on Fire. He kept referencing it. And then he was selling the 310, 2 310 puts. So this is all farther out in time. He was also mentioning that he was in portfolio margining, so he was only using about $4,000. Okay. So now his question was, hold on, he wants the good, the bad, the pros, and the cons of this. Okay. So he said, I wanted to get my break even of my put closer to 300, because that seems to be some type of resistance level, or if you owned Microsoft at 300, hasn't been there in years. Okay. So then he switched to strikes. So then he wanted us to compare and contrast these strikes to this strike. Okay. Then he had the 300 put. So take one down to the 300. Okay. And then he brought the call spread all the way into the 350, 370. And he said, what is the biggest difference? Relay the pros and cons between the 350, 370. So he narrowed it a little bit.
Wait, so he's totally in the money with this call spread?
Totally in the money. So his question was, what is the difference between doing the ones that are in the money because it moves everything down farther?
So 353, your max profit, right, is $2,200. You've got a lot less profit potential.
Yeah, so you have a little, but it moves your break even. He was happy with that. And I was just trying to break down in my mind, and it was just so much easier to talk through with you. Mm-hmm. So you've got that in the money call spread.
So basically with this trade, you don't need Microsoft to go up. Like with Bob's trade, in order to make your full profit potential, you need Microsoft to go up. It's a bullish trade where you want the stock to go up. This in my mind is this. You sell a put spread and sell 2 more puts. It's like short put spread, short 2 puts.
Where you're going to keep that collection no matter what.
Yeah, you're just going to keep that. And that's how I would set this trade up because the out of the money.
You could use the other side, but conceptually, what I love about Joe's critical thinking here is he's like, I just want my break even lower. Could I shift everything down, give up some of my profit potential if I can sleep better at night knowing that I'm getting it at 300 instead of 310? And I was like, in my mind, I was like, sure. If you know where your risk parameters were and he was using the curve view. So go to the curve view here.
I'm going to go to the curve view for both. So again, this is Microsoft doesn't have to go up at all for this trade to make max profit. And it could actually go down in order for this trade to make max profit.
But when you're giving up, the gimme and the gotchas, you're giving up your profit potential for that.
Yeah. So here you've got what, $1,500, No, that's here. You've got $2,500 in max profit potential.
Well, it does have to go up to get to the $2,500 in max profit potential, but not in the beginning.
Wait, we've got something else in Microsoft. It shouldn't have to.
Let's see.
Yeah. Okay, there we go. We have a position, so it shouldn't have to. Like here's Microsoft, and you'll make your full profit of 25, 22, 37 anywhere to the upside, even if Microsoft goes down to 370. It just has to stay above 370.
So it's pretty interesting, isn't it?
So, but when you buy that deep in the money call spread, the reason I switched it to a short put spread, because these markets are much tighter. Typically, the markets and the out of the monies are tighter and easier. You have an easier time getting filled. And that's one of the market measures from last week on, talking about liquidity. And like here, it's $24 at $24.30, so 30 cents wide versus $76.10 at $77.80, $1.70 wide. So with that trade, if I'm going to set it up, I'm going to use all out of the monies.
Yeah, no, I agree with you there. But I didn't hate the concept of bringing it down if you know you're giving up some of that profit potential. And especially, like I said, Joe was in PM account, so it was using less capital.
But this isn't, so this short $20 wide put spread, he wants his break even at 300.
His break even's at 300.
You're probably not getting that much from the put spread.
Yeah, you're getting quite a bit.
So
60, you're getting $1,000, $2,000.
But you could just sell 2, 3, 10 puts and get your break even to 300.
True.
Like you don't have to get that fancy. You could sell 2, 3, 10. You could sell, like, instead of 2 puts at the 300, move your put up a strike and sell 2 puts at the higher strike.
Yeah.
And then you have till 310. Then Microsoft could go all the way down to 310. You still have the risk of 200 shares. Your break even still 300, and you've got more room to the downside.
Yeah, I mean, like I said, I don't mind it if you wanted to do it with the call spread, because I do think that gives you quicker, in my opinion, and Bob is the expert, clearly, Bob on Fire is the expert, that call spread gives you that little oomph, and you can get paid a lot more than just the puts. Don't get me wrong, the puts decay, but if you get the move you're looking for with Bob's trade, you can get out for 50% pretty quickly because it's the puts and the calls that are working together.
And with Bob's trade, if we set it up right now with his parameters, it's, buy one at the money call, sell a call for half the price. So we're looking for a $27 call.
Right.
And
yeah.
then,
I mean, it's pretty close. Yeah.
And then sell 2 puts to pay for this. So two $15 puts.
I mean, it's not too far off of his original. Do you know what I mean? But the prices are different.
And I just wanted to show on the analysis page how, in order to make this money, you see Microsoft's trading here. And in Joe's example, he's giving himself lots of room to the downside.
Keep in mind, the prices were different when Joe was giving it to us. So he set it up with their original parameters of Bob on Fire and just shifted it. And so in my mind, Johnny, take these strikes and just shift them down. I want to see what happens until you have no credit. Oh, that's a debit. That'll do it right there. But it wasn't too far.
No, but anytime we set up Bob's trade, you have a small amount of profit potential to the downside if you're taking in a credit, but your chunk of the profit potential, which is a lot bigger, because here max profit 7,000, the Microsoft actually has to go up to get to that.
And that's what I'm saying is your profit potential, or at least a portion of it, a percentage of it, can get hit pretty quickly. I know we were talking about just those 2 puts, and I think that's a great concept too, if that's where your break even is. But you get paid out a lot quicker with both, with the 2 puts and the call spread, because in conjunction, if you were just going to take, I don't know, I know your max profit is 7,000, but say you were going to take 25% of this, $2,500 out, you can get it pretty quickly if Microsoft goes up to like 440.
Because it's a very wide call spread. It's a very wide call spread. In Joe's scenario, his call spread was only $20 wide, where this call spread is $70 wide. Yeah. So you're not on a $20 wide, on that $20 wide, which I believe was.
So his original was 50. He went from $50 wide, from the 400, 450 to the 350, 370. So he was $30 or $20 wide versus the $50 wide.
So it's the same thing as this put spread, 370, 360. So it's like you have those 2 short puts with this additional put spread of $600. If Microsoft has a big rally, you could probably take half of it. So $300 out of that, in addition to whatever you get for your 2 short.
Yeah, you can get out of them quicker. So I just wanted to talk through it. I appreciate the email, Joe. Thank you very much. And he seems very clear of the concept. Like Joe was he was so cute. He was using Bob on Fire does this, the Bob on Fire trade. It was a great video.
And I think, like always, if you want more room and a lower break even, like you said, Liz, for every gimme, there's a gotcha. Less profit potential, narrow that call spread. There are other ways to get more room. Yeah. And I like that he had his idea of in Microsoft 300 is his
that's
level.
where he said he can sleep it. He literally said, and I think it comes from you, he's like, I can sleep at night knowing that if I'm long it's at 300. I was like, great.
Hey, if I knew Hims was taking such a tumble, I don't know if I would have slept last night. Oh man. Okay, so that is Joe's email. As far as today goes, Liz, glancing at
what is Bitcoin doing today? What is our IBIT doing?
IBIT's only down 28 cents. Not bad. Not bad. We can see Bitcoin here is 69,449. At least it was worse when I went to bed last night. I think when I went to bed last night, was it 66,000?
Yeah. It was bad last night.
Last night it got pretty low. So, and do we see overnight trading in this?
I don't know.
Oh, look, 60,000.
Yeah, I think that must have been overnight, right?
Yeah.
It doesn't close.
Right. So I know when I went to bed last night, I was like, oh man. Oh no, that's Friday, 2/6. That's Friday. So we don't have the overnight in here, because there's no Sunday. February 6th was Friday.
These are the futures. So I know Bitcoin doesn't close, but I don't know about the futures. Do you know what I mean?
Well, yeah, I don't know. I don't know. But yeah, that's just Friday to now. But I know it didn't look great last night.
Yeah.
So speaking of that being Friday, a shout out to my dad. Happy birthday to my dad. His birthday was yesterday.
Happy birthday. He's the best.
Yeah. 77. 77. So
he doesn't look it. He seems very young to me.
He is. So I'll tell you, you talk about Novo Nordisk and Hims and all these weight loss drugs. So they put him on one of them, and I'm not going to say which one, but it didn't work. Like, he wasn't losing any weight. He was on it for 8 months or something, wasn't losing any weight. They switched him to a different one, and he's lost like 30 pounds.
Really?
Yeah. Yeah, he looked. I haven't seen him. I mean, not that I haven't seen him in a while, but since he switched to this new one, he's just dropping weight like crazy.
Wow. I mean, I like I said, I thought your dad always seemed so young to me.
He well, DJ, drummer, musician.
I know. We're talking about him in Mexico. I was calling him Tunes.
we went away for his weekend. I went away with my mom and dad for the weekend for his birthday, and there's bands playing. I think he was up till 3 a.m. Yeah, he's still living the rock star life.
Oh my God, that's awesome.
Right. So, okay, I'm getting this back because
we also have earnings today, Jenny, that we're going to want to go to Twitter because Bob on Fire, we do love Bob on Fire, also has provided us with the earnings list. There's other ways to get them, but we do love our Twitter peeps. So thank you very much, Bob, for doing this. He kind of vets it for us.
Yeah, Coke, CVS, Spot, Datadog, and what's MAR?
Marriott?
Maybe.
I believe so.
Maybe. Yeah. That's our train conductor stock.
I know, but he's gone right now. He's in Mexico right now.
So that's his. I think that's one of his biggest positions.
Yes, that and JD. Good for him. Congratulations on your wealth there, train conductor. Because look at that.
So I don't know what we do, but he's on vacation. He won't be watching. Hopefully Marriott goes up.
You know what I'm saying? Do you know most Gen Pop people don't even know when their stocks have earnings? Is my guess.
Yeah, probably. I'm sure he has no idea Marriott has earnings.
No, I'm sure he has no idea. Like, do you know what I'm saying? If you're not a trader, you don't know when stocks have earnings.
Right. You're not paying attention.
Or even know what that means is my guess.
So do we want to do something in Marriott in honor of our conductor?
It's pretty high already.
Yeah, and it's 327.
And it's got an 18 rank. You can do an at the money calendar if you want to see what it's.
If it's cheap.
Yeah, go give him a little boost. Go to 3.
Yeah, we'll give him a little bit. We'll be slightly bullish.
Sure.
$1.50. $1.50.
Hey, that's what I won in the pool. Ship it.
It jumped from $1.50 to $1.85.
It's pretty wide market. You can't.
Oh my God! You know what? Here, we're not doing it. We're not doing it. I'm jumping right into this. Why liquidity matters.
There you go. Good segue. Excellent.
Why liquidity matters. So we're not going to trade Marriott. It's not liquid.
I mean, when we both saw $6 at $8, shame on you, Marriott market makers. Shame on you.
Shame on you. I guess. Yeah. Like who are the market makers in Marriott? Like, look at, what kind of tight markets I used to make in this crowd. I don't know who the Marriott, like, where is that even, or is that all electronic?
I'm sure that's all electronic. So a lot of those, like I said, back in the day when there was the super pit, there were so many electronic markets because they had to put them all together. The only open outcry are the ones that are super, super liquid, right? Because they need it.
Right. Okay, liquidity is a fundamental requirement of efficient markets and is the reason why our assumption of efficient markets tends to hold in research.
Yes, and you noticed our violent reaction when we saw those markets.
And this is why most of our studies were researching, in SPY, in Apple, and in products that we know are liquid markets. We're not doing any research in Marriott or, in products that are wide markets. We just don't trade them.
But Frank says lots of pits in the old days had some crappy market makers. I was like, I love Frank the Great. He's the best. Okay, and today we will discuss the 2 key characteristics of liquidity as well as the dangers of trading illiquid underlyings. Danger.
You can't get out. You can't get out. You think you got a profit, you can't get out. Or
wait, didn't we do a video like that where it's illiquid? You might be able, like, there's a pool full of ice and a person tries to get in and they can shimmy their way in, but it's real hard to get out.
Yeah, you fall through the ice. It's easy to get in.
Yeah,
hard to get out. Hard to get out.
Yeah.
Get out. Okay. Hold on. Here we go. Study SPY and IVV and QQQ and VGT.
Okay, so IVV and VGT are, I believe, SPY and QQQ proxies, right? So can you just go to the trade page, just because I like to do that with us back and forth. So SPY and IVV, so do that real quick.
So IVV is iShares Core S&P 500 ETF.
Yeah, there's so many of these out there that are proxies to SPY, but SPY is SPY. It's so liquid. You know what I mean? It's the S&P 500. So then,
and what was it? QQT? No,
go to SPY after that because those two go together. So I just want to show how many shares have traded. SPY 29 million. IVV there wasn't even a million next to it.
IVV is
there's a million. Fine, 29 million is a million.
A million. And if you look at these markets, like if I just go to March, IVV, 970 at 1390.
It's terrible, but I mean, why try to reinvent the wheel? Just use SPY.
All right, Lil, Lil. I'm sorry, I'm calling you Lil. Liz.
It sounds like you're slurring my name. It's fine.
Lil, we need to figure out, and this is going to be you and me. Don't let me forget. We're going to get our production team helping us how to get it so that our arrow is showing to the viewers,
to the rest of the world, and not just me. I can see
because I'm pointing to things, and I can see on the live footage there's no arrow. So. Okay. We've got to fix that. We have to remedy that.
We'll remedy that.
Okay. But we're just looking at the monies. At the $6.95 call, $14 at $16.50. Now you go to SPY, and you go to the at the money call in March, $14.18 at $14.22.
You're looking at 2 to 3 cents wide. Look at the 694 put. It's 11.98 at 12. They're 2 cents wide.
Yeah, they're 2 cents wide in a 39-day option and a $700 product.
Yeah. So I just want to. We can do the triple Qs. I'm sure it's gonna be the same thing.
We don't need to go through.
But I just thought while we're doing this, we want to show what we're talking about when you're saying SPY versus IVV. Okay.
Okay. So SPY versus IVV and QQQ versus VGT. Hey, I guess I could probably guess the results of this study.
I just want to see how much you're giving up. I know you're giving up a lot of money getting in and out. I just want to see the actual number because I'm assuming it's going to be in numbers, right?
All right, let's see. At the money put and strangle in March. Find the 60 months correlation of the price, daily volume, bid-ask spread, cost over theoretical mid.
Okay, wait, before you go any farther, and I love Kai, and I love that he gives us these and the market measure studies because people really want to know how the sausage is made. I don't think this needs to be overthought. Just like in Marriott, when Jenny and I opened it up and looked at the money options, and you could drive a truck through those, close it up.
Right, and
it doesn't need to be overthought.
And we have so many people who say, I want to trade this or I want to trade that. And in my mind, if the markets aren't liquid, it's very hard to use options. You know me, I'm a big fan of Birkenstocks, big fan. And when Birkenstocks IPO'd, I said, oh, great, I'm going to trade this forever. And I quit trading it because the markets were just too wide. It just didn't make sense. I was losing money with my rolls, rolling every month. I was giving up money with my rolls. So I stopped trading it because the markets were just too wide, even though I loved it.
That's a true trader. Like, just because you love the product, you'd rather make money.
Right, right. And my favorite commercial last night of the Super Bowl was the Dunkin' Donuts commercial. And how many times have we heard people want to trade Dunkin' Donuts? Well, the markets are just too tight.
Just me.
I mean, they're just too wide. The markets are just
I love Dunkin' Donuts so much. I keep being like, now? How about now? Now? How about now? We can't.
I know. Yeah, the markets are just too wide. So unless like the whole world starts trading it, the markets are too wide.
True.
So, okay.
They discuss the results by highlighting liquidity differences and explaining the risks of trading illiquid underlyings. All right, moving on.
Okay, here we go. The two main characteristics of liquidity are high volume and low bid-ask spread. We just showed you both of those.
And it's very similar to look at this. It's 28 million contracts versus 1.5 and this SPY versus IVV. So it's very similar to what we were just looking at. Now, granted, this was done last week, but it's same.
Yeah, it was the same. It was almost the same. This could have been done today.
Yes. And you take a look at the bid-ask spreads, it's very similar. You're looking at a penny wide versus $2.80 wide versus 5 cents wide on the QQQ, and VGT is $2 wide. That is not okay. And those two things are not created equal.
No, you're giving up too much. And so this is a great reminder to everyone of how important liquidity is.
But it's just like, what is happening? Wait, Jenny, let me ask you this. Why would somebody create IVV then? We have SPY.
Okay, so I do think people out there in the financial world create products to sell for their various portfolios. Being on that board where for the diocese where we had a lot of money to invest, and we'd have all these people coming in trying to sell us their product. Like, we'll put it into this. The fees are XYZ, or we'll put it in that.
Do you think there's less fees in IVV than SPY? Maybe.
I think there's someone that created it and they're trying to sell it to people or put it into portfolios or somehow. I'm not saying I don't think there are less fees, but I think there are a lot of people in the financial world trying to sell people something.
I know, but as somebody who's on not being bought by these people who sell it, you have the choice. We are not market makers anymore. We are market takers, meaning I have the choice to go into a liquid product. I don't want the market that you can drive a truck through. As a market maker on the floor, I want it to be an IVV because I'm going to make $2 every time I make a trade instead of 1 penny.
But I think there's money to be made in some of these funds, just like how we were contacted to make a Jade Lizard fund, right?
Yeah.
There's money to be made in these funds, and if people want to make them, fine. There's not that many people trading.
No, but in full disclosure, the IVV, in my opinion, if you go back to that last slide, can you go back one slide? It says they're identically priced underlyings with 100% correlation to each other. They just created the same product.
So like whoever made that, they trade about 1.5 million contracts a day. So they're making money.
Yeah, they are making money. They're doing something.
But for us as traders, as retail traders, and we have a choice, we choose SPY.
Yes.
Or SPX or XSP, or we've got a myriad of choices.
SPY, SPX, XSP, ES, and MES are the 5 biggest. Thank you very much, Ajit.
Oh, thank you, Ajit. So the takeaways of this, liquidity is fundamental to the success of retail traders because the lack of it can cost traders a large % of their returns.
I mean, when you think about it, it's not the end of the world if you say, it's kind of the cup of coffee effect, right? Jenny and I have talked about this hundreds of times, but it's not that big of a deal if you're just one's in and one's out. So if there's a product that I want to get in that's illiquid, fine. I'm in it, I get it, but it's not something that I'm going to be doing month after month after month after month.
And I usually like to get in with a short put. So if I say, I really want to buy this stock, I'll sell puts until I get into it. But then once you're in it, and if you're selling calls against your stock and the calls end up in the money and trying to roll them, it can get to be a hassle.
It can get to be a hassle. All right. Is that the takeaways?
Yeah. The way to gauge how liquid and underlying is 2 metrics. Look at the bid-ask spread. Look at the volume.
Yep.
I
think don't overthink it. I say open up any option. Look at the at-the-monies and the standard option and look at how tight it is.
So let's go to, I just want to see, and things change, right? Things change. If something becomes very active, it becomes more liquid. So sure. I just wanted to take a look at Birkenstocks. I haven't looked at it in a long time. 325,000 shares have traded. My guess is these markets are still wide. That's my guess. So if I go to Mars.
Yeah, they're too wide.
They're 170 at 230, and there's not a lot. Like if I tried to work something, if I tried to work a $2 offer, I'd have to probably wait for the stock to move to get filled.
Yeah.
And look, but I'm glad I looked at this because at 38, maybe I'll get back in. So where did it IPO? It IPO'd right. Yeah. 41. And then it rose quickly up to 60s.
But so, to Jenny's defense, in the words of Landman, you understand the rules of the game. You really need to understand them to bend them, but you definitely need to understand them if you're going to break them. So you understand the rules and you know what you're giving up if you're going to get in occasionally by selling this just to get put the stock.
If I thought, I wouldn't mind getting more my Birkenstocks underlying, stock back in, I'll start with selling puts until I get put the stock.
Yeah.
Now, it's funny because a lot of people don't understand that. And I'm helping my in-laws right now, and they wanted some, high dividend paying stocks in their portfolio. And my preference would always be just sell at the money puts until
I'm saying somebody who doesn't understand options doesn't get, you're just selling the put until you get put the stock. You're going to be up more money than if you got put, than if you were long the stock. The only, I tried to explain this to my brother, but he's like, but what if it goes from 38 to 48 and I'm just short the put? I was like, well, then sorry, but you made some money.
But for someone who sells covered calls, someone who wants to do covered calls, who, wants that dividend and wants the extra oomph of the premium from a covered call, they're not going to benefit on a massive rally either.
No, but people, a lot of people don't, people like lay people like my brother, don't sell covered calls. They just want the unlimited profit potential in lots of things.
And again, it works sometimes, but...
Let me turn that off.
What was on?
My neurologist is calling me.
Always during the show. I know you have a note in your file that says don't call between 10 and 11, but that's what you told them. Somehow there's a note in your file that says
only call between 10 and 11.
Only call between 10 and 11.
That's correct. It's kind of like your note on the door. Do not touch. I was like, I gotta touch it. do not open.
Try it. If someone's having a party and you want to try this, put a note on a door that says do not open. Everyone
will open it.
Open the door. Everyone. Except there's a couple rule followers. I'm a rule follower. I wouldn't open it.
Okay, but hold on. We only have 4 minutes left, and I do want to see if there's anything else for earnings. Do you want to pop back into Twitter real quick?
Sure. Sure. So we've got Coke, CVS, Spot, Datadog, and Marriott. And we've already established that Marriott is too
expensive.
Oh, and thank you, Fabio, for posting a Hims commercial. Here's one of them. And I don't know if this is the one. This is a different one. So this is a different one than they played at the Super Bowl. The Super Bowl one was about all the rich people paying for concierge medicine.
Okay. Well, I'll watch both of them.
I'll send them to you, Liz. I'll send them to you.
I'm waiting on bated breath for the Hims commercials.
And the government is stopping Hims from selling GLP-1.
Yep. That's what I'm saying. I know they're being sued, but also it's so I don't know.
I don't know what to do. I might just have to get rid of my Hims stock and call it a day.
It's going to zero. I just want to see, because Hood is tomorrow. There's a bunch of them tomorrow, but I want to see Spot and Datadog if you can.
Sure.
And Coke, just real quick. You've got 3 minutes. Spot, Datadog, and Coke.
I don't think Coke has a lot of premium, but
I know Pepsi's been super high. I know all your old school things have been up through the roof.
Okay, Spotify's 418. That's tough.
That's tough. It's too high.
Datadog.
It's not bad.
Not bad. Right. Yeah, not bad. Not bad. Datadog. $16 expected move.
Pretty good for a $114 stock. What is it today?
We can go to the 100 and get $3 at the 100.
You're still inside the expected move for the cycle. Your break even is not.
Do you want to just get $100? 91.
Yes, that's a number I can live with.
Here, the 90 for 100. 90
keep in mind, it is a Monday, so even if Datadog goes down, we have to hold this for the week. But I'm fine with that.
So it's 114 if Datadog plummets on earnings. We'll get in at 90. I'm just gonna look at the chart to see when was the last time it was at 90. Not that long ago.
No, it wasn't that long ago.
But we'll take our chances.
Okay, Datadog.
And 90 put for $1.10. This is $900.
And can then I see Coke, please?
So you'll see. Here's my offer. My 110 offer is working. I'm not going to go down. These markets were a little bit wide, so I'm not.
No, I wouldn't. I would not. I do not chase earnings trades. And then let me see Coke, KO, because I want to see if it's up like Pepsi has been up.
Yeah, it is. Okay. It's like everyone's
Pepsi, Coke, McDonald's, all the snack places are up. It's such a weird. Everybody's selling their technology stocks and buying all these. It's kind of weird.
Well, after everything I ate and drank during the Super Bowl yesterday, I'm going to have to be on a diet. I'm going to have to go back to my Peloton class.
Oh, you mean your tonal class?
Oh, yeah, my tonal class. I'm back. I'll have to be back. Thought I was going to quit it. I got to go back. Yeah, so I'm not going to get in on this kind of chart. We're filled in Datadog.
But we are filled in Datadog. That's going on right now.
So that's our only earnings trade. But again, I'm fine with that. There is enough going on in the market for us to not have to force an earnings trade.
I agree.
Let's take off our circle. This is a brand new trade, right? Or no, is it not? I think we look at this.
Hold on. Let me, I'm not on us yet.
It's not 55.65. Let's see if we could ratchet it.
Sure. Yeah.
Right now, like ratchet is just reestablish.
No, yeah, just reestablish. I mean, we use ratchet for a zebra. We have to use reestablish for. And look at that. We're in good shape there because we can sell the earnings.
So if we close that, I don't know how much we'd be
doing in the same cycle.
Yeah, it would
move it to the 60.
So we 60, but then this one.
Yeah, I mean, you're gonna take $2 off the table. Go to the 66.
Maybe we move it down. Maybe we move it.
No, just go to the 66. You're still taking $3 off the table. You're taking $2.40 off the table.
But we moved our call $5. We're moving our call $5, so we're giving up $2.50 in profit potential by moving the call $5
in 11 days, and then we have another one we can sell.
Yeah, okay.
Or we leave it. I don't care, but I just like taking some risk off the table if you can.
Sure, we'll take $2.40 in risk off the table.
Because we still have, the next thing we could do would be buy that short call back, which we can't yet because it's not there, and then sell another one in the earnings cycle. That's our ultimate goal.
I mean, basically, like, we're not getting much. I know we're out of time. We're out of time. Do you want to look at this tomorrow?
I mean, there's no rush in this. How about that?
Yeah, there's no rush, and we're out of time.
Okay. So, yeah, we are. We're cutting into the other show. Everybody out there, good luck with your one day to dogs earnings trade. That's what we've got in for today. I'll be looking at that. And
remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We'll see you tomorrow live from the SIBO.
Tomorrow at the SIBO.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay
in. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's going on, everybody? Welcome to Option Trading Concepts Live. I'm your host, Jamal Chandler. I'm joined by the one, the only, Ryan Grace. Today, of course, it's Monday. Why wouldn't he be here? Mikey B is out today, so it's just two of us hanging out, man. Immediate thoughts, Super Bowl. What you got?
Boring. And to make matters worse, I had a couple bets under on Drake May, which blew up with that slop action at the end. I mean, he had almost 300 passing yards.
Yeah, he did. I didn't even notice.
At the end of the game, I think it was like 293.
Wow.
Blew up some of my unders there. Had the pick, had the first half under on passing, had the full game. Not that anybody cares, but yeah,
there you go.
That's how it usually works, though. I don't know. Yeah. What'd you think?
I mean, I think boring is the apt word there. I also think that 10 years from now, you will not really remember who won this Super Bowl, honestly. That's kind of the way it goes. But good for those guys for winning against Seahawks.
Yeah.
I was true to my word. Like I said I was going to be. I said if the Patriots got down, I was going to bet. I thought, they had a shot just on the contrarian play. I mean, everybody wanted the Seahawks to win the Super Bowl. Everybody got their wish. It doesn't always work out that way, but a lot of people were leaning Seahawks. And I thought the Patriots as an organization was going to use the recent disrespect, if you will, from the whole situation with Belichick and Kraft to sort of motivate themselves and amplify themselves and possibly win it. But they couldn't get anything done, man. That Seahawks defense shut them down.
Really did. Yeah, I thought the same thing. There was some value on the 4.5 spread that the Patriots were getting. But I think, there's signal in the noise, Jamal. And when you saw Mac Hollins come in like a Halloween costume, I think you kind of knew. All right, it's over. These guys are about to get blown up. Yeah.
I saw that after the fact. Yeah, what was that, dude? Like, come on, man.
I don't know. I don't know.
That was strange.
Yeah. I was kind of hoping. So I think everybody knows I'm a Buffalo Bills fan. So you kind of have to hate the Patriots.
For sure.
Always have kicked our ass, at least in the last couple of decades. But I was kind of hoping it was going to be like Patriots lost 12-0. The Seahawks could only kick field goals, and they shut them out that way. But
there's never been a shutout. We were looking this up last night. There's never been a shutout in the Super Bowl. So it was close for a while there.
Looked like it was going that way.
It was close to being a shutout. And they were close to coming back. I tell you, if he didn't throw that one pick, they were,
4 or 5 minutes left in the game.
Yeah, they had a little something going on that drive, and it just died on the vine right then and there when he threw that pick. It was a wrap. I didn't pay much attention to commercials. I was hanging out at a friend's house. A bunch of us were talking. I didn't pay much attention at all. I don't really know. They were Nick was telling me about one with a bunch of tight ends, and I guess it was related to colon cancer or something like that.
Okay.
Something about tight ends. Go get your tight end check. Something like that. I really didn't see many of them, so I really have no lean towards any.
Yeah, nothing stands out in my mind either.
Yeah. Halftime show. I liked it. It was cool. I thought it was unique. It was definitely different. A lot of people on the field for sure. A lot of celebrities on the field too, apparently. But yeah, it was interesting overall, man. I liked it. It was but yeah, kind of boring game.
Yeah. I want to see a shootout. I want to see a lot of scoring, of course. Defense wins championships, I suppose. But yeah, that's just me. I would have rather
you want to see a
30 to 40,
game, right? Like a little bit of back and forth. It just really wasn't. The most exciting it got was towards the end when they started to try and come back.
Yeah.
It's Monday. You're here, which means there's something to talk about in crypto land. And crypto arguably might have suffered its worst week of the year. Well, that's not arguable. That definitely happened, but it definitely suffered its worst week in quite a while. And maybe it found some support. What do you think?
Yeah, I think so. You have a lot of signs that you typically see when you're bottoming on these kind of very extreme, very violent moves. So we can walk through all of that. But I think for now, just given the move that you've seen, the reversion in volatility, I think for now, you've put in a bottom at 60. And so you probably have this tradable kind of 60, 80 range. Yeah. Nothing's changed with the trend. It's still pretty bearish out there. Crypto has underperformed, to say the least. But in terms of just this persistent selling and that violent unwind that really ended up bottoming out, I think when Asian equity markets open, probably the evening our time, we hit that 60 print. Yeah, Thursday night. So the charts will show you this is probably as Friday as the bottom, but Thursday night, and then we had a just massive counter trend bounce on Friday. So if you were able to trade that, or you were selling some volatility into that move earlier in the week last week, you were rewarded for it if you took those positions off. But if you're a long-term holder and you're obviously long north of 100 or in the 90s, still doesn't feel good at all here. It's been this one-way trade to the downside.
Yeah, there's no doubt about that. Yeah, it was a little scary there, not just for crypto, but for everything, honestly, that over that Thursday night time period. And then we've got a bounce since then. But yeah, it was ugly. When I was looking, I was like, uh-oh. It did not look good overall for a lot of different things. And crypto was definitely no exception to the rule.
Did you see if there was a catalyst for the cross-asset volatility, or was it just that and you're seeing leverage being unwound? It seemed like there was just positions being taken down across the board. You had the whole software stock move.
Yep. I honestly thought a lot of the move last week didn't really make a whole lot of sense, to me at least. I thought it was a little exaggerated. I mean, given the fears, and again, like you mentioned, software, which was, I would say, probably the biggest theme of the week, just the selling of the software names. I mean, again, I didn't understand it. Even those who are big in the AI area were saying this doesn't really make much sense. I mean, if anything, AI is going to use software to get better, to sort of make its responses better. So the whole thing didn't really make sense to me. And I guess you could say that Friday's move was proof of that.
Maybe you just needed that straw that breaks the camel's back sort of thing. Everybody on one side, this big momentum trade, and you inevitably get some unwinds. But I think to your point, it's like the macro environment we're in, still pretty positive. Earnings growth has been pretty positive in terms of earnings per share.
Yep.
You even look at this outside the U.S. and you have a broadening of performance. A lot of other countries are doing very well in terms of their equity markets right now.
Yeah, that's what I've been seeing more recently too. Yeah, a lot of other countries have been doing well. A lot of overseas. I think a lot of those ETFs, overseas ETFs, have been doing pretty well. Or I should say ETFs that track overseas markets have been doing pretty well to start the year, maybe even going back a little bit further. So, yeah, I don't know. I don't know what last week was. I don't know if we see a little bit more of that once again, but it happens in markets, right? I mean, again, last week reminded me a lot of the fears that we were seeing a year ago about DeepSeek. You know, not saying the story was the same, but just kind of the movement that happened as a result of fears. It seemed very similar to that, what we saw in the software names. And so, again, I mean, Friday's move, I guess, is the beginning of the bounce back, and we'll see if we even hear more about this going forward.
Create some opportunity,
yeah,
for sure.
Yeah, I mean, that's the one positive thing, right? Like, it created some trading opportunities. We've had no shortage of that over the last couple of months. And it's also nice for those who believe in seasonality or whatever have you. The idea of the second year of presidency is usually kind of this, either not so great year or not so great trading year. We don't see any signs of that yet starting 2026.
Yep.
Should we go to slides?
Let's do it. Yeah, let's do the crypto market update here. I don't know if much has changed from last week, Jamal, aside from the numbers just being
worse.
Kind of running in place, right? And
Deeper in the red.
About it.
Yeah. So if we throw up our performance dashboard here, we can see just the terrible performance that Bitcoin and many other cryptocurrencies or crypto assets have put in here over the last week, month, 3 months, you name it. The trend has been very bearish in here. We've seen that show up in that monthly price momentum as well. So we've gone from bullish price momentum in terms of the structure to now neutral. As I said last week, if that does break down, that's my get me out and I'm not coming back for a while sign. I am starting to buy a dip here. I was active kind of mid 60s. I've been active low 70s. Had some orders working below 60 that never got filled. But these are levels that as a long-term holder are a bit more attractive to me. I still think we get to new all-time highs. That doesn't mean that it's tomorrow. Typically what we've seen is that within these 4-year cycles, you get ultimately an 80% drawdown on average. This time could be different, maybe. We'll see. We're down about 50%. There's some reasons to believe that it might be different. But typically these bear markets that ultimately bottom 80% down or have historically, they last for about a year. We're 4 months in post that October volatility explosion, leverage blow up that was the catalyst for a lot of this downside price action. But we are at levels where I don't necessarily think you get an 80% drawdown this time. So I think you can start to maybe nibble, to use the term that we like to throw out there. But that said, I mean, again, the trend is bearish. So any trades in here are counter trend, short term. You're looking for the setup that you saw on Thursday, really into Friday. No surprise, we got the bounce. We can talk about that. But that's the way that I would look for it. So I wouldn't really look for these big counter trend trades unless you have those signals. Otherwise, you really just want to wait for this to improve in terms of the price action and get back in the water. Because it's tough to say, where does this go, right? You could easily take a look into the 50s.
Yeah. I had to look up the stat because I remember tweeting this out last week. And this is, I've been saying this for a while, as you know, and it just sort of fit the narrative that I've been noticing myself. Because what I saw last week, it was like the Bitcoin was the fourth most oversold it had ever been. And obviously, that you can include, I'm sure, the other stuff in that being oversold. But the other three were November 9th during the FTX failure, January 13th during the Terra Luna collapse, and then March 12th, 2020, which was basically the worst of the COVID. So again, you put those three together, nothing like that is going on right now, right? And I know that maybe this maybe this sounds weird to other people, but to me, it doesn't sound weird at all. As a result of that, I think that's what gives you a little bit of confidence to nibble, right? Because it's not any one of those three situations. So to me, I'm like, okay, well, I don't know of any news out there. I mean, you are completely immersed in this and you know it all. There's nothing like that going on in any one of these situations, right? Like in this current situation.
There doesn't seem to be.
Right. So to me, I'm like, that's why I've nibbled. That's why I've bought a couple of the Ether contracts here, like over the last couple of days. That's why I'm, MicroStrategy's position, a whole different story. But that's why I have what I have on in this space because of that. It's not like I'm completely steering clear. I'm interested just a bit and I'm nibbling a little bit for those reasons.
Yeah, I think you've seen, just a weak market, which you can typically, in those environments, you can crash from the lows, which is what we saw. I think you've seen a lot of the leverage get taken out of this. And again, when you go back to kind of the peak of that move in terms of the volatility back on Thursday and into Friday, it wasn't like this was isolated to crypto. We saw a pretty rapid expansion in the VIX. We saw some selling pressure in other assets. We've clearly had some volatility in gold. It's just that Bitcoin is a much smaller market cap and it's much, much more volatile. And we were reminded of how volatile it can get. So to talk through that for a second, Jamal, you had mentioned oversold conditions. Yeah, Bitcoin RSI 16, anything sub 20 doesn't really ever stay there. You could go lower, but you typically bounce off of that. Very similar level reached in ETH. And then the volatility signal, I think, was the clearest that it's been in a while. So Bitcoin 30-day implied spiked all the way to about 90%. And ETH went to about 100, pricing in basically zero on the downside. And so when you get those sort of signals coupled with RSI, and you're able to take advantage of it, assuming you have some dry powder, those are what you look for that short-term setup. And again, no surprise that we got the bounce back up to 70. I think going forward, you've got to expect more volatility. We're kind of trading sideways in ETH vol right now at about 70%. So you've seen that that pullback in the volatility, but you're still at very elevated levels. You're going to get bigger trading ranges, of course. Bitcoin could be 60, 80. If you're looking to short this because the trend has been bearish, you could easily get back up to 80 and still remain within that bearish trend. Same thing for ETH. You could see this all the way back up to 2,500, 2,600, and it would still be within that bearish trend. So just trade accordingly. But yeah, extreme levels and some pretty clear signals for a short-term trading opportunity last week. Going through the slides here, we've talked about the weakness in the market. If we just take a look at our expected moves, and some things are changing rapidly here. Vol has come in a little bit, but for the next week, looking for, at least in terms of how the option market is pricing in a one standard deviation, looking for about a $5,500 move in Bitcoin, almost 225 in ETH. I will point out that implied volatility is trading at a pretty significant premium to realized vol. So while we have seen that expansion in volatility, it came in really quickly. I actually think that if you're going to trade this this market right now, you probably want to do that if it's in IBIT or ETH via call spreads or put spreads to express your directional view, because the reality is these things are moving around a lot more than even what the increased implied volatility levels today are indicating. Now, back on Thursday, yes, you want to sell vol at 100% for your annualized ETH volatility. But now that it's come in here, your realized moves are still pretty large. The average true range for Bitcoin over the last 14 days has been about 4,500s, which just within the weekly expected move here. The weekly ATR is almost 9,000. So again, and that can change, and that's backward looking, but realized volatility and the price action that you've seen in here has been pretty violent, to say the least. So just keep that in mind.
Yeah, I'm looking at this trading range last week. 19,000. Like, whoa.
Right? So I don't expect that for this week. But yeah, we were joking about January 14th. This Bitcoin was almost 98.
Yeah.
And then it was 60 just 3 weeks later. Who knows where we'll be in another 3 weeks. It is, yeah, it's reminding us again of how volatile it can be. If we jump to the next slide here, the final one, just looking at relative performance, and maybe no surprise, everything versus Bitcoin in this sort of move is going to trade a lot worse. That's what we're seeing. The last week, you got a bounce in Doge versus Bitcoin. But generally speaking, the trend when you price any of these tokens, whether it's ETH BTC, Solana BTC, or even Solana priced in ETH, those smaller market cap tokens have just been, of course, more volatile and have been underperforming. So the way that I would trade this for right now, of course, you can find a big move. You can catch something like XRP, which traded, I want to say, sub 120 all the way back up to 150. So there are very big trading opportunities at times. But if you're looking to buy dips and you look at this more as an allocation to a position in your portfolio, I think you still want to just kind of probably dollar cost average into Bitcoin, maybe Ether, but Bitcoin is kind of that flight to safety in this world, in this little pocket of the market when this happens.
Yeah, I'm kind of annoyed at myself. Thursday, obviously we saw these big moves. Things were ugly. We do the show, of course, on Thursday. It's live from the Cboe floor, and it was a very busy day. And I did a couple of things in the equity space, and I looked and saw where Ripple was trading, where Doge was trading, where Solana was trading. And I was interested in putting together a little care package, if you will, to buy some. But I was like, you know what? I did a bunch of stuff today on one end, and this was on Thursday. I was like, I'm going to wait till tomorrow, Friday, and maybe do this if we're down again. Well, we had the huge bounce, and I'm like, but I'm trying to be patient in life now.
I think you have to be.
I try to be, I don't try to. Once upon a time, I would do all of those things in one day, and I had plenty of times where maybe sometimes it works, and maybe other times where we keep going lower, and I'm like, I should have layered in and been smarter over a couple of day time period or whatever. That's where I'm trying to be now, right?
Yeah. I hear you. It stings to kind of look back and miss that trade and the money that you would have made there. But at the same time, this is a market, when you look at crypto, that's been in free fall. And if you had stepped in and we were down another 10, 20% over the next few days or weeks, it feels even worse. But yeah, from where we are right now, I'll give you the ranges that I have here on my screen in terms of like volatility derived moves that you could see. Not that you will, but like what's possible or probabilistic more so. So with XRP, and there are these micro XRP futures that you can trade. There's micro ETHs now, and we're seeing a lot more activity in some of these products from the CME that are offered through tastytrade. But on the XRP price, I've got 110 as your downside, and all the way back up to almost 180, 176 is where you could, in theory, go. But we chopped around quite a bit, and now we've been paused right about 140 for the last few days. We'll see if that changes this week. I would expect that we break up or down one way or the other here.
What's that ticker for those micro futures? XRP?
MXP, I believe. Yeah, / MXP, and then MET for micro ETH. I don't know what the contract size for XRP is off the top of my head, but I've been dabbling in micro ETH, and that's 1/10 of an ETH. So it's it's a lot smaller when the price of ETH gets cut in half like this. So you're looking at 10 to 1 in terms of your leverage, your capital requirement here, about $200 to get into a full ETH via this future, which is it's decent leverage, especially when it is moving like this.
Yeah, contract unit 2500 XRP is defined by CME. Yeah, can't find it at the moment, but it's financially settled, which again, cash settled, which is nice. And I'm pretty sure ETH is the same way too, micro ETH.
Yep. So that's it for crypto, Jamal. Anywhere else you want to go? What else are you trading?
Well, the metals, it never stops. We see oil. Oil is moving to the upside actually today, almost up 2%. But what I was really getting at was gold and silver once again making big moves. Saw big changes in that gold to silver ratio last week. Dipped as low as 45, and then by the end of the week, it was upwards of 60 plus again. However, that is changing as we sit here right now. Silver's up 8% today, and gold is up almost 2.5%, climbing over 5,000, at least for the near-term contract. So once again, the metals are not letting it go, and I'm here for it. I like it.
I do too.
I just think this market's a lot more interesting when it comes to the metals doing what they're doing. Last week, gold was positive. I think silver was not. 2 weeks in a row, which really we haven't seen unless you go back to late October, early November is the last time they were down multiple weeks in a row. That's a rare occurrence over the past year and change. Makes you think that silver's poised for a bounce this week, maybe.
Yeah, I think you could get it. The way that I've been playing this has been to sell SLV put options, very, very short-term duration into any pullback. Not doing that here today, of course, but if we get that pullback, you've been able to go out there and sell some pretty high vols. I mean, on a per strike basis with 0 days to expiration, 1 day or so, you could sell 200 to 300% vols. If you go back to that silver pullback, what was it, 2 weeks ago, intraday on, I think it was a Friday, oh my gosh. That was fun. You could sell 700% per strike vol within that 0 DTE expiry. So that's on my radar. But I've got to say, I mean, in terms of just signals and kind of how it's trading, I agree with you. I think you could get a continuation of the move here in silver, but I still think you lean gold for now over silver if you had to pick one or the other. Fortunately for us, we don't, and you can trade these a variety of different ways. But just looking at this as kind of like Delta One, if I'm buying futures here on any dip, I think I'm more aligned with the gold price action.
Agree. And I'll show that chart in a bit. But I have been selling vol in SLV, been short this strangle in here, the 70, 85. It started out wider. Eventually, I rolled down this call, I think from about the 100 strike at one point in time, just to get a little bit more juice on it. But sitting in this, 11 days to go. Hopefully, I'll probably be able to close it this week, and then I still have a one in March, with the 75 put being my downside and the upside being the 100. So, I mean, this vol is 90 vol. I mean, this is way more than double the normal, I'm pretty sure. SLV is typically like 35, 40 vol, maybe. And that's when it's even a little bit elevated. So this is super high. I don't always sell strangles, but when I do, I'm going to sell it in something like this, which is a very liquid name. It is double the normal vol. I mean, let's see what happens. I'm with it. And to your point about gold, I do like this. This is the weekly chart, but if we just go to looking at the daily here, to me, Ryan, this looks like something that has had a correction, and now it's sort of finding its way. As you see, it's sitting above this 1 week moving average right here now. I mean, I think this is heading higher. The one thing I don't know is if it's going to outpace gold. I mean, outpace silver in the same way that silver has outpaced it for a while. I don't know. That's why I don't really personally love doing that spread. I'm not a spread type of person in that way. But when I see this chart, I think this is about to take off higher. I just don't know if it's going to. I think it's going to be a lot more cleaner technical setup. I don't think it's going to get the surge immediately to this recent high, but I think if it does it slowly over time, I mean, we could possibly be looking at 6,000 in gold by, April maybe.
Yeah, I'm with you there, Jamal. I mean, you've got a tradable range here where you can start to make decisions or think differently if you get a breakdown in price. Let's call that 4,700, 4,600, breakdown below there. Maybe you think differently. But yeah, this looks like it's going to go back to 5,500. You have the dollar reversing after a counter trend rally. So dollar was up 2+% over the last couple of weeks. People don't pay as close attention to those sorts of things. But in terms of the big picture and how flows kind of move around the markets, the dollar matters. And so that strength there could have been enough of a catalyst to just start to kind of have a shift in positioning. But now if you're seeing that roll back over here, which I think, that bearish trend that we've been in is going to continue, that should support gold prices. Short-term rates continue to trade within a bearish trend. We've had a steepening of the yield curve, which I think is ultimately, positive for equities. But, the short end has been coming in, and regardless of what the narrative is around pending Fed Chair Kevin Warsh, you are just seeing lower 2-year yields getting priced in here. So I think you have the setup for higher gold prices.
Do you think that was as big of a factor as it, everybody attributed the huge move on the 30th to the downside because Kevin Warsh was named the next Fed Chair. Do you think that had as much meaning to this fall in gold and silver, or was it just the reason for that day?
I think it's noise. I think we like to assign, certain headlines to or reasons to why markets do things in the short term at times. Maybe it causes people to reprice the path for rate cuts. Maybe it just causes people to rethink positioning at the time, and that's enough. But I don't think it really matters in the grand scheme of things. What matters is you're in a pretty growth positive macro environment. Inflation isn't necessarily ripping higher. I think that's an environment in which risk assets can or typically have done well, and equities will do well, and anything else is short-term noise.
I'm going to start this poll because somebody asked me last week, but I want to ask the crowd. I want to ask you. Somebody asked me last week, which one returns to 100 or 100K, whichever way first? Is it silver or is it Bitcoin? What's your thoughts on that?
Silver going to 100 or Bitcoin going to 100K first?
What happens first?
I think you probably could see that in silver first. I mean, the Bitcoin structure is very, very broken. I think it would take some sort of external catalyst for what you've been witnessing in crypto to immediately reverse. I do think that crypto goes higher and hits, we'll use Bitcoin as an example, hits a new all-time high above 126,000. But I don't think that is going to happen anytime soon in this market here. That could change. You could get some sort of announcement out of the government. Of course, there's the Trump tweet effect at times, whether it's real or not. There's always that sort of risk. And I think you will continue to at times see that skew in crypto-related call options in IBIT. But in terms of, okay, how are we trading today? What's been leading? Metals have been leading. You still have that volatility in silver. Silver's at 80. We're watching this thing move 10 plus points a day. Yeah, you could have $100 silver by the end of the week. I think it would take a lot to get Bitcoin back to 100K short term.
Yeah. That's kind of my thought too. And I said it when it was like 60 something last week. But yeah, we want to hear from you guys, man. Why don't you put in the chat, put the poll in the chat there. Let us know what you're thinking. And of course, always throw some, any questions you got, trade ideas, whatever. Somebody asked about Netflix. What are your thoughts? Look, Netflix looks ugly. I mean, it can't get off the mat, much like Bitcoin, honestly. I don't know if this is the deal holding it down. I'm really not sure. Ever since it had the split and kind of simultaneously the deal has been out, it just hasn't been able to resume its previous glory. So I don't know what to think about this thing. I don't know if you even care about selling it. You got to worry a little bit to the upside because it is so oversold. I currently have no position, and I see no reason to put one on right now. Vol is not particularly high. It's just in the middle of the range. And again, this is like there's this catalyst that's hanging over it. You wonder at some point if they're going to, I don't know. I don't know if they're going to, I don't know if the deal is going to be able to go through. I mean, who knows if the appropriate authorities are going to allow it. I don't know what to think right here. And this chart inspires nothing in me. I don't know. What do you got?
I'm with you. Hasn't been on my radar. Trend is bearish. Chart looks terrible. For me to get bullish, I'd need to see this back above, probably back above 90 and holding on to that. Until then, yeah, even when you look at, okay, is there a level where this gets interesting? I'd want to sell a put option, maybe take assignment of the shares. Okay, where do you want to own this? For me, it's probably closer to 65, 70. Right. And if I just go out a month or 2 months, there's just not a lot of juice in these options. So the market's not pricing this as if it's going to move very much. And I don't know, like you had mentioned, what's the catalyst for a reversal of this trend? I haven't been following this deal at all. I just think there's a lot of other places to play. If you have a Netflix position on, of course, you want to think through how to manage this. But if you don't have a trade on, this is not on my radar.
Yeah, I totally agree. Bitcoin Cash, why has that been affected the least?
It's a great question. I mean, when you look at the Bitcoin Cash performance here, it's held up relatively well. I've got 540, 550 somewhere mid $500 right now, but it has not seen the destruction in the price that, at least over the last couple of weeks, that we've seen in other areas of the market. That said, it's still down about 20% on the month, but 3 month, you're pretty much flat. Trend has been, kind of bullish longer term versus some of the other stuff that we track. But I don't know if there's any particular reason for that. I haven't followed it that closely either. I'll have to follow up with everybody there. But just from a pure, relative value kind of approach here, that has, and we've called this out on the show for what seems like months now, that's been a place to hide out. It's underperforming Bitcoin year to date, but over the last few months, it's been a place to hide out. So I think, you definitely want to have that on your watch list just for trades where if you get to the bottom of a range, maybe you put in a buy there and it could be a little bit stronger than the rest of the market. But I don't know if there's, I don't think there's a single catalyst for that I've seen.
Is Bitcoin Cash kind of like the dollar of the crypto market?
No, I believe this was a long time ago, a fork of Bitcoin very early on. You have divergent opinions and views in the Bitcoin community. And this was a fork. I want to say this is over a decade ago. Mm-hmm. But Bitcoin Cash has been around for a long time. It's not something where it's, like a stable coin or anything like that on the Bitcoin network, but a separate version of Bitcoin that I believe retains a lot of, the original code.
Gotcha. Okay.
Or thinking around it.
There are a few earnings. I've had varying success on earnings more recently. Semiconductors, on Semiconductor has earnings. I don't even know what I think here. Expected move, $6. God, I haven't traded this name forever. I don't know if I'm going to start today. Other earnings, Coke has earnings. I know Pepsi last week, there was obviously somewhat of a rotation going on. You can see this chart in Pepsi. It was looking like a growth stock last week with the way that it was moving. Pepsi, Walmart, a lot of those names were moving. A lot of consumer staples were doing pretty well last week. That being said, Coke has earnings coming up. You can see it was doing a very similar thing. Again, Coke is another one where I haven't traded earnings. I'm not trading it now. I don't really care. But, it was interesting to watch that rotation happening last week. Spotify has earnings. This is obviously something that moves from time to time. Wow, stock is kind of down here, huh? Now this, Ryan, might be interesting. $40 expected move, huh? This, folks, might be the classic calendar call spread setup here, if you will. What is this thing? What are the capabilities of this? A $40 move, does it move $50? Does it move $460, $475? That might be interesting. We got to do at least one of these here. 185, sure. 460. We'll also do the 475. Let's see. 90 cents. Oh God, you're gonna make me pay up, aren't you? Place. Let's go 95. And we're working. We'll see. Yeah, we'll do a couple of those. Jamal, are you going to hold your 7-day SPX trade until close? That's the plan. Look, we haven't seen SPX eclipse 7,000. It's gotten rejected a couple of times. Maybe this is the week it happens. I don't know. But I did just roll that. I had the 6,600, 6,790 put spread. I rolled that this morning down here to so 100 handles up, 6,800, 6,790. And yeah, my upside is at 7,000, 7010. Let's just see what happens here. We have yet to eclipse to the upside. If we do, I am more than happy. I got long deltas in a bunch of different positions, and I feel that I'll benefit. But yeah, I'm going to keep this on. I'm not looking to get out of it for the time being. I'm going to let it work here because, again, we have not closed above 7,000, I don't believe, at all. I don't think there's been a close. We've gotten rejected each time we've gotten the 7,000 in SPX, and I'm banking on that happening again. So yeah, I'm going to leave it.
I like it.
Yeah, I'm going to leave it. And again, if it happens, well, that's fine because, again, I still have this micro NASDAQ year-long trade. My downside is the 25,250 put that I'm short. And again, I am rooting for markets to go higher. That's just one of the few things. I don't really have any short delta. Not that I really want any, but if there's one that I'm going to keep on, it's going to be this makeshift short delta vis-a-vis having this short call spread here in SPX. Other earnings, Datadog. I actually saw Liz and Jenny just did a trade in there. This name is, I don't know. I don't know. I'm sure the vol is high heading into earnings. Not doing anything in this one. But do you ever trade this name?
No. I'm trying to see the symbol on the monitor here.
DDOG.
DDOG. Okay, let me pull this up.
It's a high flyer for sure.
Okay.
Over the years. It's not really one that's in my wheelhouse.
What does the company do?
I have no idea. I don't even remember. I don't even pay much attention to that anymore, Ryan. I really don't. Like,
I hear you.
Unless it's something that's like, very well known. I don't know. I don't remember what they do.
I'm a crypto guy. Jamal.
Yeah, I don't remember what they do. Don't get me the line. Are they like I don't know. I don't know. I really don't. What do they do?
Data.
Yeah, I feel like they're data warehousing, but I'm not really sure. I don't know. Provides observability service for cloud scale applications, providing monitoring of servers, databases. Oh, okay, they monitor that stuff through software as a service. Got it.
Yeah, I mean, I think some of that stuff bounces. I I think there's so many other places to go, and I get that there are opportunities around earnings trades here, and there's a way to express a view around volatility. But if you look at this, okay, where do I want to be over the next month or so? I think you can go outside of tech, of course. You had talked about consumer staples the price action there reflects the market environment we're in. Growth's up, inflation is flat to down. Staples do well there.
Look at that chart to start the year.
Yeah.
This is a big move for consumer staples.
Industrials have done well. Energy is starting to catch a bid. Energy ETFs have been screaming higher, but crude oil specifically is starting to trade a little bit better. So yeah, there's earnings trades, but I just think you have a pretty structurally weak market here, and you've seen this unwind of concentrated positionings. And when I say structurally weak, talking about software, but you have this unwind of concentrated positionings. It was Mag 7 over everything, and now there's many other places to play. And so you see some of that crowding has gone away, and the momentum has come out of those names. So if you do get a bounce in here, maybe it's a short-term earnings trade again, but I think you're going to continue to run into selling pressure for people that are underwater on this trade.
Yeah, I think you're right. And yeah, this oil, recently there's been a real kind of surge here. And I wonder if this is starting to find a new range. I thought the range was around 58 to 60 for the last several months, but with this recent surge, it seems to be finding a new level around close to 65. I guess you could say really in the middle of it is probably 63 in the orders, but it's basically almost mid 60s now. And I don't know what to think about that. I don't know if this is real. Again, a lot of times throughout the last couple of months here, you see there's been a surge in oil and then it gets knocked down, and surge in oil and then knocked down. And with this recent surge, it's seemingly holding its level here. So I don't know what that means. But that being said, I'm trying to take advantage of the volatility. It's popped up. So we have this iron condor on 68 and 58 are our short strikes, one point wide. And this is the play. This has been the play for oil for the past almost year, honestly, despite what little dust-ups happen geopolitically every now and again. This has been the play. So until that changes, I'm not changing. I'm keeping it the same.
Yeah, I like that volatility trade there. I also like to buy, or I'm working orders to buy dips in crude here in WTI, closer to kind of 63 and a half or so. So a little ways away from where we're continuing to climb higher. But I think you've got the setup here. You've got a setup that's pretty bullish for commodities. You've got that dollar tailwind. You have that heightened geopolitical risk. I think the one other side to this is, and not that it can be all that meaningful, but do you get some sort of short-term Trump tweet as you head into midterms, and we're a ways away from that, but do you get something where it's like energy prices are too high, looking out for the consumer? But I think, this is a trend here short-term that should continue. I'd look for this to trade closer to 70, buying dips in the low 60s is the way that I'm trading it.
What's your vehicle of choice for trading oil?
I like to use these micros, man, and not because I don't have any money in my account, but more so just it gives me an opportunity to scale into a larger position. Yeah. Especially when you have something that has this elevated volatility, you don't have to go in and put on an entire, CL. And so I'll do some of the smaller stuff in there, but yeah, that way you can put on a couple contracts at a time, scale into a position to maybe feel a little bit better about it.
They're super easy.
But yeah, that's what I've been using for most commodity or industrial metals. So I've been trading copper like that. The micro silver has gotten pretty big, of course, and has just a larger buying power requirement. And that's really what you need to probably take into consideration as well.
/10Z, right?
So gold is there's a 1 ounce gold future now. You have very small crypto futures now. You've got micro crude. You have a variety of other smaller commodity contracts that you can trade. And so that's the way that I've been getting into this. But the other way that I would look to play this would be selling puts in some of the different oil-related ETFs or energy-related ETFs. So that's going to be things like XOP, XLE, OIH is oil services. And you can look at the holdings of those ETFs, and what you'll probably find is that 30, 40, maybe 50% is going to be your majors, companies like Chevron, ExxonMobil. But I also think that going forward, people have to probably take a little bit of a different view on these energy majors. Yes, they're oil and gas, they're fossil fuel companies, and that's not going to change. But they're also growing and investing in many other areas. It would be bizarre to me that Exxon wouldn't play a role in energy outside of fossil fuels going forward, right? That outlook could be 5, 10, 20 years. Yeah. That's not for this show, but I think they're going to be around, and I think you have to look at these as energy companies, not necessarily just oil companies.
No, that's a good point. I mean, you figure at some point or another, they're already starting to at least dip their toe into other sources of energy, right? I mean, you would be silly not to. You can't just be, unhedged, if you will, like that. You got to start doing a little bit of something. Yeah, I wonder. I think you're right. I think that's something that they're probably paying attention to over time. Because I mean, the way we're going now, the different things that we're starting to fire up. I think they're going to have to do that for sure.
Yeah, look at the tear that Exxon's been on since the start of the year. Wow.
I mean, I know. I kind of lost sight of it because that's when I saw XLE, I was like, well, Exxon has to have the same looking chart because, again, it's such a large part of that ETF, and it sure does, man. It's been on the move. Chevron, I assume, is the same, which it is. Yeah, these have quietly had some big move, at least quiet to me. I guess I haven't paid much attention. I mostly focus on, MCL day to day, kind of like you're talking about, or CL when I'm trading options in them. I really haven't looked at those individual names as much as I used to. It's been, this is a fascinating part about the beginning of a year to me. Like, what's it going to be? What is going to define the year, right? And we're still figuring that out. I mean, again, I think we're in the 6th week of the year. I mean, we're still trying to figure out what are the themes going to be. Again, I tend to feel like this software sell-off that happened more recently is going to be one of those things where months from now, we're going to look back and remember that?
Yep.
Yeah, that was a while ago. Man, those prices were really cheap. Oh my God, should have jumped on Palantir at $115 at the time or whatever it got down to last week. So maybe oil, maybe it's a year of oil. I don't know. Oil and oil-related names have been quiet for the last, maybe 2 or 3 years, whenever it touched 100. I guess it was during the Ukraine and Russia situation that happened 2022. But that's the last time I think oil was over 100. But
yeah,
wonder if it's going to be that this year.
We haven't had a ton of volatility in there. I mean, when you look at supply, last I checked, the U.S. was pumping at maximum levels. So in terms of crude oil output here in the U.S., we were at, I believe, all-time highs or close to it. You need to follow OPEC, of course, if you're going to trade oil. Haven't been, paying close attention there either in terms of how they're trying to manage the market. But those are some things to be aware of. But just generally, the macro environment that we're in, should be somewhat positive or supportive of at least for now of higher oil prices, energy prices, commodities. It's generally pretty growth positive.
Look at that. Almost 4 years ago. It's the last time it was over 100.
Wow.
Yeah. I mean, that's crazy. And it's nice. It's not. Look, I like where gas is right now. I mean,
yeah, right.
I drive in every day, so I'm okay with it. But it's a trip to see that.
Yeah, because we got quite used to the price of oil was $100 a barrel, and in your mind that was kind of like that was the floor. And obviously, we had a ton of volatility over the last decade around that. Even went sub zero negative around COVID, right? But yeah, you kind of anchor in this, like for whatever reason, this like $100 oil price.
Yeah, bro, and kind of glad it's not there right now.
Right.
I took the opportunity to buy some of the dips in service last week. I mean, in service and in software names last week. I did a crab trade in CRM, long the 200 call, and $20 wide, short the 220 in Feb 27 cycle, long, just obviously out of risk purposes, the 240 call. So we'll see if this thing maybe catches a bid back up. I mean, again, I like to go with, when you have these situations, I like to go with like the biggest names that are suffering. CRM is obviously the biggest name in that space by market cap. Another one is, I did look at ServiceNow. I was interested in this with the chart being there, but I just couldn't make it work with the options. So I did the best thing, and I went to snow.
Okay.
And that's a real good question, honestly. Like, I mean, why is NOW now, but SNOW is snow? Why isn't snow? I mean, I'm just spitballing here.
That's
Ryan.
a good question.
It doesn't make sense to me. Okay? You know that old joke, whatever. Like when you're in school, it's like spell TOO, spell what TO, spell TOO, spell TWO, and then some people will say TWO. And I used to love getting people with that joke. That shit was hilarious. I did the same thing in snow, if you will, long the 175. Short the 2 of the 190s. I should have got wider on this, honestly. I should have got wider on this. I should do $20 wide because this is in the earnings cycle. This is not going to work. Or maybe I just take the money and run at some point, whatever. So yeah, that was my way of, thumbing my nose at the software sell-off last week. I thought it was a little overdone. We'll see what ends up happening there. Gold and silver's working out. Again, talked about the strangles earlier. Gold, I released the trade that I had. I actually had a similar crab trade in GLD, meant like I mentioned. But we also, Mike and I both have the 500 calendar spread. So short the Feb 500, which is coming meaningfully, and then with 11 days to go, and then long the March 500. So we did that for 420. Right now it's trading 563. So that's a nice. It's working out.
Nice.
Vol is starting to come in just a little bit on the upside in the metals. You wonder if there is another surge under the hood that causes that vol to go back up. We'll see. I don't particularly want that, but if it happens, I'm okay with it because again, I think the market is a lot more interesting. These names moving the way that they are. Another calendar I put on recently that I couldn't resist. Talk about names that have been going crazy. I didn't put it on in SanDisk, but SanDisk is the poster child for what's going on in these. I don't know. I mean, are they storage? I mean, I don't even know what is that what it is?
Yeah, I would think about it as memory. So Micron, yeah.
Because I still think of them as like storage. Like they were the ones who were creating these huge, and when I was coming up, they were the ones who were creating these huge hard drives, right?
Yep.
And now we talk about shifts. They made a shift.
Yeah. I would think about this as infrastructure for AI data centers. And, that was something that kind of popped up maybe a couple of months ago where it's like, where's the real shortage going to be in? Or if you break down this AI trade or more so the data center trade into the picks and shovels, you have that storage component. And then, of course, I'll also use Micron, MU. You can see really what, the market priced that in pretty quickly here and maybe is continuing to do so. You've had a pullback. But yeah, I would think about that as data center storage.
SanDisk, man, a lot of people say this thing could be heading to a G. It seems like it possibly could be. I don't know. I mean, nobody thought NVIDIA was going to make the move that it was making a couple of years ago, and it just continued to keep going up. So whether it does or not, I was like, well, let me get one of the cheaper ones. Let me go with WDC. I put on a calendar spread in here, the 400 kind. Short March, long April. Let's go. Let's see what happens here. Fairly cheap spread. I think I paid, $450 for it. Slightly up now. But, these names have been so strong. And SanDisk went into the S&P 500, right? I think it did. And I think it did. I think it just got added to that earlier this year, I want to say. It was announced in November, and then it just got added not that long ago. I mean, this thing was so, again, this is a name that goes back decades, and it's had a lot of ups and downs, and now it's on the upswing in a major way now, once again. So, wow, who knew? I guess if you were paying attention to the data story, you knew.
Yeah, if you've been following the AI trade, I think you break it down starting with NVIDIA and you look at where there might be other opportunities, and pretty quickly you can find some spots. There is the question around, is this a bubble? Does it implode? Where does demand come from? Which is valid, But I don't think that you have to really address those fears here today. You make money in bubbles. I mean, I want to ride bubbles higher. Timing is everything, of course. But when you look at demand for this infrastructure, for data services or data centers, when you look at the demand for AI, there's still that question mark around the corporate demand for all these services. And is it, of course, going to replace all of the workers, more so probably white-collar workers, office workers sort of thing. We'll see, where do the revenues really come from to justify the valuations for something like OpenAI. But that said, you look at these most recent earnings announcements and the CapEx plans that some of these, as we call them now, hyperscalers, but your Amazons, your Googles, what they've announced, it doesn't seem like this is slowing down anytime soon. And if there's a shortage in memory, but there's an increase in demand, well, we know that prices are going to go higher.
Yeah. I mean, that's the story, and that's where they're headed. That's why these names are doing what they're doing. Seagate's another one. Somebody mentioned that. STX is, it's another one of those names, man. Like, holy cow. Looks like one last question here. Who's still trading the Dow? Look, I don't know. I have no idea. Anybody who has the Dow 50,000 hat on, which again we just crossed recently, I don't know. I have no idea. I don't even.
I haven't looked at it. I couldn't tell you what the Dow.
I don't trade it. The only time I ever trade it is when the whole market's down big. I'll jump in the Dow and I'll trade maybe this MIM or the diamond options. I'll sell put spreads in there, something like that. That's about the only time I trade it. Other than that, don't really trade it that often. Yeah. That's pretty much it. And Jamal's a closet Dow guy. No, I'm not. I'm not. I'd tell you if I was, I wouldn't be closet about it at all. The last thing, I guess, is as we wind down the show here, end of the week is the jobs report. You paying attention to that, or does it matter? Is it even accurate? What do you think?
I think it probably matters for just the short-term change in interest rate probabilities and how markets might kind of fluctuate around that. Again, very short-term. But no, I don't think it matters all that much today. And this is something that's been delayed, right?
Yep.
So what are we looking for? 50,000, 70,000 somewhere?
I don't even know.
See? It doesn't matter.
There it is, folks. Thanks for joining the show today. If you want to ask us any questions or, just hit us up with general information, do that on Twitter specifically. I am at Jamal Chandler and Ryan's at Ryan Fred Grace. Give Tasty Crypto a follow as well. And of course, Mikey's at Trader Mikey B. He'll be back on Wednesday. So it's just me again tomorrow. And I'll be here with Tuesday Tommy. So see you guys again at 11 a.m. Central Time. Peace.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you've walked a mile in those high-heeled shoes and your
What is going on, everybody? Happy Monday and welcome back to Risk and Reward. We are gracing you all with our presence for a full hour segment today. So we got plenty to talk about. We don't got to rip through things. We got time. We can sit here and talk about everything going on in the market. I'm joined as always by my wonderful co-host Errol. Errol, how you doing? What's going on?
Doing well, doing great. I hope you're doing well. Hope you had a good weekend. Hope everybody else is doing well. Let us know what you're looking at. Let us know what you're trading. Let us know what trades you're managing right now. Still coming off of the boring high of the Super Bowl. I don't even know if we want to call it a high. I'm a little bitter still, as you can see, just because we were so close with the Broncos again. And I got a 10 years ago memory pop up. Me at the Broncos championship parade in Denver. So it's a little bittersweet right now, but it was fun. It was a good time. A little underwhelming, but it's the Seahawks and Patriots. As a Broncos fan, not a stand for either of them. So
yeah,
it's the boat I'm in.
Yeah, it was underwhelming, kind of a grinder. I mentioned last week I was rooting for the Seahawks just because the Patriots got to be too happy for too long. I didn't need
way too long.
Didn't need them to need to see them come back and win another one this quick.
You think Tom Brady was kind of happy they lost?
I don't think so.
No,
I think he's probably still got his allegiances, but I don't know. He's been very good about being professional on air and not.
People have their true feelings they sit with though, so I speculate on what those might be sometimes.
It's true. But yeah, kind of a boring game. But congratulations to the Seahawks. Any Seahawks fans out there? My condolences to any Patriots fans.
My condolences.
You will probably have some good looks at getting back. But I will say, as a Bengals fan, nothing is guaranteed. Sometimes if you miss that shot with your young quarterback on the rookie deal, that can be it. So my best to all of you, and just remember, you got 8 in like the last 20 years. I guess 7 in the last 20 years. I am a Bengals fan. They have never won one ever. So there are levels in these things. Okay, I don't have any memories. I'm among the unluckiest sports fans that there are. If I've never gone on this rant before, I am Bengals, Cincinnati Reds, Houston Rockets, and Nashville Predators. None of those teams have ever won a championship in my lifetime. I have never, ever seen a team that I root for win a championship in anything that extends to Texas A&M in college athletics as well, who are a notoriously mid program despite having an abundance of funding in a giant stadium.
I just got to say, anybody watching, that's a green flag if I've ever seen one, right? This is a loyal man. Cincinnati, I mean, you heard the man. That's a loyal man right there. So
yes,
just a quick plug right there.
I stand by them and I will cry like
those fans are loyal.
One of these teams
that is a loyal fan.
You will catch me with tears streaming down my face. But anyway, circling back into the market here, we both have our black shirts on today, but it is not a Black Monday. We are
it's not a Black Monday.
Trending upward on pretty much across the board. Slightly lower open today, and then we've moved upward ever since. I wouldn't say there's anything too major jumping off the board at me right now. Meta is having a pretty serious rally, as is Live Nation, LYV. Here's that Meta chart. Obviously, huge sell-off after the big gap up on earnings. And pretty textbook immediate gap fill here, and then using the bottom of that gap as something of a resistance level to run back to the upside. Live Nation is another one that's taken a serious move today. I'm not actually sure what the catalyst is for this. Interesting channel that it's been in here. Very volatile, but within this channel, really since the beginning of the year, these big swings down, some little gaps forming, and then some big green candles just engulfing and moving straight back to the upside. Live Nation is one that I am long right now. I gave this thesis some months ago, but their CEO was under fire for saying that he still feels that concert and event tickets are underpriced on release, and everybody was, had a field day with
underpriced.
That. Yes, saying he was saying that ticket prices should be higher.
It sounds like a rage bait.
Yes, it sounds like a rage bait. Everybody had a field day with that, but I said, if we're looking at things objectively, the reality of the situation is that artists release their tickets for a set and somewhat reasonable price. Different artists vary, obviously, and some people will get mad at artists for gouging. But then every single time, without fail, they hit the secondary market and move up in price, which means that if we were talking about a totally free market of buyers and sellers, which is what the secondary market is, those ticket prices probably should be higher. So that led me to getting long Live Nation. I took a fairly dated short put vertical here. I still have 67 days to expiration. Needed over 155 by April 17th, but we are on the uptrend there, trying to close this gap up to 155, a level which it has never touched since I put on this position in late October.
Yeah, I remember we talked about this one. I think it was a few months ago in October. We were talking a lot about the live tickets, live events, all those kind of things. Cool to see it pan out a little bit more here.
Oh, go Predators, says Big Deal. How about that? I'll be in Nashville next weekend, actually. Got a little trip planned down there.
Oh, nice.
Other than that, got a few movers in the portfolio here. My Nvidia longs are printing nicely. Considering cutting this Oclo position, I was considering cutting it on open today, but then decided to hold on just because I think a slightly better exit will present itself. But I think this is fundamentally dead. I'd be shocked if we can get back over 100 in the next 39 days. However, Oclo has done this in the past, so if we could get another one of these, that would be awesome. I bought this trade mid-December, right around this range. Immediately got the run up, felt like a genius, and should have just sold because we've slid back down hard. If anybody has any tickers you'd like us to take a look at, feel free to fire them off. I am going to go ahead and exit these VIX shorts. I repositioned into these short VIX or a short VIX contract last week after we had a small spike in vol here. I was already holding a 19 put, which I was able to exit for like a 5% loss. Got out of that pretty favorably. And this is really all I'm looking for out of VIX here. So not going to beat around the bush, especially in this environment where volatility can pop up anytime. Go ahead and get out of those.
Yeah, nice. We got some contraction, killed volatility a little bit the last couple of days.
Yeah. And yeah, that's kind of it. Everything else trending in the middle. Amazon is the thorn in my side right now. This is another one that is fundamentally dead, but I'm just holding for a better exit. We'll probably try to get out of this by EOD. This was a earnings play. Earnings did not go the way that I needed it to. So if we could even just get a slight recovery up into this 215 range, I would feel okay about liquidating those. But that's a big red bar right there. We would be remiss if we did not discuss gold and silver.
Yeah, we have to. It's only right.
Yes.
Where is it at right now? I'm always curious. Got to check it every hour.
Yeah.
It's a volatile asset.
Yeah, no kidding. We are kind of on the trend back up with these. Silver is another one. Sort of working its way back up, but I think that this is dead cat bounce to me. I don't know that we're actually going to be able to return to and eclipse higher highs from what we saw here. Gold obviously looking a little bit better than silver. I think we'll run out of steam somewhere in this range here if it's not happening already. This feels like a textbook dead cat bounce situation, and we sort of got what you maybe could call the dead cat bounce for like 2-3 days. Let's go some slightly narrower candles here to get a better picture. So we had the big sell-off, and then a slight little bounce here, which maybe you could call the dead cat bounce, and then now we're back to normal trajectory. But I don't know that we're necessarily going to eclipse higher highs on these metals. Some other metals. Have a look around. Platinum. Looks the same.
Yeah.
Copper looks the same. What else?
We got some gold, silver. We got some. How's some of the oils been moving? Oils got a lot more volatility. I think over the last couple of weeks they've been moving a little bit more.
Yeah.
Not a product I'm actively trading, but still something that Get some wheels under, get a little bit of volatility if you're short-term trading in there.
Yeah, kind of channeling here. If you're a premium seller and believe in this channel, might be a good time to get involved in that capacity. Really, just as much volatility as there's been, just a lot of chop over the past couple of months.
Yeah, it has been pretty choppy
in a broader time frame.
What is that on right now? What are we on?
We're on 1 day.
1 day.
Out to just see kind of into the end of the year here, but
yeah,
a lot of liquidity sweeping in since the Liberation Day sell-off last year, but just not a whole lot of action really since then. I mean, we kind of just channeled between these 66 and 55 at the lowest levels ever since last April. So as much as it seems like things are moving all the time, and they are, it's not really that crazy of a move. Airbnb. I'm in Nashville. That's cool. Big deal. No, I'm going down to stay with a friend. Going to the Texas A&M Vanderbilt basketball game this coming Saturday. So
that's gonna be fun.
Yeah, it should be a fun one. Quick little trip.
Yeah, that'll be a good one.
Take a look at some of these names that have taken a beating lately. Microsoft, IBIT, etc. I assume you mean etc. and not ticker ETC. They have Monday, Wednesday, Friday contracts, but doing a lot of poor man's covered call strat selling.
Okay.
Delta. Okay. Let's take a look. Yeah, Microsoft. Yeah, some of these names really have been taking a beating. The tech bleed has maybe not been getting as much attention as it really should.
Yeah.
Intel's still strong here, but yeah, Microsoft is one, and then what's the other one that's really been sliding? Not another Mag 7 company that's been sliding like this. I'm totally blanking. Just look at all of them.
Yeah, we can just check out all of them. Go through the list, see which one's kind of dragging down the basket. Basket here.
Is it just Microsoft? NVIDIA, obviously. I am long some NVIDIA right now. Yeah, NVIDIA really channeling too. Palantir has taken a serious slide, recovering a little bit today.
Mm-hmm.
And I have some Palantir here somewhere, right here. Ideally would like this to stay under 146 until Friday. I don't know that that's necessarily going to happen. I did take half of this off for a 50% profit earlier this morning. We've now sunk way back into what's like a 10% profit here.
Mm-hmm. How much time you got on those left?
4 days.
Okay.
So
end of the week, right?
Hoping we can hold these levels. But I knew that the sell-off couldn't last forever. With a stock that rips to this extent, I'm not all too sure. If we get back to break even, I might be forced to just liquidate and be happy with my profits there, because this is not a freight train I want to stand in front of for too long. But I was shouting from the rooftops about this, though, since, the beginning of 2025, that sometime Palantir had to just stabilize and breathe for a few months and try to let this valuation catch up a little bit. And that's basically what we've been seeing since the middle of August, just sort of channeling. We made lower lows last week, and I was happy to be short through that.
Oh, yeah. I know there's a lot of assets right now, kind of just figuring out where we're going to find the bottom on a lot of these, or where we're going to pause for the time being, because I know some of the semiconductor names have been pretty volatile as well. Like I know SMH, the ETF for the semiconductors, I think those were at its highs, trying to pull back off its highs a little bit. And yeah, some of the other semiconductors names too have been pretty volatile. At its highs, pulling back, a lot of opportunity, expansion, volatility. So still have the SMH position on, which is still 11 days left to expiration. Still got a short call spread on in there. So we'll be patient on it. But some of the semiconductors is finally letting out a little bit of its air from the massive run that they were on over the last couple of years. I even feel like, even when we were doing Bad Trader not too long ago, I feel like I was speaking with Julia like every day about semiconductors and how these are such sleeper builds and how these have been running towards their highs. So, a year and a half, couple years down the road, kind of crazy to see that. These have still been putting in higher highs and higher lows. Maybe now we pause a little bit, have a little bit of a cool off time period.
Yeah, and it's amazing to sustain that type of momentum that long. Stringing together, multiple 100% years in a row is
it
largely unprecedented.
Yeah, kept the sentiment for sure.
Yes, thank you for the offer, big deal. Dearly appreciate it. Oracle, I see mentioned.
Some of those software names, Oracle 97 IVR, got a lot of volatility, implied volatility in there.
Yeah, Oracle's a weird one. Yeah, it's just the TikTok sale is a part of this, but holistically, it's been a weird one. I know that they wound up getting a part of TikTok, if I'm not mistaken. But it wasn't as much as investors were hoping for when we were up around these levels on the crazy gaps.
So much speculation around those deals still.
Yes,
I feel, and a lot of speculation around the deals, and just a lot of speculation around how the underlyings will respond, to these things. Oracle's kind of reminding me a little bit of Netflix right now, where we're not really catching much of a bid. We have all these deals, all these headlines, but the momentum seems to be to one side.
It does. What What software names do you have the most conviction in buying a turn, if any? I went with Now and Toast.
Any software names?
ServiceNow. That was going to be my guess. Yeah.
Beaten down to the lows.
That is real beaten down. I don't think that looks like a bad buy whatsoever. And Toast is another one. I never think about this stock.
Yeah.
Yeah. I mean, I think these both look like fairly attractive buy spots to me. I mean, in the same vein as these things can only run up and, double themselves for so many years in a row, the other side of that equation is that, these things can only run down for so long as well. We still live in a society that's driven by these services. What about like a Block situation, formerly Square? Yeah, they're fairly beaten down as well.
Yeah.
Trying to think if there was any commercials I saw last night that were inspiring enough to convince me to get involved. I don't think that there were.
In some Oracle.
What?
In some Oracle, or what was that one over there? To get inspired in what? What underlying?
No, I'm saying like if there was any Super Bowl commercials that made me like, oh yeah, this company's got some promise, but it really wasn't.
Nothing.
Also, I think it's funny that these companies come out with such iconic and good commercials for the Super Bowl every year, and like it doesn't have to be that. Like you could do that all the time. Like a lot of them, it's not. I mean,
you could do great branding and marketing. Like
sometimes you're rolling out the stops and you're rolling out the celebrities, and those things get expensive. But like a lot of the time, it's not, and you could just do that same branding all the time. Like Guy Fieri can't be that expensive. The Bosch commercial with Guy Fieri last night is one that sticks out in my mind. He can't be that expensive. You could just turn that into a whole campaign, but you won't. It's interesting.
Yeah.
Team has been crushed for a while. Atlassian.
Yeah, I will say I think that some of the commercials, it was a little, commercials were a little underwhelming at the same time. We had a ton of crypto commercials last year. Boy, we did. And the last 2 years.
It's true.
Might have been the most disappointing year for commercials to date, honestly. Kind of in the same boat there, Jared.
Yeah, there wasn't anything that really blew me away. I mean, a lot of people were just leaning into celebrities that you recognize as opposed to like actually doing something iconic or super different.
Yeah.
State Farm was running the hell out of that Key and Peele one.
Mm-hmm.
Go Dolphins.
Yeah, AI slop ads now though. What's so funny is like even with the AI slop, I feel like if you're already getting into AI, you could see the first big companies start to use AI and it was a little bit more obvious. And then, as we mature in the space a little bit more, it becomes more and more obvious because more companies catch on and then they kind of start doing the same thing. But the AI slop is real. You see it in the ads, you see it on every platform, you see it on TV at the same time. Anything that can cut costs, we're probably going to see it.
Yeah, it's true.
Go Dolphins. When's the game? I'll wake you back up when that happens, Brandon. That's another loyal man right there.
Looking for maybe some action on Atlassian here. This is sort of an attractive spot.
Okay, got some premium on there.
Premiums are a little bit juiced. This is a bit more expensive than I would ideally like to go.
Mm-hmm.
How far out of the freaking money do I got to get before there's liquidity and it's not the most expensive thing I've ever seen in my life?
People acting like we like commercials once a year. We do brand it only once a year.
It's true.
Don't call it out. Don't call out the hypocrisy.
Yeah, I mean,
gotta let that one slide.
This is sort of tempting, but these are awfully juiced. I don't know that I necessarily want to get involved with this, even though I do think that this is a attractive spot for a company that I don't think is going anywhere anytime soon.
Yeah, we got more options.
Let's check in on okay, I've confused myself now.
What's that?
Was it Bath and Body Works or Bed Bath and Beyond?
It was BBY, whatever that one is. Bed Bath Beyond. Bed Bath and Beyond.
BBY. They were the ones that bought tokens?
What? Oh, I want to be too sure. I know from what I recall, we spoke about BBY last, if I'm not mistaken, if anybody remembers what we were speaking about last.
Well, we talked about both of them, but I don't remember. I don't remember what. And then we went on a whole tangent about Build-A-Bear Workshop and these funny tickers. I don't know. Let's take a look at crypto. We have Bitcoin. The slide has maybe found a bottom. I don't know how certain we can be of that fact. But we are back over 70. We touched lows, testing the 60 level, which was pretty crazy. Have recovered back to 70 now. I don't know. I've tried to get long IBIT a number of times throughout the course of this slide. I don't know that I necessarily want to try it again here. On one hand, it feels so beaten down, and Bitcoin is a thing that I feel like simply must return to 100K sometime. But I don't know. I mean, like the conversations that we had last week, it's like, what actually is fair value for Bitcoin? It's a tough question.
It is a tough one.
With an asset of this nature that's been so parabolic for so long, I don't know that I necessarily want to try to get involved with this again. I might still have some IBIT longs down here somewhere burning a hole in my pocket. I do. Slightly recovering now. These are so long dated that I'm just bag holding. So yeah, I don't feel like it's necessitated to add any more here with as hard as we're bleeding.
Yeah.
If the move comes back, then these would at least recover for me a little bit. I don't want to bring my average down too much further.
That's fair. That's a fair value opinion right there. That's fair.
Pop over to FX perhaps.
Yeah.
I haven't looked at this in a while. This is a live reveal. Let's see how we're doing. Bad. Turn it off and wait.
No more FX.
Cyclical assets. They will come back.
I certainly hope that the AI and quantum trades aren't over. I feel like everyone freaked out conventional timing given the Epstein release, and the sell-off was overblown. Now I hear you, deal generator. Honestly, from my perspective, it almost feels like the sell-off has barely begun. And from my perspective, just looking at some of the semiconductors, specifically speaking towards SMH right now, I know they've taken a little bit of a pause. They're not as aggressively moving to the upside, but I'm kind of in the boat. You know, in terms of the momentum, I don't really have an opinion on if I'm happy or not about that. But I don't know. The semiconductor space did feel like it was. I don't want to call it a bubble by any means, because I think there is value there. But I do think we got ahead of ourselves a little bit with some of these quantum names. But I see the value in it personally. I just think we've got ahead of ourselves a bit.
Yeah, TSM logging a few good days in a row here and making higher highs. Yeah, the semis and the AI names, it's like, and I've said this before, but AI, I don't feel like AI fundamentally is a bubble, but I feel like we did start to get bubbly with some of these companies that are just more on the outskirts of the production process that people were just getting excited about, tossing money into. And I don't mean like an NVIDIA or a TSM. What's a good example of a company that I like here? I mean, yeah, like maybe even Oklo would be a good example, but they're more quantum.
Which name you picking for right now?
I'm thinking like just a company that's on like the outskirts of AI. Like,
okay.
Like there's all these
someone in the peanut gallery.
Yeah, they're just like sort of like they provide like a company that provides the metal to TSM.
Yeah.
That makes the chips for NVIDIA. It's like companies like that.
They're out there.
Really started to run.
Yeah.
I don't know if that was necessarily justified. How are we doing in materials?
Let's check them out.
About the same. Rare earths. Yeah, kind of chilling. Rare earths had a moment there.
To deal generator's point here, I'm looking forward to the SpaceX IPO and what that does for the space sector this summer. I'm really excited just to see the reaction. I think I'm excited to see the reaction more than the thing itself, to be honest. I'm really excited to see how honestly some of the banks are going to respond to this, just because I think SpaceX IPO might be one of the largest IPOs on the books. So with that being said, I know they're going to include a lot of the banks, some of the guys from Goldman, JP Morgan. I was talking about, imagine being like a junior on the desk or something, and you guys get the opportunity to be a part of the IPO for something like SpaceX, one of the largest IPOs in the history. That'd be so sick. The timing would be wild. But anyways, it's going to be exciting to see, what's the word? The butterfly effect from the SpaceX IPO.
Yeah,
butterfly effect will be interesting.
And interested to see actually what kind of bearing that has on Tesla as well.
100%.
There's been this, sort of phenomenon where people will use Tesla as a vehicle for SpaceX, even though it doesn't make any sense. They're not tied together at all, but it's like Tesla is like the Elon trade. Like things are going good or bad for him. Tesla has moved on SpaceX successful or unsuccessful launches in the past. So once that can actually be isolated out and there's a direct way to get exposure to those things, I'm interested to see if that even marginally crushes Tesla's volatility in the more macro context. Some great names on the outskirts of AI being thrown at me here.
Yeah.
Circle, perfect example.
Cool.
Hey, this is a good one. Where we got all hyped up, but then everybody's like, is this really worth it? And this is obviously from IPO. I desperately tried to get filled on Circle at the 200 range for shorts and just could never find the liquidity to do it. And that's a crying shame. Those were like 6 month dated, so would have come to expiration. Actually, right about now. I mean, about a month ago is when things would have been expiring. Well within the money. CoreWeave is another one. That does sadden me to say, as I'm currently long CoreWeave, but well within the desired range on these if it can hold there through this coming April. But yeah, CoreWeave was another one. Got a little bit too hyped, and then we kind of had to reprice that action back in. ENTG is another good one to throw out. Although having a nice little recovery here, but this was one that got maybe a little bit overextended and needed to chill out and begin to price in that information. And it's just such a speculative field because everybody is across the board with these AI companies, and Palantir actually chief among them as far as this category. Everybody is really trying to price in 10 and 15 years from now, like in the immediate, which on one hand is what the market is supposed to do, but on the other hand, nothing is guaranteed that far out. Things come and go.
There's
all the
a risk.
time.
There's a risk. Yeah,
crazier things have happened. Once you start getting into these, 300, 400x forward PE, it starts to get a little crazy.
Yeah.
Any thoughts on Reddit? Let's take a look at Reddit.
See what they've been up to. I've been getting absolutely body slammed, RKO style.
Yeah, I mean,
all the way to the ground.
Over 50% off the highs. This feels like a pretty good spot to me, really.
Yeah, I mean, from a long-term perspective, I mean, this is looking a lot better than a month or two ago. I mean, the value of Reddit now, long-term speaking, looks a lot better. But that being said, I don't know what's causing the slide here. I know I was really excited about how Discord, I don't know if we want to pair Discord in the same kind of, sector as Reddit-ish kind of thing, but also excited for
I think it's valid.
You think it's valid?
I think that there's a lot of overlap in the user base of those two platforms.
I'd say so.
They're both like chat-centric, organic, low-effort sort of things. Discord, obviously, a little bit more chat-focused, while Reddit leans a little bit more into social media, but definitely a lot of overlap in the user bases of those two platforms.
Yeah, I'm curious to see if we'll see any overlap in terms of just reactions in the stock prices once Discord IPOs. We'll be on the lookout for that, so we'll see.
Yeah. Okay, there's that VIX spike just now.
We got a quick pullback, and then we recovered within like 3 seconds. So if you just blinked, you missed the quick pullback.
I see.
Yeah, it happened in like 2 seconds.
Just a little blip on the radar on the 5-minute candle there. Didn't even last a full 5-minute candle. Short little thing.
I can see Errol and Mike Tyson's punch out, just TKO. Like you can see me in the ring with Mike Tyson, just getting like TKO'd. Because I might not need a TKO. It might be a for real knockout.
Mike Tyson, one of the few games that people can beat fully blindfolded.
What's that?
It's always crazy to me.
What was that?
Mike Tyson Punch Out. It's like
Punch Out.
Punch Out.
Punch Out. What is that?
Punch Out. It's like a somebody would have to give me the console that game was played on. I don't want to misdate that. I know that I would greatly frustrate everybody. Maybe. NES would be my guess, or N64.
It's honestly going over my head. I'm not too sure what Mike Tyson's Punch Out is.
It's an older video game.
Okay.
Like a 90s video game where you
Nintendo,
you're
I'm
a
saying?
fighter and you fight progressively more people, than Mike Tyson is the final boss.
Okay.
But there's like people are able to play it blindfolded. You can play the whole thing just based on sound cues and like specific entries of things. There's like a whole blindfolded speed running community for Mike Tyson.
So I assume this game was a massive brand deal for Mike Tyson, I assume?
I presume.
Interesting.
It was like right in his prime.
So funny how business works, right? Like Mike Tyson would have loved to be that dog of a fighter in 2025, right? Like he could have been doing vlogs and, video. I didn't even know he had that video game, right? So it's like even the brand reach is so dwarfed because of the fact that...
I don't know, though. I mean, boxing has become kind of jaded at this point.
That's a good point.
The best time ever to be a boxer is when Floyd Mayweather was boxing. I mean, Money Mayweather...
100%. For the boxers themselves?
Yes, he's the richest boxer ever. The promotions are the highest pay-per-view.
For sure. But dang, that's like one out... True. But
now we're into Jake Paul.
Right.
You know, it's the WBC has kind of fallen apart with what they're allowing to slide through there. Man, y'all are young. Yes, I was born in 2001. I was born well after the...
To the point at the same time, Floyd Mayweather, I think, was one of the only boxers that knew how to break through with his marketing as to why he was even able to get paid that much because of those pay-per-view fights, because he was so he rubbed you the wrong way on the internet, especially in 2010, 2015. He rubbed you the wrong way and you knew about him.
To that
cocky.
Not comparing these two people in terms of boxing prowess whatsoever, but that is why Jake
no
Paul
disrespect.
That's why Jake Paul has been so successful in the industry.
100%.
It's because everybody hates him. They all watch because they want to see him lose so bad. The best way to monetize yourself, and Conor McGregor also applied this strategy in the UFC, is to be super hateable but also very good.
Right.
And frustrate people and keep winning and keep getting bigger and bigger fights such that people keep coming back because they want to see you finally lose, which obviously happened with Khabib in the McGregor situation. Never really happened to Floyd Mayweather, who did actually box Conor McGregor at one point. So a little collision of worlds there.
Yeah, a little bit. Now, with that being said, we can jump over to the TradingView platform over here. We could take a quick look at what we did on NASDAQ for the day. We got a little bit of volatility. We'll circle back around to this too. Classic video game Nintendo 1988.
Yeah,
Excitebike was my first love.
Tyson was probably the height of boxing interest, though. Yes, I agree with that because by the time Mayweather was around, TV and sports and everything were just more saturated. It was always in your face. That's the age of social media. So while it enabled Mayweather to make more money than Tyson did, from boxing, at the same time, yes, it definitely was not as much of a cultural thing. I know Tyson fights were like everybody was.
I mean,
He was knocking people out so quick. It'd be like, oh yeah, let's watch this Tyson fight real quick and then go to the bar because you just thought these things were going to be
Bro, the guys fighting Tyson was just like, bro, this is good PR. Like, just get in the ring. This is good PR. Nobody else, so that's hilarious.
Yeah, he had a good commercial.
Yeah. And lastly, what's funny? I think one of Floyd Mayweather's largest payouts was against Jake Paul.
Have they fought?
They have fought. Floyd Mayweather and Jake Paul. I think it was one of his biggest payouts.
Man, I don't think Mayweather's fought Jake Paul.
Right.
Tyson fought Jake Paul.
I'm sorry. I'm sorry, Tyson.
Yes.
Wait. Didn't Floyd fight somebody? Didn't Floyd fight one of the brothers?
Floyd would kill Jake Paul.
Absolutely. All of them would kill. It's all showbiz.
Well, yeah.
But
yeah. I don't know.
Did Floyd not fight Jake?
I don't believe so.
I think Floyd and Jake fought. Maybe
Mike Tyson definitely fought Jake.
Dang. If somebody wants to check that for me, dang. I thought Floyd got in the ring for a check.
No, I don't.
Against one of the Paul brothers.
I don't think so.
Maybe not.
I don't think so.
Maybe not.
Because Paul's only lost.
You'd have thought I was in the ring.
He just took to Anthony Joshua.
Dang. Yeah.
And Mayweather would kick the crap out of him. I'm relatively.
Oh, for sure. Yeah. No. Maybe I don't know. That CTE is coming up on me. Then that CTE. No. With that being said, we had a couple levels of value here this morning, and it was an absolute bag fumble on a beautiful Monday morning. I mean, one of the worst bag fumbles you're going to see probably this week. Looking to get long, just waiting for the pullback onto our value area high. Got long a couple positions.
Floyd versus Logan in 2021 says Macro Brewski. You're right.
Okay. So Floyd and Logan did fight. I forget what the payout was.
I'm unsure. I'm sure.
I think it was I think it was one of his largest. But against a non-professional, which is crazy. That speaks volumes. One of his biggest payouts was against a non-professional.
Yeah.
And
it's all just hype machine.
Right. But I think that really shines a light on I don't know, the business as a whole, right? Because when you see boxing not get the glory that it deserves, it's there's these guys that are spending their entire lives on a salary they're barely living off of.
Oh yeah.
In a professional environment, which is crazy. But we'll circle back around.
Yourself and be the villain, but also be good.
Yeah. No, with that being said, over here we were looking to get long a couple contracts, and we'll just break down what had happened. We always like to have an area that kind of invalidates our trade thesis. And originally, we had a stop loss. We had a couple stop losses down here at these lows. I saw the momentum in the market. The consolidation made me a little bit more impatient, which that shouldn't really change your outlook too much. But when I had seen this volatility come in, I thought it was going to come down here and sweep the low. So instead of waiting for the market to come and take me out with my stop loss, I manually took myself out of the market, trying to save an extra 3 or 4 points to miss out on the rest of the move to the upside. So there's a personal mistake that if anybody else wants to learn from, that's very easily avoidable mistake, but that's what it is. So I think the lesson learned today is just going to be make sure you know where your invalidation points are, the areas in the market that invalidates your trade thesis to know to not be in or out of the market. And from there, follow your plan, because the mistake today was just not following the plan, not necessarily that the market didn't do what we needed it to do. The execution was lacking today. So because of that, we missed the run to the upside. Targets would have been maybe the morning swing high, also maybe some other swing highs if we look to the left over here. But the final target obviously going to be seeking the next level of value, which we're looking like we're going to see some acceptance, and we've already been seeing some acceptance in this next level of value. So with that being said, what we'll be patient for, I don't know if we'll get this today, but we got a couple hours left. Just want to see how the market responds around the value area low at 25,292. Who knows if we'll get back up here today, but you never know what the market might do, and we'll see how the market responds around 25,510. These are going to be the same exact levels that we're going to be touching up on all week. So tomorrow, we're going to come back, see how the market responded to these levels. Wednesday, same thing. Thursday, same thing. Friday, same thing. And see what opportunities that we'll get this week. But that's how we started the week off. Another bittersweet one, coming off of the Broncos not being in the Super Bowl, especially off of a personal execution error. So that's how we started the week. But it's a good day to have a good day.
The trader said, what had happened was, that means lying.
What had happened was, and then so, and that's where, we're at.
Usually,
man, you know how the team go.
I think they need to combine curling and boxing. Sweep down the lane and then box for 2 minutes on the ice. Repeat. Mike, I believe you have just described hockey. More or less. Any ideas for hood earnings? I think if you were going to trade this, I would say long is the way to go. I'm not going to get involved with this, but hood they're always they're innovating. They're always innovating, always coming up with new things. And I think as they issue guidance, you're always liable for them to say we are adding XYZ new product or new feature and give themselves a little bump in that regard. Has Robinhood been successful with events contracts at all? Has anybody taken a look at
not sure.
their sheet and
I saw
that out? Let me know, because I know Polymarket and Kalshi obviously dominating that space at this point.
I saw a couple more ads coming in about it, but I haven't even seen, just for the general market of just young people out there, I don't see much talk about running those things on something like a Robinhood. If anything, I've seen Kalshi pop up a little bit more, just from a personal sentiment.
I agree. Anytime I see screenshots of anything, it's a Polymarket or
yeah. But I mean, Robinhood has all these dollars to back whatever they're pushing, so you would have thought we'd see a little bit more of that from Robinhood, but
Trader Nate, I saw your scalp trading video the other day. Good stuff. When can we expect more videos on the topic? You're shooting one right after this, right?
Yeah, thank you, brother. Yeah, we're shooting one right after this. Going to be talking about some of the different shapes of the profiles and kind of how those form in live time. So I think it'll be a fun one.
Always working.
It'll be a fun one. I'm doing good in Hood right now. You're doing good in the Hood. There we go. Sold a put Friday. So I take it that Robinhood has been rallying a bit. We can shift gears here quickly. See what Hood has been up to. Get off the 1 minute chart, zoom out a little bit. Let's go to the hourly. I don't know. I've been really fond of the hourly. I don't know. I used to do the daily a lot, this, that, but I don't know why my default index finger settings is taking me to the hourly.
I'm either daily or hourly.
Yeah.
My kind of general rule of thumb is that if I'm looking at daily, I'm thinking I'm going to take a 60 to 100 DTE trade, and if I'm looking at hourly, I'm thinking I'm going to do 30 to 60.
Yeah.
Sort of. And then just within those ranges, I'll kind of just choose whatever has the highest or lowest IV based on whatever expirations at the highest or lowest IV are relative to what I'm trying to do with the position. If I'm selling premium, I want more. If I'm buying, I want less.
What anybody know what the earnings said for Hood? I mean, Hood doesn't look too bad.
Is it later today?
Is it later? So I see the earnings over here on the chart. So we got earnings after the bell the 10th. So we got earnings after the bell tomorrow. Okay. Huh. No, interested. It's kind of interesting to see most of the volume, most activity took place up here before we had the break to the downside from the swing high all the way down to the swing low down here. That's how we put the volume profile on here. So if this ends up being the low, we have a range to work with. Like we can use a fixed range volume profile and we have something to work with because we have some low volume nodes in here, right? Because we got a gap there. So maybe Hood is in play. And this is another one I'll keep on the radar, especially with earnings after the bell.
Can we pop over to Philip Morris real quick?
Yeah, what's the ticker for that one?
PM. They went on Friday. I actually never looked what happened.
Okay.
It was good, and then they just gave it all back.
Yeah, it looks like.
Sounds about right.
Oh yeah, it's looking like this candle right here, maybe.
Yeah, I have a naked call in Philip Morris, which is already up 2x, and I'm going to continue to hold this company. They just dominate the entire tobacco space in the world. And if you sell a product that people get chemically addicted to, I think that's a pretty good business model for customer retention. So I am long some Philip Morris.
It's lucky why I feel like a coffee shop would be fire.
Coffee shop?
Yeah.
You can trade Starbucks. Oh, actually, that gives me a thought. I went to a Starbucks yesterday for the first time in a long time. I've hit I hit an airport Starbucks like maybe 3 months ago, but this was my first time actually walking into a Starbucks retail location just out in the world in a long time yesterday. And man, it just made me even more bullish on this company.
Yeah.
They are just doing everything right. This is just what needed to happen.
Are they continuing to do things right, or are they doing things better?
No, it's that they've this whole Nickel, the former Chipotle CEO, who's the CEO at Starbucks now. When he came in, his big initiative was back to coffee, is what they call it. And he was like, we're gonna shrink the heck out of the menu, and we're gonna focus on coffee. We're gonna get rid of all this external stuff, these products that don't sell well that we're trying to innovate with. We're just gonna hone in on coffee and getting people turned around super quick, low wait times. And I went to this Starbucks yesterday, and I was shocked by the menu. I literally was like looking around I was like, where's the rest of it? Because the whole menu now was just like one sign with 15 hot drinks and one sign with like 15 cold drinks, and that was it. And they were all super simple. Like I ordered on the menu latte. Are you kidding me? Starbucks hasn't been that simple in forever. I was like, oh, just get a grande latte. Boom, boom.
Every time I go up there, I still don't know what to ask. I feel like a kindergartner ordering coffee. I'm like, is that one the sweet one? Is it the lot? Is it the lot? What is? I don't know what it is. I just want some.
It's all just different amounts of milk.
I just want some regular coffee that's not too bitter. That's all.
Yeah.
I don't even want anything crazy.
Yeah, it's all just different amounts of milk relative to the amount of coffee. There's at least in the very most basic context, there is espresso, no milk at all, just really strong coffee. There is cappuccino, which is espresso with a little bit of milk. Latte is like half and half, and then macchiato is the most milk. Those are the tiers.
Okay,
so you can kind of scale your sweetness based on that.
Depends on how your trading day is. It's like depends how your trading day is going. It depends on how sweet you want your coffee.
Yeah, exactly. So I went for a latte yesterday, but yeah, it just the experience was so good. It was packed in there, like shoulder to shoulder packed. I had to actually figure out where the line was even starting. They were ripping people through the line, taking orders super quick. Really efficient chain of getting the coffee out, and with they were bringing coffees out like every 15 seconds, turning people over. I had probably 10 or 15 people in front of me, like waiting for their drink when I went over there to start waiting, and they had it to me in like less than 3 minutes. It was incredible. So this new initiative that Nickel is pushing is definitely working, and it only made me more bullish on Starbucks because I do think that they were getting a little carried away with always trying to do the next new thing, and therefore increasing customer wait times every time they did that because it's a new this and that, a new container that you need to have in the line or something that you got to go backwards in line to assemble, and it would just make the wait times longer and the experience worse for everybody. Love what they're doing. I don't think you're going to lose that many people by taking refreshers off the menu or whatever else. I think that most people, when they just want a coffee, and I think that was what was putting a lot of people off of Starbucks. Is that it's like all this.
It was.
Other stuff.
I blame Dutch Bros.
What?
I blame Dutch Bros.
Yeah, I mean, but it's just, to me, it's like let Dutch Bros do that. And initially that was a good business model for Starbucks when they were the only ones doing it. But now that it's become oversaturated and the Dunkins and Dutch Bros of the world are doing that, there's no reason to try to continue to compete as that becomes more saturated. Just be a good coffee place, man. I had a great experience. Starbucks menu was getting ridiculous. The menu at Starbucks is more complex on the mobile app. Definitely need to know what you want before going there. Yeah, I was fortunate to have a couple minutes in line, but I mean, it was perfect for me. All I wanted was a coffee. And I was like, oh, look at that. The menu has coffee on it. I don't gotta sort through everything that's going on here. I want a hot coffee with a little bit of milk. Latte. Boom, done. I did the more illegitimate version of Philip Morris in college. Is there a clever acronym for fear of holding on too long, like FOMO, but different? Metals, crypto, any risk asset you're holding that had a quick run up and now you're looking at paper profit. What? Paper hands?
Paper hands? Somebody called me today? No, not paper hands today. What was that? The menu at Starbucks is more complex. Which one was that? Starbucks.
Writing MNQ to 420.
Writing MNQ to 420. What is that? The day highs? So you're looking for a new day high on the day? You're looking for a new day high on the day. New day high on the day of the day high of the new day. No, this pullback didn't hold very long. And I mean, if we go to the 15-second chart, there must be some massive orders in here, just some massive limit orders sitting in the market, whatever the case might be for the market to respond that quickly after a very quick drop off. This is a 15-second chart. Market sold off. 30 seconds later, we rebound back to the same price that we sold off from. So point of control on the day is 25,381, which is just the price level that had the most traded volume on the day. So maybe some important stuff has been happening around that region on the day. So maybe we see the 420, Brandon, especially if we can stick and hold above that point of control, which is 25,381. Maybe 420 around the corner.
He and Philip Morris got along well after that divorce. just pacing. Yeah, I mean, it's everything. They have cigarettes. They have all the vapes. They own Zyn now, and plus a couple of other pouch companies. If you want nicotine, you're buying it from Philip Morris. They acquired Swedish Match, which is Zyn in 2022. They got all of it. They have IQOS, IQOS. I don't know exactly if you're supposed to pronounce that or just read the acronym, but ECOS, I don't know. But it's a vape system that's very popular in Europe right now. If anybody's ever been to Europe, it's like it looks like a vape with a cigarette sticking out of the top, but it's not. It's like that's like a cartridge system deal. But they use them all over the place in Europe. Every time I've been there, everybody is walking around with those things. And they now just got regulatory clearance to roll those out in America. So that's going to be a big development if they can get those to catch on over here. They're waiting on marketing clearance from the FDA. But yeah, big things happening for Philip Morris. A lot of reasons to be bullish.
Philip Morris on his socials. Big things coming, guys. Big things coming.
I've seen those. Yeah. Okay. I'm happy somebody knows what I'm talking about. It's like, yeah, it almost looks like a piece of like chalkboard chalk, like pushed into the top of a vape. I don't know a better way to describe it, but it's like a little 2-piece system. And yeah, you can switch those things out. Paper hands is usually when you sold too soon. Diamond hands to the moon doesn't help if you keep holding until it hits the Pacific. I mean, I suppose it's like you are having diamond hands, but what's the fear that could, what's the name for? Yeah, you're right. You've identified a good spot here. Fear of maybe FOHO, fear of holding on.
There we go.
I'll coin that. FOHO. ICOS.
You know what I'm claiming? I'm claiming the fofofo. That's what we used to get at Wendy's. The fofofo. Let me get a fofofo. We'll take a fofofo.
Now they got the $5 biggie bag.
Is it the $5 biggie bag? That's what their marketing team trying to get crafty with it.
Well, it's worse.
We got to do it for it. We got to go to $5 now, guys. We can't do the fofofo.
Well, yeah, the fofofo.
It got crafty with it.
Yeah, the fofofo was a junior burger plus 4 nuggets plus a fry plus a drink. The $5 biggie bag is just a regular size burger or order of nuggets plus fries and a drink. It's just not that good. It used to be a great country.
Get that biggie bag.
When I was in high school, we, after a baseball practice one time, me and 3 of my friends went to a Wendy's and tried to do the 4 for 4 challenge, the faux, which is where
the 4 squared.
Which is where it's not even funny. Yeah, the 4 squared.
4 squared.
What would that be? The 256 challenge? Because 4 squared is just 16. Yeah. But yeah, the 4 to the third is what I'm thinking here. 64. I don't know, but we tried to eat 4 for 4s. It is exactly as it sounds, and we were not successful.
We were hurting,
but came pretty close. If anybody's ever going to try the 4 for 4 challenge, the key is to not avoid the bread. The burger bread is what fills you up. So if it's not cheating, I would say discard the buns from 3 burgers and just quad stack 1, and then you just got to do that. 16 nugs, probably like 2 large fries worth of fries. I don't advise anybody try this. We felt terrible for 24 hours.
Make sure you have health insurance. Make sure you have health insurance.
As you can imagine, yes. If you have health insurance, I like Zen too, Rancher.
Gus is paying your premiums on your insurance.
Corella DeVille. It's a tobacco paper. I see. I thought it was like it's somewhere between a vape and a cigarette. It is like a more organic sort of deal. The ICOS. Appreciate the pronunciation guide as well. Trade Pound Mag.
There you go, guys. We're getting a little bit more momentum into this market. Maybe we see 420. Maybe we see the highs, Brandon. Brandon's kicking this market into high drive for us.
It's called not having a plan. It's called to the moon, laid back trader.
Kicks laid back trader from the chat.
Called to the next galaxy. What studies do you do that show the red bars through volume there? It's the volume profile, right?
Yeah, this is a volume profile. More specifically, the fixed range volume profile. You can find it on the left-hand side of the menu when you connect your Tasty Trade broker to the Trading View platform. And if you click over here, this drop-down menu, yours might be in a different order, or yours might have a different tool up right now. I think it just puts the most recent tool that you were using over here. But if you just hit the right side, it'll have the drop-down, and then you have a handful of different indicators that you can use. And then if you go under volume-based, you can see anchored VWAP, fixed range volume profile, and anchored volume profile. Personally, I'm not the biggest fan of indicators, but anything volume-based, I love and would love to learn even more about. But volume-based indicators easily found right here. Fixed range is easiest to use, in my opinion, just because, again, when I was first using the volume profile, never knew how to use it because it lacked so much context. It felt so vague. I was like, okay, what is this? What's the time range of this volume? I get it's a high volume node, low volume node, but like I need this within some context. So using the fixed volume profile or the fixed range volume profile allows you to gain that context because you can encapsulate, the exact information that you want from whatever price and whatever time. So if we take this off, if we just want to take the volume profile from the morning trading price to the trading price right now, take the fixed range volume profile. I'm going to go to the highest day's price, but I'm also going to make sure my vertical line is right at market open. And then I'm just going to drag and drop it at the lowest price that I want and then bring it all the way to the right side to the time that I want. And then it'll show us all of the different trading volumes at each price level within that little time window, that little snapshot that you take with the tool.
Wendy's series was a triple, double, single, fries, and a bowl of chili. That is more insane than the 4 for 4s because those are also junior burgers too. You're talking about six burger patties in there.
Sheesh.
Plus a bowl of chili. That's crazy. Gonna you're gonna liquidate that asset pretty quickly to call back to our Chipotle conversation last week. I'm sick of selling call spreads and ending up in the money. Any advice?
Choose the other direction. I'm just kidding. I'm just kidding.
I was going to say some smart ass stuff like that too.
I'm just kidding.
I was thinking that.
No, I know something that I would run into a lot whenever I was selling some of the out of the money call spreads was sometimes I wasn't going out far enough, or sometimes I wasn't giving myself enough time. So sometimes maybe looking the 42 or 45 day expiration, maybe go further out to try to collect enough premium, but always giving yourself a little bit more time really helped me. Something I ran into.
Yeah, I would say on my side of the equation, maybe play. I don't know exactly what your strategy is, but if you're doing them a lot with continuations, it might be a better strategy to try to target reversals where there is much quicker or less quick confirmation of what's going to happen, and there will still be premium available for you there. But when you're trying to play a continuation, sometimes that can be a little bit trickier because as it starts to run out of steam, it becomes unclear whether you should exit or not. I gravitate towards reversals in that context because if you get the confirmed bounce or the confirmed fall off, which I guess you're talking about selling call spreads. So if you're playing a reversal on something that's running up, you will know very quickly if you catch that confirmed reversal towards the downside. If you see a bearish engulfing or if it starts to pick up steam to the downside rather than trying to game out whether it's going to continue to put in these small legs to the upside or to the downside or not. So yeah, a lot of ways to attack that. But yes, I think Errol also makes a great point. Just maybe be a little more liberal with your expirations, and you can always roll as well. If your convictions remain, but you find you were just too short dated, just roll them out another 30, 45 days and see if you can't get the move that you need by that time. Of course, assuming that your original conviction remains and that there is some backing for that.
Crypto's not looking too bad. I know we went on a little bit of a roller coaster the last few days, but just looking at some of the profiles here, we can see that from this time range, from January 26th, this was from the beginning of January, all the way through the first few days of January, we created a level of balance here in between 77,000, 79,000. So just write out balance. Because, I might pull the trigger on this long if we get it, and we'll just use this as a great case study and see if we can get long to the next balance. But we have another large area here of a lot of low volume. So if we begin to hold above here, this value area high from this range of balance that we produced, then it'll be a little bit more attractive to potentially take maybe a short-term long. I don't know. Crypto's been really volatile. Bitcoin has really been slammed to the downside. But maybe for a little short-term bounce, maybe potentially get long in this low volume node to the next level of value or just headed in that direction. Keep an eye on it. Just wanted to do it here because we'll circle back around to it. But I do like that Bitcoin it seems like it's in play. It had a lot of volatility, but it's looking like it's getting a lot of trading activity nonetheless. So,
I know you need to go shoot pretty much at our time here.
We'll go ahead and get those things done. That's pretty much off the top of my mind. We'll see what we get. We'll manage these positions. It's Monday. It's a great day to have a great day. Let's have a good week, and we'll manage these positions together.
Yeah, getting a green start to the week. Trying to see if there's anything else we didn't acknowledge here. I saw somebody mention Bloom Energy earlier. That is on a serious run. I will be the first one to say that I thought Bloom Energy was dead after it began to sell off at the end of November. So my congratulations to you for being bold enough to get long in the face of that move. And yeah, I guess that's all we're going to have for today.
Cool. That's it on my end.
All right. Thanks so much, everybody, for watching. We really appreciate you taking the time out of your day. We never take it for granted. Errol and I'll be back here, same time, same place, 12 o'clock noon Central Standard Time tomorrow. Be sure to come back and hang out with us. We will see you guys next time.
Thanks, guys.
It's option. Jive. Nicky, we are back, son, and that's right. It is time for an option jive. Even the S&P is exactly where they were when we left you just about 90 seconds ago, down 16 and change. Go.
Cool, let's do it.
Option jive research corner.
Research corner, recapping last week. A lot happened last week.
Yeah, big week.
Yeah. For being violently unchanged.
The Dow, I like that for the first one. Above 50,000 for the
CNBC
first.
had the hats.
Did they?
They had the hats ready. The people on the floor had the hats.
Who did?
like when they would go to somebody on the floor, they would have the hats because they have them all.
They did that again?
Yeah.
Good for them. Stay true to their content. That's good. Yeah. All right, 50,000 for the Dow.
Yeah, so the Dow closed above 50,000 for the first time following the tech-led drawdown earlier in the week. Kind of amazing that you had the Dow at highs and then the NASDAQ looked like duty.
Yeah, it's like somebody picks up the torch and continues the rally right now. That's what it seems like, just a little bit of a rotation back and forth. I mean, the Dow 30 stocks leading the clubhouse here makes for a shaky ground, in my opinion.
For sure.
Rather have the NASDAQ or the S&Ps. Go ahead.
The other big story, obviously, Bitcoin. So this was a huge liquidity shock. You had a huge move in Bitcoin. I mean, what did we start the week at?
Oh, in
90-ish?
In Bitcoin?
I guess we started the year at 93, 94-ish. We've had about a 30, 40% drawdown.
Yeah, the year, January 2nd high was just under 92. January 2nd. Went a little bit higher after that, but yes, you're right, down to 60 or so. It's been in a free fall.
Couple things to look for coming this week. On Tuesday, you got retail sales. Wednesday, you have the jobs report. Friday, you have CPI and core CPI. I don't know if those really matter at this point.
Not to me, but they will to some. It doesn't matter to me, but again, to some it'll be very important. So anything that brings volatility contraction or volatility expansion to the market, and these do. We've done the research. Like, I would say I don't care about anything that's coming out, but when you have these numbers come out, they usually do support volatility, and that brings opportunity. Yeah. Opportunity brings trades. Trades hopefully bring money. That's what I'm
sure.
So I'm excited for it.
In terms of performance, violently unchanged has been the flavor of the week. So we had another week where the S&P was basically unchanged, but if it definitely had a lot of big movement underneath the surface. Single name volatility has been way higher than equity volatility. When you look at some of these stocks like your Microsoft, your ServiceNow, your Shopify, these stocks are moving 30, 40%, while the markets are basically unchanged here. NASDAQ was the weakest of the group, down 2%. You had the Russell and the Dow keeping markets afloat here. Obviously, the Dow kind of the story of the week, being the strongest of the group, up 2.5% on the week. But it's been flip-floppy, dispersion. Like all the phrases have been used this year so far. I mean, we've gone pretty much nowhere for the whole year with big moves underneath the surface.
Exactly. And the other thing you can take from this is the NASDAQ being the weakest of the group. It doesn't have a green and a red or a red and a green. It's just red.
Do you like that though? Like, is that a bullish indicator for you that the NASDAQ down 2% and the market has gone basically nowhere? It seems like that's a good thing. It's like everything else catching up and kind of holding the weight a little bit. We talked about RSP, which is the equal weighted S&P 500 ETF, hit all-time highs last week. Is that good? Is that bullish?
Going nowhere and having the NASDAQ weak is bullish because you would think that you would get a little bit rotation back into them and they would catch a little bit of a bid. So I'll revise my volatility, watch volatility and the NASDAQ. So if NASDAQ starts catching a bid while volatility contracts, then you might get yourself a little bit more movement to the upside. Next one, please.
So looking ahead, so we got basically the same thing. I mean, we've started each week with a 19 vol. We've had a 20 print at least one time each week so far in 2026. So got $111 expected move, about 1.6%, and pretty low VIX. VIX at 1861 right now.
So you know what that means to me? It means that I'm not getting paid on the premium that I'm selling, and I'm getting paid on the time. Which means if we get a day like what I think might happen today, where we have an inside move, 25 handles one way or the other, the volatility will come in quite nicely on your existing positions, even if it doesn't come in on /VX and some of the others. That's the way I look at this slide.
Need to get bailed out on a couple.
Need to get bailed out. Yep.
Delta-wise. In terms of IVR, so you've had volatility contract a little bit across the board here. Bond volatility has come in. You've got gold and silver volatility, which has come in nicely. A lot of those, we were selling like 1 to 2 or 3 strangles in SLV and gold in terms of contracts. Those have been awesome. And
they've been money.
With the bounce today, it's going to be even better.
Yes.
That volatility has come in significantly. Crude volatility still high. I know it's come down a little bit, but crude is one that's had some relatively sticky volatility there. Natty gas as well, volatility coming in, but still at relatively high IV ranks there. Bitcoin volatility.
Yeah, that's 85%. It's down, but it's not down 85%. It's just down to 85 from 100 plus.
Yes. And then Bitcoin volatility, if you're looking at like IBIT, Coin, Hood, all have pretty high implied volatility. So that has definitely increased over the last week.
Yeah, and they've been catching this volatility like on an IBIT and everything on the way down, which is a little bit unusual.
Change.
So if you were kind of bullish or still bullish now, I mean, I know IBIT is $38 or $39, and I know it got down to around 36 or 37, but there's some premium to be sold in IBIT, especially if you're a little bit bullish. Buy stocks, I'll call, some sort of Jade Lizard, something like that. If you're bullish in there, this call skew, take advantage of it.
I, by default, have to be a diamond hands at this point because I'm just so underwater that's the only way I can get bailed out at this point.
It's a horrible feeling.
Yeah, it's
usually takes months.
It stinks.
You're welcome.
Biggest movers last week. I mean, to the upside, this is not a list that you typically see. You have 3M, Bristol Myers in there, Amgen, Pepsi up 11%. I mean, these are.
More interesting to me is Amazon down 12, Oracle down 13%, the CRM, Qualcomm down 9%. I think looking to the red side is easier to find something to do than looking at the green side here in some of these stocks that are up there. They're the ones that are kind of
tells you the story of last week, though.
Yes, it does.
I a couple of those on the top. Triple M, Amgen, Pepsi. I think those are all Dow stocks. Pepsi in the Dow.
Ooh.
Coke is, I think. Either.
I don't.
Those feel like Dow stocks.
Let's see. Dow Jones Industrial. Here you go, son. What do you want to know?
Pepsi. Is Pepsi in there?
LMNOP. No, Pepsi is not. Coke is.
Okay, there you go.
KO definitely is.
I knew one.
But Pepsi is not. Sorry.
So we got a VIX spike to 23 intraday, the highest level since last November. Average daily realized volatility reached 1.48%, despite going absolutely nowhere.
Yes.
The entire week, which, I guess sort of a surprise. I don't know.
As a look back, I mean, it's looking at the left side of the chart. I didn't think it was going to happen.
I didn't think we would be back at just off of 7,000. I thought we would at least stay down there for a little bit.
Agreed.
Not so much.
Agreed. Next one, please. That's a great thing about the market. It always provides something that you don't expect. And then the other side of that is, what are you going to do about it? You have to say to yourself, all right, well, I didn't expect this. What am I going to do about it? So if you didn't expect it, then do something about it.
Mm-hmm. So the Dow performed exceptionally well during the last week's swing, reaching a new all-time high on Friday while other indices lagged, especially the NASDAQ. That NASDAQ Russell, NASDAQ Dow pair finally worked.
Finally worked.
They waited years for that. And it worked last week.
That is correct. And good on you?
No, we didn't. I
know.
I know. I was on the other side of that.
I know. Me too. Good thing to know. I don't know what you can do about it. Doesn't seem to affect anyone one way or the other. The Dow, DIA, I know in Europe they trade a lot of it, believe it or not. For us here, DIA markets aren't that great. Dow 30 stocks are not as interesting or as volatile, I guess is what I should say.
We did scalp the micros before.
You did. You did.
For a couple points.
You got in that all by
the face
yourself.
ripper.
Yes. So good on you. And you from the short side too.
Yeah. Took like.
If you ever learn to buy something, you'll be unstoppable.
I know. Right?
Next one, please.
So silver was only down 0.1% over the last week, but realized volatility was insane.
Nobody had that on their square pool.
No.
Unchanged for the week.
No. Huge moves there. Do you think that move is done? Do you think we stay here at like 70 to 80? Is that the new spot? Gold at 5,000, maybe you get like a 4,800 to 5,000 range kind of thing.
Maybe for the day.
Maybe for the day.
Yeah, maybe for the day.
I don't think these moves.
I don't think it's over.
Yeah.
So volatility. I mean, no. It's volatility in silver. 84, 85. I mean, it's telling you it's going to move. Yeah. And that's a great thing right there. I mean, volatility surging 7%. If you haven't been trading these products and you're looking to do something, you on the option side,
you still have time. You haven't missed anything. Yes, volatility is still.
You haven't missed a darn thing. Nope.
Yeah. Getting out to crypto here. So it was an absolute bloodbath in crypto. So you had February 5th was the crash, 14.8% historical volatility near the 95th percentile. So we were down 16% on the week. It was the worst. It was in the worst 5% of its history. So you've had some huge moves here. Averaged about 8.4% daily volatility, far above the 10-year average of 3.5%. And that's percentage moves. So 8.5% percentage move is a big move. Crypto just getting absolutely hammered all week.
So if you've been a hater and you had FOMO, maybe
a little chance to nibble.
Maybe you throw a C note at it. You know what I mean? See what's going on there. You could be one of the cool kids too. Mm-hmm. If you've been holding the bag with diamond hands, I don't think you do a thing. I mean, what are you gonna do here? I mean, if you had that personality where you've been holding it from 20,000 to 120,000 back to 60, you're probably looking to nibble.
Yeah.
I don't know. I mean, it's probably worth an opportunity shot here at some point if you've been late to the game. Mm-hmm. I don't know. I think you'll have time to manage a winner if you bought some here. I don't know. I mean, nobody knows the future, but it's certainly a lot more interesting here than it was, double this price.
Yeah, for sure. Yeah. We got bailed out on our MET position on Friday, which was nice.
Yeah. Next one, please.
So for earnings, couple big moves. You had Enphase, MSTR, SMCI, and Eli Lilly to the upside. On the downside, I don't even know why we include Snap there. It seems to go down every single day. But AMD, big move there. PayPal, which is another dog. I think I've permanently removed PayPal from my list of tradable symbols. That stock stinks.
Yeah, and even the stocks that went higher didn't have great markets in them. I mean, maybe MSTR you could have traded, but that was about it. And MSTR was down on Sunday.
It was down like $50 into earnings. But that was when we hit. It was below their $76,000 basis. Everybody was talking about it blowing up.
Next one, please. I can't believe any of that stuff.
My favorite slide. Look at this. So 50% winners, 50% losers for earnings. Average return, 0%. So it comes in like this every single quarter. It's basically a 50-50 shot on any sort of earnings trade. When you net it all out, the average returns are basically nothing. So the sentiment for earnings trades depends on which ones you're in.
Yes.
So if you were long Delta into Amazon, you thought every move for earnings was a huge move to the downside. That's just not the case. It's all
subject to your experience, right?
The experience.
I never traded earnings as a floor trader. Never traded earnings as a retail investor. Got suckered in by somebody else to start trading earnings, and then a few years ago decided that I was going to go back to what I knew, which is that earnings are really just a 50-50 shot on
keep them small
direction. Keep it small if you're going to do anything, or abstain and post earnings. Like for me, earnings trades make for good post earnings trades. Like I like trading post earnings on stocks. Some of them work, some of them don't, but it's a lot more like trading normally than waiting for earnings.
For sure.
Next one, please.
So this week we're kind of at the end of earnings season. You got a couple names in there. You got Lyft, Datadog, McDonald's, Shopify. We have a position in Shopify, a little bit of long Delta, bought the dip there. Cisco, you got Crocs, Coinbase.
Yeah.
DraftKings. A couple names this week, but definitely towards the end of the earnings season here.
That's correct. Let's take a quick 90-second break. We'll come back. Even the S&P is down 18. NASDAQ down 94. That's your weakest of the group. Russell down 4. And the Dow down 120 and change. Volatility massively unched right now at 1915. We'll be back in 90 seconds. We got more Tasty Live after this.
Violently unchanged.
Violently unched. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure. Go.
E-minis, unched.
E-minis.
Session here. They've gone nowhere.
Oh, they're up 5 handles.
Yeah, 5 handles.
Yeah,
They've
yeah.
gone nowhere.
Nasdaq's actually caught a little bit of a bid here, up 33.
You were right about volatility, though.
Yeah, volatility contracting 1875. I thought we'd go nowhere for the day so far. We've really been going nowhere for the day so far. Yeah.
Cool.
So far, so good.
That's
good. That's good. I'm ready.
Market measure sponsored by the SIBO.
Sponsored by our friends at SIBO.
Weekly 0DT breakdown. How do you think last week was for 0-day trading? End of the week, basically nowhere.
Yeah. I mean, intraday violently unchanged. Man, I saw the tweets out there that people were doing pretty good. So I think if you managed them, you did pretty good.
Because you had volatility a little higher, you're selling further out of money.
I think you did pretty good. I think we were okay. We weren't that aggressive. I think I shied away from doing the 0 days last week, but we had 1 or 2 winners, I think, on the week.
Yeah.
Yeah, we didn't do them every day.
You're going to be surprised by this.
All right, let's go. Let's go. I'm ready.
So SPX was violently unchanged, our phrase of the week, or mostly of the year, over the past week. However, intraday price action was highly volatile. We had some huge moves underneath the surface. You had some of the AI stocks going nuts, software stocks, Bitcoin. You had gold and silver going crazy. It was kind of a crazy week in all markets, ending up basically unchanged, violently unchanged, our phrase for the week. Just to quantify volatility, so on this next slide here, volatility last week, including the close-to-close volatility intraday and overnight, was well above average. So we broke down implied volatility here of the 5-year average versus last week. So you can see across the board, it was very volatile. So you had almost 2 times the realized volatility as you did on average over the last 5 years. So definitely one of the most volatile weeks here for 0DT trading and just trading in general. So we're going to look at our classic 20 delta for the short options, $20 wide iron condor. We actually did $15 wide this morning. We've been doing like $10 to $20 wide, depending on the day and depending on how much risk we want to.
Yeah, which I don't know how valuable that is. I mean, I think we're kind of
how valuable what is
going $10 wide when you're less aggressive, going $20 wide when you're more aggressive.
I think you got to be more mechanical. If you're going to do this day to day.
Yeah, if you're going to do it day to day, you probably should just stay with the $20 wide. I think we should probably stay with the $20 wide and just continually do that. We've been going to the $15 wide, being less aggressive. I don't think that really pays off in the long run.
I agree.
Okay.
So looking at the trades from last week, it was the first losing trade in nearly 2 months, 0DT. So we're talking about the 20 delta, $20 wide. We're doing a 25% take profit on these trades. We've been a little bit more aggressive with our trades of like 10 to 15%. For the data, for the studies that we've been doing, we've been using a 25% profit taking order and then no stop loss if you don't hit that. So we had a first losing trade in nearly 2 months. It occurred on February 3rd with a full loss of $1,600. Was February 3rd, was that Monday?
February 3rd? I can look for you right
now. Tuesday. It was Tuesday.
Oh, you did quicker than me.
So
Tuesday.
That one loss pushed the cumulative P&L into the negative territory for the year. So we're going to take a look at why that occurred. The other ones here, so the way you can look at this chart is the green ones are ones that were profitable, and it's the point in time they were profitable. You could see last week with the volatility, if you were targeting 25%, you really had to hold these towards the end of the week, which is contrary to what it's been for the rest of this year, where you're out before like 10, 11-ish. That's kind of like the limit on these trades. And we've been trying to do that, anyway, just to get them off before we end the show. But last week, the volatility led you to holding these trades a lot longer. So just an FYI for you here. So they were longer holds.
Yep.
And you got the big loss.
And you have the big loss, yes. So looking at this, if you were just looking at it from a point of view where I want to incorporate this into my trading, and yes, last week was probably one of the most volatile weeks that we've seen. Would you, knowing this, would you think about it as something you would want to do?
Well, I think this points to kind of being a little bit more aggressive with profit taking. If you're, for the purpose of the study, we have a pretty strict, 25%. But in real trading, you can look at a trade and say, you know what, this moved like we did just now with Dr. Jim. I had a 75-cent order in to take profits at 75 cents. It moved 60 cents in 15 minutes. Yeah. And so, when you're actively trading, you have that flexibility. I think that's what the takeaway from this slide is that, if you can be a little bit more subjective day to day, you can take those profits quicker and avoid the big loss. And then, for the ones that ended up being winning trades, you miss out on a couple dollars there, but you avoid the $1,600, loser by just taking the quicker profit or loss.
Perfect.
So just looking at February 3rd specifically, so February 3rd finished down 0.86%. That's on the market itself, but the strong one-directional move lower from the market open made the session particularly difficult to manage. On the last slide, you didn't really have any point in time where you could manage this trade for any sort of profit. It went against you basically from the start of the day. Thursday and Friday both experienced large total moves, raising the question of why those days remained profitable. You had two-sided action on those 2 days, which is something we're going to look at on the next slide here.
Even going to today's trade, I know it's only 1 day of study sample set. You closed it at $4.50. It's trading at $5 right now. So, yeah. I mean, it might end up being a full profit.
You put it back on.
You actually could if you wanted to. But I mean, usually after we're done.
Yeah,
kind of thing.
Move
it on. It worked. It's we see you later kind of thing.
You don't like the risk. I get it.
I don't. We got the win. Why turn the win into something else?
I agree. So the
you at home could do what you want, right? Like if you're sitting watching. Well, we're going to talk to the trade desk in a minute. I'm not going to watch the market.
We did do a segment on if it works before 10, does it make sense to redeploy it? And it did actually make sense to redeploy it.
If it was before noon.
I think it was before 11. If you opened it at like 9 and then closed it before 11, if it made sense to redeploy at those same deltas, so you adjust based on where the market is, but I agree. I don't think we need to push the chips. So this next slide, we're looking at February 5th and 6th. No, go back. Sorry. So unlike February 3rd, other large move days either swung within the range or remained in the profit zone long enough for the positions to be managed successfully. Again, this is why we manage these trades, because you had huge moves in the market. I mean, you're talking by the end of the day, it was up 100 points on February 5th. You're getting your face ripped off on both these trades if you're not managing this at some sort of profit target. 25% is a little past where we manage them, but it just goes to show you're sometimes you'll miss out on the other 25%, and then sometimes you'll avoid a $1,500 loser, and those $1,500 losers are a multiple of what you're missing out on each trade day to day. So
it takes a lot of rights for that one wrong.
Yes. For sure.
You're managing early.
For sure. So this just gives you an idea of why we manage those trades. Next slide here. So last week's price action differed meaningfully from the long-term behavior. So SPX spent a similar percentage of time outside the short put and short call strikes, and the time spent beyond those levels were significantly longer. So this tells you that we had big moves and then we stayed up at those levels. There was no real two-sided action there. You had big moves in both directions. It was kind of one-sided. And so you can see from, and this is the time the SPX was above or below our short strikes here. Long-term average is about 10 to 15%, which is, works out to the probabilities. If you're selling a 20 delta put, you expect it to be tested about 20% of the time. It actually comes in inside that because volatility is typically overstated. Last week you had volatility that was understated.
Right.
So you had a little bit bigger moves there.
Sweet. People love, and again, sponsored by the CBOE, so thank you. People love the 0 days. I mean, and you could see that in the Mag 7 getting the Monday, Wednesday, Friday, and it's only inevitable before they get the weeklies there too. I mean, a lot of, remember when they first started this, they were talking about how, this was gonna explode volatility.
Yeah, explode the market too. It's going to make the big moves in both directions.
Right. And we've had nothing but. I mean, it's been really the same as it ever was. And volatility is really kind of muted. You can buy now volatility on a daily, weekly basis, event driven, if there's some sort of news that you're trying to protect pretty easily. I mean, it really had the opposite effect. And look at volatility right now, down 60 cents on 1850. We talked on Friday how you were not going to get paid over the weekend.
Now you're
volatility. You're getting paid on that volatility right now. We also talked this morning about how it was going to be kind of a quietish inside day, and it's really a third of a percentage point to a quarter of a percentage point. It really is an inside day in the markets. I think we made some nice calls here.
Yeah, and a nice bounce in a lot of these stocks that we've
needed a bounce.
Gotten long delta in via the move.
Yep.
Yeah.
Agreed.
So last week's 0DT performance lagged long-term results because of that elevated trade duration and just the volatility we had in the market. So we had to hold the trades a lot longer throughout the week. Had a lesser win rate. You could see your hold time was almost twice what it was through the rest of our past studies here. So it was just a more volatile week, but you can't avoid those. You're going to have those sort of weeks if you're trading this every single.
Unfortunately, you are, son. You can't avoid them.
Finally, this last slide. So we compared iron condors to put spreads. So a lot of people just like doing the put side, which has worked historically. I know we had that one study that they were like 95% or something like that. The 0 day options have only been around for 3 years now, and it's mostly a big upside move. So put spreads produced results similar to iron condors this week, largely driven by last Tuesday's downside pullback. So basically what we're saying here is that the iron condors and the put spreads P&L wise were pretty much the same because they both experienced the max loss on Tuesday. So you lost, $1,400-$1,500 on both those trades. So you've been, they perform the same. So the impact was concentrated on the downside with wider put spreads showing weaker average P&L, indicating that the structure with wider risk exposes more to one-sided moves. So if you're doing, wider spreads, you're going to have more risk on downside moves here. And so you can see across the board, they're all pretty much in line here from put spread to the iron condors there. But win rate has been 80%. Which is good. I mean, the maths.
The maths. Now, when you put these trades on where we're putting them, I think the probability of success is less than 80% when you're putting on. So it's overperforming.
Yes.
I mean, it's overperforming.
Yeah.
So you got to like that part of it.
Mm-hmm.
I mean, I think that's why the public has gravitated towards that.
Yeah. But you got to be careful because you get that one big loss and then.
You always got to be careful.
Got to spank you a little bit.
For sure. Let's take a look at the market before we say hello to our trade desk. Even the S&Ps are up 15, trading near their highs of the day, at least the highs for when we've been on the show. It's been a pretty tight market here. We've been inside the moves from last night. NASDAQ up 64. That's your leader. NASDAQ and even the S&Ps, your leader in the clubhouse. So this morning, they were the weakest of the group. The Russell, which is up 4, and the Dow, which is down 22, were the leaders in the clubhouse. Now they're small, but when you look at this, a 0.25%, 3%, very tight inside day. Volatility in by 70 cents, 1850. Big move lower, a little more than 3%, with the market really doing nothing, just showing you volatility really is mean reverting. And you're finally getting paid if you hold over the weekend. You're finally getting paid for your theta decay. Bonds are down 6 to 115.10. Bitcoin also not that volatile this morning, hanging out at 69 and change. Ethereum hanging out at 2,040 and change. Oil, we haven't put on an oil position, but it's back to $64, up 50 cents, about 30 cents off of its highs, significantly off of its lows of 62.62. The metals are catching a little bit of a bid here. Gold in the middle of its range, 5,057 up 1.5%. That's $78. Silver, a bigger mover, been a little bit of a lagger, as you can see here, trading up $4.65, a 6% move. So a big move in silver. Nat gas lower. I know you've got a BE trade that you're trying to fill. Did you finally get filled on it?
Finally got filled on it.
You did, $5.65. So good job out of you.
Yeah.
We closed our SPX to go with the market measure that we did today. And now it's time to really take a quick
volatility really coming in. Like I had a Microsoft short put at 400. It's basically a scratch, and I did it almost $15 higher from where Microsoft is trading right now.
And you're selling puts. That's a long delta. You got the stock going the opposite direction.
I sold those puts into like day 2 of the sell-off, not day 7 or 8. And so those are basically a scratch now. So you got volatility coming in a lot of those names. A lot of the tech names, it seems like, with a little bit of a bounce, it's the best of both worlds here today.
Oracle up $12. It was up about $14, $15 a moment ago. Its volatility is still high too. Ivy rank of 98 with the earnings coming not until March 9th. So maybe you got something to do there. Maybe both sides. Unlike me, I'm stuck on the long side. We're going to take a quick 90-second break. We've got my friend Q and my man Ryan coming in here. Let's talk to them immediately following these messages. It's Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Eagles, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do. Man, first and foremost, congratulations to the Seattle Seahawks, to my Seattle Seahawks. Like, we did it. Man, I knew we could do it. I've been telling you guys about them the entire season. That defense is absolutely ferocious. I mean, you got Hall, and then all those other guys, absolutely just phenomenal job by our defense yesterday, and there was just no answer. There was no answer. Will Campbell, Drake May, whoever else, like, they just couldn't stop him. They couldn't stop him. I tried to tell you guys for the last 5 months. I hope that you were listening. So welcome to the show. I'm so glad that you are here. If you are watching over on the Tasty Live Network, now it actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the program. Of course, you can celebrate if you are a Seahawks fan, along with myself and my family, or you can celebrate if you are indeed a bull in this market, as the EME S&Ps are up, the NASDAQ is up, the Shifties are celebrating, the Hunt brothers are happy, like everybody is up in arms and ready to go. Just strawberries and sunshine on the horizon. So Josh, go ahead and bring us into the market, or somebody bring us into the market. Thank you there, James or Josh, or whoever did that. I think Josh just left. He just left the show. Like, he's gone. Like, he's done today. He's calling it off on a little half-day action. So even the S&Ps up 45 on the day. You've got the risk-free instrument, also known as the NASDAQ Futures Extremely High Risk product, up 253 on the day. You got the boomers up 44. Now, having cleared 50,000, they can kind of relax a little bit, maybe weave in some half days there, take a little PTO. I mean, the boomers, they've been doing it for about 30, 40, 50 years now. So they're due for a wee little bit of a break. You got the Russell 2000 up 23. You got bonds up a couple ticks. You got notes up a couple ticks. You got oil up 75 cents. Got UB40s even up. Man, look at the Shifties up 118, just quietly up 118. Right? It's just like yesterday. It's like the Seahawks, my Seahawks, man, just quietly 3-0. Just quietly 6-0. Just quietly 9-0. Just quietly 12-0. Just quietly dominating that football contest. And it was a thing of beauty. Yeah, gold up 119. You got silver up $6 today. So we're back, baby. We are 100% back to the whippiness in the metals market. You know, gold up 120, silver up $6 or whatever else. And so the next thing you know, it's gold 6,000, silver heading right back to 122 in the next couple of days. And of course, on a day like today, I would fully and firmly expect volatility to be getting smashed to pieces. And that is indeed what's going on. Volatility futures down 84 cents. And then you've got the spot volatility. The old VIX, as irrelevant and archaic as it might be, it holds a very special place in my heart, which I've shared on the show many times before. So I will not make you guys go through that again. Yeah, I think that's what I wanted to say. VIX down 81 cents. Either way. Hey, it's only Monday. Hey, we're only 2 minutes into the show. Like, it's only going to be another 40 minutes, guys. Don't worry. It'll be over before you know it. And so, all right, so market commentary, it's over. It's done with. It's probably not going to make you a better trader, but it is right on par with what you would find elsewhere, of course. So what I want to do today, AMD, guys, look at AMD. Look at AMD. Chalk went up to the do-nothing strategy again. MES, look at MES. Chalk went up for the do-nothing strategy again. BA, look at Boeing. Parts falling out of the sky, like planes do, whatever. It doesn't matter, man. Look at Boeing, like we are back. We are 100% back on this Boeing spread. And so we're going to take a look at all that and more. Look at Tesla up to 420. Then look at Snapchat unchanged on the day. That's basically up for Snapchat. I mean, this is some good stuff here today. I'm going to get to all that stuff in the next couple of minutes. But I want to take a look at you guys really quick. Look at A-Will's in the house. Man, Ash Finn in the house. Got Wolf is in the house. Man, Sam Ellis here. Ranch is in the house. Greg Lutton in the house. Man, Jared Kramer even showed up. Trader Nate's here. Ramsey's here. Joel James. Lobo Doe's in the house. Man, I appreciate you guys so much. So, all right, let's go ahead. And again, remember, guys, if you guys have a question for me, I would drop it in the chat box. I'll try to get to as many as I can. I typically get to the questions right around the second half of the show or thereabouts, give or take, 5 to 15 minutes. And so drop your question in the stream. The earlier you get to the stream with that question, the higher the delta that you get an answer to your question. Now, you may not like the answer, and it may be a very incomplete answer, but I will tell you whatever I can tell you related to your question. If you don't get your question in early, then your only hope is what? Your only hope is the surprise and delight. Like your only hope is the surprise and delight where I take a couple questions at random in the middle or at the end as we kick off the Q&A, and the deltas on those are very, very, very low. And so do yourself a service and go ahead and get your questions in early. So all right, let's take a look. All right, so number one, let's start the show. We'll start the week off kind of strong today with a little bit of a victory lap on AMD. Now, we're still down $4 on the trade, but no one takes victory laps on modest losers better than I do. So AMD up almost $9 on the day. You've got the stock up to 217. We are short a 210 put. And so, I mean, this did not look so good right after earnings, right? I mean, earnings came out and AMD basically said, like, we're the Seattle Seahawks. They basically came out and said, like, we're kind of crushing it too well. Like, we're kind of dominating a little bit too much, like too much revenue, too much profit, too much CapEx, like too much of a vision for the future. And the market wasn't ready for that. Like the humans weren't ready. The robots weren't even ready. Like nobody was ready. And so the stock obviously got hammered on earnings, but we sat tight. We did nothing because it is the default setting for a reason. And right now we're in a really, really good spot. You've got, the 210 put that we're short. We're out of the money now, man. Like we were in the money, man. We were in the money about what, 20, 25 points at one point. And so hold on, let's take a look at AMD. Let me look at a chart of AMD. Is that a daily chart? I think so. That's a monthly chart, man. Look at that monthly chart. Man, that's really something. Let's go to a daily chart. I'm not ready for that. Speaking of not being ready, I'm not ready for some long-term investing conversations. Not at all. So, all right. So if you look right here, you can see, we were down to the low on AMD was 190. So just a titch over 190 and some change. And so now we're all the way back to 217 and we are making our way towards this gap that we are about to close in the next, couple of days, couple of weeks, whatever. I mean, we're already in the March cycle. There's plenty of time on the strategy. It doesn't have to happen today. This is not a race. This is not a competition. Like it could be later this week. It could be next week. It could be whatever. It really doesn't matter now that the option is out of the money. This is when you can kind of breathe easy, right? This is when you can kind of be like, hey, the position is doing what I've asked it to do, what I have politely asked it to do. And so now I can just let the strategy do the heavy lifting. Now I can just let the strategy do what the strategy does naturally, which is just let time go by, let volatility contraction help us out. And then, of course, because it is a short put, any additional movements higher in the stock are going to help us. This is a positive delta position, of course. But the nice thing is, when AMD was 190, 195, 200, 205, we were a lot more bullish than we are now because we really wanted/needed the stock to jump back over the hurdle that is the strike price on that short put. Well, now that it has successfully done that, we're in very much kind of a wait and see type of situation. We're in very much just kind of like a, let time go by, kind of laissez-faire, kind of hands off, a little bit more relaxed with this position. And we're in a really, really good spot with AMD. But, I just wanted to obviously highlight and illustrate the power of the do nothing strategy. I mean, this is exhibit quadruple H at this point in terms of the powerfulness, or even just the straight power. You can even keep it a bit simpler than that, of the do nothing strategy. And there you go. So AMD, we sit tight, we do nothing. It's still a loser, but we still found a way to muster a victory lap nonetheless. So there's AMD. There you go. So MES, let's take a look at MES. So this guy is, again, guys, we sold it for 89.25 points. It's currently marking at 41 and 41.5 points. I'm no Julia Spino. I'm no Jacob Perlman, but I'm looking at that and I'm thinking we're pretty close to 50% of max profit. In fact, I'm looking at that and I'm thinking we might be over 50% of max profit. Just a wee little bit, but I will absolutely unequivocally take it. And so we sold a put in MES. When did we do this trade? I want to look at this guy. So we're short the 6,600 put. You've got MES now knocking on the door of 7,000 again. I'm curious if it got to 7,000 today. Let me see here. Yeah, it looks like it. Oh, look at that. That's a little bit savage. So the high today is 7,050. So they ran up there and they got a couple of those stops that are sitting up there, of course, a nice little stop hunt. Although they've been hunting the stops around 7,000 for quite some time here. Which, the big number bros, this is their last stand, right? This is the last Mohican for all the big number bros that are on the short side. It's like 7,000. If this thing doesn't hold, like we're going to 8,800. Like it's over. And by over, it's probably just getting started. But MES 69.98. we've got a 6,600 put in here, and we're in a pretty good spot, obviously, because we're beyond 50% of max profit. But when did I do this trade? Let me bring out my chains here really quick. We did this trade on 2/5. Wow, we did this trade. Wow, this is less than a week. That's crazy, man. We did this trade on Thursday. Wow, so we sold this put on Thursday. Oh, I remember now. That's when it was over. That's when it was like over. I mean, iPod Touch was in the chat, like Event Horizon was here. I mean, the four horsemen of the apocalypse were like riding through the sky. And I mean, this was all what, 1%, maybe 2% off of all-time highs. And it's like, yeah, I mean, that was it. Like it was going to be literally the end. And so I'm like, well, let's go ahead and sell this put because either one of two things happens, right? The market recovers and the put makes money. Or if it goes down another 70 basis points, then none of this is going to matter anyway. Like if we get to 4% off of all-time highs, like you think it's bad now, I mean, that's going to be absolutely apocalyptic, right? So I was just looking at keeping it very, very simple and close to the vest, and it worked out because the market did indeed recover. And so you've got, wow, Josh is telling me there's some Coke earnings in the morning. Coke? You mean the alternative to Pepsi? Man, I can't touch that garbage. There's no way. That stuff is so bad. It is so bad. And I'm talking about tasting. It is just awful, awful, awful. So let me know, Josh, when Pepsi has earnings, because I'll do a little Pepsi earnings, but I'm not touching some KO earnings. That's a little bit beyond the line that I'm willing to cross. But anyway, MES, we did the short put on Thursday, and it's worked out. We avoided the apocalypse, and here we are. So let's go ahead and let's see here. If I close out of MES, yeah, 42 and a quarter, that's fine. There we go. All right, so we got closed on the MES, and I'm going to surprise and delight my man Sean in the chat before I even get to the surprise and delight section, because Sean is my man. Sean says Coke tastes awful. That's correct. Pepsi for the win. That's doubly correct. So you, my friend, you just went ahead. I don't recall you having been in the chat before, Sean. Maybe you haven't. I might be misremembering it. But you just fast-tracked your way into the inner circle, my man. You are absolutely in the core position, in the inner circle of the core position, and there's plenty of Diet Pepsi in the lounge. There's plenty of regular Pepsi in the lounge. There's plenty of Pepsi Max. Like, it's whatever you need, man. It's all there for your benefit. Sorry, so there's MES. We talked about AMD. Let's take a look at Boeing, man. Look at Boeing. So Boeing is, we're long a 245, 255 call spread. We've got the stock at 244. And so this is some good stuff, man, because it was not looking too good there just a little while ago. So if I go into the trade page here on Boeing, you can see that we had this trade on, it's only been a couple weeks, right? Yeah, it's been a few weeks. I mean, January 26th. So we did this trade back, that's going to be what, like right around here? Yeah, we did the trade here. Right. So again, we don't even need to look at the chains, right? Like if I circle the candle that I did the trade, you'll know which side I played it on, because look at the first move, down by a significant chunk. So you know I'm long. You know that I played it to the upside. Like this is really basic stuff, man. You don't really have to overthink this too much. And thankfully, though, we did get a little bit of a recovery in Boeing here with the stock up to 244. So we need the stock over 245. That is our long call strike, which you can see right here. Long call strike is 245. We need Boeing to jump over 245. And if it would be so kind as to oblige us all the way up to 255, that would be really, really awesome as well. But right now, just kind of one thing at a time, we're just going to sit tight and do nothing. Now we're at 11 days to go. So naturally, that's pretty far inside of 21 days to go. So what's going on with that, and like how am I viewing the situation? Well, a couple of thoughts. Number one, you want to remember that 21 days to go is a great marker for all positions. Just as like a reference point, like kind of blanket statement, it's not going to steer you wrong. But then once you go one step further along the path that goes through the forest, you're going to notice that undefined risk and defined risk they're going to behave very, very differently. They're going to need to be treated very differently. An undefined risk position by its very nature, that's where all the gamma risk is kind of concentrated when it comes to your different strategy sets. That's where you're taking on potentially astronomical directional risk, because if it moves against you and keeps moving against you, the gamma kicks up, the delta kicks up, and now all of a sudden every additional move, every additional point that goes, against you is going to hurt more and more. And so, given the fact that undefined risk positions have no cap on how bad it can be, and they essentially have no cap on just how strong the directional risk can be. I mean, I understand that deltas are capped at 100, but in terms of relative to a defined risk, it's going to feel a lot more like there's no cap. It's going to feel a lot more like it's an uncapped position. And so understanding that, okay, if I'm in an undefined risk position, short put, short strangle, things like that, then I'm going to want to be a lot more prudent with my risk control around 21 days to go. Now, I've said this before on the show. I'll say it again, just in case you're brand new. Welcome aboard. I'm glad that you're here. 21 days and 18 days are not that big of a difference. 21 days and 16 days are not that big of a difference. 21 days and 14 days, I'm not even sure is that big of a difference. It's really the last couple of weeks and the final 10 days or so where a lot of the gamma risk is concentrated. But 21 is easy to remember. 21 is kind of, it's been our reference point for so long, and so I don't want to rock the boat, man. I don't want to start shaking things up that don't need to be shaken up. And so go with 21, but if you go slightly inside 21, you're fine. But that's all undefined risk. What about defined risk? So with a defined risk position, like what I have here with Boeing, right? Long call spread, vertical spreads, iron condors, diagonal spreads, things like that. It's a very, very different set of questions and set of answers and set of kind of decision points that you need to make, because I don't have to worry about gamma risk now. Like, the gamma risk is already naturally controlled by the structure of the strategy. Just by having a long option in place, my gamma risk is going to essentially have a cap on it. I'm not so worried about my gamma getting out of control, my directional risk getting out of control, because the position is defined risk. Because the position is defined risk, I know just how bad it could possibly get. It's not going to get any worse than that. If I've got $3 of risk on a defined risk position and I don't change the strikes and I don't change the strategy and I don't alter with those risk parameters, I know no matter how far off the mark I might be, that's the most I can lose. That is the worst case scenario. So then it's like, hold it to 11 days to go. Hold it to 7 days to go. Hold it all the way down to the end. It doesn't really matter at that point. The only thing that we might consider doing, which I'll take a look at here in a second for Boeing, if you're at 21 days to go or inside of 21 days to go, like what I have right here with this Boeing spread, if you can roll it to the next cycle for a credit, that is something to consider. Because now you're not adding risk to the trade. You're actually taking risk off of the trade to the tune of whatever the credit is that you can collect on the roll, and you give yourself more time. You give yourself more time for the position to work out in your favor, which, just think about that. Just kind of, zoom out from the discussion we were just having for the last couple of minutes. And just think in terms of more time versus less time. If my whole philosophy is kind of centered around managing winners, it's centered around, taking profits off the table when trades work and when things work out, I'm going to generally want more time rather than less time. Now, you could, essentially make the case that, well, Jim, every strategy you want more time as opposed to less time. And that's not necessarily an unfair point to make, as these words and thoughts leave my mind. And I'm like, yeah, they maybe weren't as clean and as sharp as I thought they were inside the old noggin there, but this is what happens. And this only happens live on the Tasty Network, by the way, so welcome aboard. I hope that you stick around. But when I'm thinking about a long call spread, even with the defined risk nature of the strategy, I'm like, man, if I have a chance to roll out for a credit and I have a chance to extend the duration of the trade, I'm going to think very seriously about doing that. Because I'm going to give myself another 4 weeks or whatever, 3.5 weeks, 4.5 weeks, whatever it ends up being. And I'm going to be able to do it by taking risks off the table. So that is something to consider. Now, usually you can't roll a defined risk strategy for a credit. Usually it's going to be some kind of debit to roll it out into the future. If you could roll for a credit, then it's probably profitable, and then you would probably just take it off. And so that's the reason why we don't usually see this kind of happen for us, at least not at the times that we would like it to happen for us. Because in those times that we would like it to happen for us, it's going to be a debit because the position is hurting, it's underwater, and you're going to have to pay for that additional time. And in the rare instances that you're kind of right in the middle there, you might be able to eke out a tiny little credit, but a lot of times you can't even do that. So let's go into Boeing, though. We'll take a quick little look at this guy. Let's see. If I go to roll this guy, yeah, so you can see right there. If I roll this guy out to the next cycle, to March, with 39 days to go, you can see that it would be an 80-cent debit to do that. So that's going to increase my risk on the strategy by 80 cents. I'm not super interested in that. Sometimes when I'm rolling defined risk strategies, if it's like a nickel or like 3 cents or whatever, then I'll certainly consider rolling it out because that additional time, those extra 4 weeks or whatever they end up being, they're really valuable. And so I'm like, well, I kind of want to tap into that extra month, that additional cycle for this thing to work out. And it's okay. I'm okay paying a nickel. I'm okay paying 7 cents or 3 cents or whatever. But 80 cents is definitely way beyond the maximum that I would even be willing to consider. So what do? We do nothing. So what do? We use that 9 minutes of commentary to do not a single thing. Not a single thing. But we know why we're not doing anything. Like we understand the why behind the what, which I think can be a really, really powerful thing. So anyway, there's some Boeing commentary. And then after that, Amazon, look at Amazon. Was there ever a doubt? I mean, I sold a couple of underoos last week, but we're okay now. Everything is all right. So we're short a 200 put. You've got the stock at 208, and that's looking good. Yeah, look at Snapchat down a penny. It's basically an update. You got Starbucks down 39 cents. That's fine too. And then Tesla's a similar situation to Boeing. Just because it's 11 days to go, it's a defined risk strategy. This one is not as close as Boeing, but I mean, 11 days in an Elon world, man, I mean, that is an eternity. Like this thing, I'm curious to see let's look at the expected move. So I haven't looked at this. I don't know what it is, but I'm curious. I'm just going to give you guys what my thought is here, sight unseen. So I think that, let's think here, 11 days for Tesla. I think the expected move is going to be plus or minus $35. So I think we could go all the way up to 455 and all the way down to 485. But let's take a look at it. So for 11 days, oh wow, it's not anywhere close to that. Man, only plus or minus $22. So I was a little bit, there was a little pie in the sky thinking there for you guys. But still, I mean, that's enough for us. We only need it over 430, really. And 440 would be great. But look at the expected move. It basically takes us all the way up to our topside strike on this long call spread. So we go all the way up to the 440 strike, and we're in a great spot. Like we'd be in a terrific situation there for Tesla. So anyway, we sit tight. We do nothing on Tesla. It's a similar situation to Boeing. I mean, if I go to try to roll this, you guys are going to see it's going to be a debit to add time to this strategy. So I don't really want to do that. You can see right there. I mean, that's 77 cents. And that's only going into the March weekly. If I go all the way to the March monthly, it's going to be even more because more time is more valuable. So more time comes with a higher cost. It's pretty much, just kind of almost, common sense in a lot of ways. When you think about if I have a strategy that's not working and I want more time, it's got to cost you something. It's got to cost me something. Right? It's got to cost whoever is making the decision something to get that additional time on a strategy that's not working. Right? If I have a strategy that's giving me fits, it's like, man, I could really use some more time here. That's going to cost you something. Right? When it comes to defined risk. With undefined risk, it's completely different because with undefined risk, you're always exposed to unlimited risk. So if you're willing to kind of extend the duration that you're going to take on that unlimited risk, you're always paid for that. You're always compensated for that. And so that's honestly a big reason why we kind of lean on undefined risk strategies because, the adjustments and the management is just so much more favorable. But anyway, I digress. All right, so let's go in here. Let's see here. Man, where are you guys at? Man, I appreciate you guys so much. Man, let me try and surprise and delight some people. I mean, I see Archer Fire in the middle. And Archer Fire, you got it all wrong, Archer Fire. Archer Fire said, hey, Dr. Jim, I'm sorry about your Pats. I don't know what you're talking about, man. Like, you can go back and check the tapes. Like, go back to August. Go back to September. I wore my Sam Darnold jersey pretty much every single day. I'm even mixed in a little, Geno Smith. Mixed in a little Marshawn Lynch. Just for the throwback community. Like, you go back, you check the tapes, man. I've been Seahawks from the very beginning. And so I'm not surprised. I'm not surprised that they were just the, immovable force that I knew that they would be. But I appreciate you. Archer Fire says we may or may not fund your payment to Tom. Yeah, I could use some help with that, of course. And so I definitely have a debit balance now with the infamous Tom Salznoff, which I'm not super excited about that. But sometimes it happens, man. Sometimes that's just the way the wind blows you. And so let's see, where else are we at? Can I surprise and delight somebody else in the middle? Where are we at? Emmett Morrison in the house. What's going on there, Emmett? I appreciate you, my friend. Great guy, Emmett Morrison. Also part of the core position. Also part of the inner circle. So I appreciate you, my friend. I met Emmett a couple times there in Chicago. Really, really good dude. Says, afternoon, Dr. Jim. Nice segment this morning with the bats, man. I appreciate you so much. Yeah, I was really excited to do that piece. I mean, thinking about delta and theta, I mean, these are the two Greeks that we use all the time. So thank you so much for watching. But as I started to think about the Greeks and analyze it, because this is something that I realized it was a number of years ago now. But in thinking about, there's so many new people that are finding us. There's so many new people that are learning how to trade and just starting trading and just starting like active management. So it's like, things that are kind of second nature to us and things that might seem obvious to us are not that obvious to a new trader, of course. It's just not that, it's not that clear to somebody just starting out. Like even some concepts that are as simple as like positive theta or something like that, right? These things are not necessarily clear to people that just start. In fact, oftentimes they're not clear at all. They're clear as mud because you have to learn these things. You have to engage with these things and wrestle with them until they finally start to click and they make sense. And so kind of going back into like that kind of mindset of like, man, all right, I'm brand new to trading. I just started getting into the Greeks. I just started getting into like how they move, how they relate to each other, like, what they mean, things like that. And when I was preparing the segment for this morning, I'm like, I think this could be a really helpful way to think about the Greeks, understanding that day to day, delta is going to be the driver. Delta is going to be the thing it's going to get all the press. It's going to get all the podcast interviews. Like nobody gives a rip about theta, but it's the thing in the back that's making the whole thing go. Like it's the thing running the ops that's just making the whole thing go. Like delta's the front man, like delta's the mouthpiece, man. But theta's the thing. It's the engine that's kind of making everything go. And so that's what I really wanted to draw everybody's attention to this morning. So thank you so much, my friend, for watching. I really, really appreciate that. But let's get all the way back to the beginning. Where are we at in the beginning? Man, let's go. Sam L's in the house. I see Ash Finn in the house. What's going on there, Ash Finn? Dr. Jimtown, let's go. What's going on there, my friend? Yeah, I caught that you're in Kentucky. I thought you were in Georgia last week. You're in Kentucky, which, a funny story about Kentucky. Let me think. Have I been to Kentucky? I mean, I have been because the story I'm going to tell is about stopping in Kentucky. But I don't think I've ever been there for like a long time or anything. I don't think I've ever like been to like Louisville or anything like that. In terms of like visiting or vacationing. Maybe I played a baseball tournament there when I was little. I don't know. All I know is this. This is the one memory that I have with Kentucky. And it's not positive or negative. It's kind of neutral. But from my vantage point, it was like a culture shock. So I go to so I grew up outside Detroit, grew up on the east side of Detroit. Like if you've ever seen the movie 8 Mile, and a lot of people are familiar with that movie. I actually grew up on 10 Mile. So I grew my parents still live there. Right. And so I was like just a few minutes away from where most of that movie was shot. So anyway, grew up on the east side of Detroit. I go to undergrad at Central Michigan University, fire up chips. Do my undergrad and MBA at Central Michigan University. And then in 2005, I got accepted to the PhD program down at the University of Memphis. So I was going to start my doctoral work in finance, market microstructure, like studying the tick-by-tick movements of the market. Super excited, couldn't wait, blah, 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 blah. Had never lived in the South before. Had barely even visited the South before. And so I had been around and whatnot, but I had never been down to like the South. And I mean, I was going to Memphis, man. Like Memphis, Tennessee, that is like deep South. That is like you are shopping in the store. You do not need shoes. Half the people don't even have shirts on. And this is very, very normal stuff. So I'm driving down from Michigan to Tennessee. Me and my boy Greg helped me move down there. And we stopped in Kentucky. And that was my first experience with like Southern accents. And I don't mean like a Southern accent, like you see it on TV and like whatever. But I remember going into this gas station and like there was like 5 or 7 people in the gas station, all great people, like really friendly people, whatever. But man, I couldn't understand a lick of what they were saying. I couldn't understand anything anyone was saying. And theoretically, we were all speaking the same language. But I'm like, there's just no way that's possible. There is no way. And that's when like reality hit me. I'm like, man, I'm going further south than this. Like, I'm like halfway there. I'm like, this is crazy, man. And so anyway, that was my first experience with Kentucky. And it will forever be etched in my mind because that was just such a pivotal moment in my adult life and my professional life. And so I have nothing but positive things to say about Kentucky because the people were very nice that were there. And so anyway, I digress. And so, but I appreciate you there, Ash fan. Sam L's in the house. Happy Monday, Doc. Caffeine loaded, charts open, stories pending. There you go. I just gave you one, man. And I I don't think I've ever told that story before. I really, truly don't. Have I ever told the Kentucky story? I don't think I have. And so there you go. There's a little something new for you guys. But thank you there, Sam L. I appreciate you. Sam L says the algo summoned me here. I had no choice. Yeah, it'll do that, man. It'll kind of grab you against your will, which I would imagine that's the spot that we're all headed to with the robot. So we might as well just get used to it now. A Will's in the house. Pump that algo. Yes, please pump that algo. Put stuff in the chat simply for the love of the algo. That is your only job today. And so thank you there, A Wills. You are very clear with the concept. Wolf is in the house. Dr. Jim, happy Monday. Are you really even a trader if you don't have a Bosch dishwasher? Yeah, Bosch was catching some shade this morning after I made that comment. Like, I mean, Nick Batista's got one. I've got one. Tony was talking about some serious stuff that I'd never heard of. But I'm telling you something, man. Like, my Bosch dishwasher, we bought it when we moved in here. So we moved in July of 2020, and I'm going to say within the first year, we had to replace the dishwasher. So that thing is almost 5 years old, and it's been an absolute workhorse. Absolute workhorse. And so, I mean, I'm very, very happy with my Bosch dishwasher. I'm so happy with my Bosch dishwasher that I'm thinking about getting other Bosch appliances like fridge, like microwave, like range, and like all those kinds of things. And then the Guy Fieri commercial yesterday, like if you saw that cat walking down the street, you would not know that that was Guy Fieri. Like I'm still not even sure that that was really him. Like was it, did they kind of dress him down for it? Was it AI slop? Like I don't even know what it was, but it was still a great commercial. And so I thoroughly appreciated that commercial very, very much. But yeah, Bosch catching shade this morning. Let me know in the chat, guys, if for no other reason than just to pump the algo. But let me know in the chat, like, where are you guys at on Bosch appliances? And I don't want to know your thoughts if you don't have one. I want people that are in the arena. I just want to hear from people that are in the arena. I don't need the peanut galleries comments. I don't need what, Johnny Pools 47 or Johnny Dishwashers 48 on Reddit has to say about Bosch. I want to know your experience with Bosch if you have one. Dishwasher, refrigerator, microwave, like let me know, toaster oven, like whatever it might be, air fryer perhaps. But anyway, I digress. Orgdenu's in the house. What's going on there, Orgdenu? No better way to start a week than a good dose of Dr. Jim's Gimmies and Gotchas. You are the best, man. I appreciate you so much. Yes, you're going to get them both because they always come together, man. It's a package deal. It is 100% a package deal. And so let's see. A Will says, Dr. Jim, what about a Strangle and Oracle for the show account? Yeah, man, I'm probably not touching that. Oracle. I just did an email. I think Neil, Neil, Away from the Numbers. I think Away from the Numbers sent me an email a little while ago about Oracle, and I got back to him. And yeah, Oracle. Ooh, yeah. Earnings March 9th. Yeah, I'm not touching that, man. I mean, we'll light some stacks of cash on fire for earnings, but I'm not going to do it preemptively. Like, I need to be thoughtful about the stacks of cash. Not that they're going to get lit on fire. We know that that's going to happen. But when should it happen? Like, let's make sure we get the timing right. And so I feel like if we do it now, it's a wee little bit too early. I feel like it's not quite ripe. It's kind of like when you rip into that banana just a little bit too early. Like, it when you wait, like in the moment that you do it. Like, you go to slide that peel down and it's, you're hitting some friction. Like you're hitting a little wind resistance. It's not good, man. It's not ready. It's just like this Oracle trade. And yeah, so we're going to pass. We're probably going to pass on that analogy in the future too, because that was certainly more like a C+ type of deal. But but Sam L says, nasty leg day to start Monday. My man, I had leg day this morning too. Lunges on the menu. Doc prescribed them. I did. It's a great way to start the week, man. You got to let the week know who's boss, man. You got to let the week know who's in charge. Right. And by that, I mean, it's leg day. It's not you. It's not me. Like, it's the walking lunges, right? 1,000,000%. It's the glute drive machine. 100%, which is an amazing machine, by the way. My guy I've got equipment in my garage, and I've got a gym that's like 5 or 6 minutes away, and I do certain things there, and I do certain things there because I can't fit a bunch of machines in my garage, and it's too expensive. She's not letting me get LMNTs. You think she's going to let me put a glute drive machine in the garage? Now, glute drive machine, I might be able to get away with because, most women, my wife included, they love their glute training. Right. And so I might be able to get away with that guy, but like lat pull down machines and like other things, that's not going to happen. And so anyway, no LMNTs and no glute drive machines in the garage anytime soon. But yeah, he's got that out there. And yeah, glute drive machine is number one. Lobo knows, where's Chris? I think Chris is just on vacation. He should be back soon. Maybe, I don't know exactly when he's coming back, but maybe it's next week. Maybe it's later this week. I'm not sure actually, but I think he's just on vacation. So Joel James, Dr. Jim, too bad Bosch doesn't make fences. Nah, man, my guy's got that covered. Y'all don't have to worry about that. I want to put something on in DDOG, but the markets look nasty. Is there anything, kind of like my Seahawks defense yesterday, is there anything worth doing in there? I am mega pine bullish. Yeah, let's go, man. Let's go DDOG. Data dog. Man, data dog. Man, let's go. Yeah, earnings in the morning. Okay. You want to do something? Did you give me a mega pine bullish? There you go. Very nice. Yeah, if I go to March. Yeah. Man, these markets, they're not quite as nasty as my Seahawks defense, but they're not messing around either. I mean, I always go to the at the money strike. So I look at, the price of 114. I want to know, let me see the at the money options on both sides, because those are usually going to be the most active option. That's usually going to be where there's the most activity at the money, or maybe a couple of strikes out of the money on both sides. And so if I do a 115 strike, we're 50 cents wide on the put side. We're almost exactly the same on the call side. You go a little bit out of the money, it's about the same, right? You go a little bit out of the money, it's about the same. 50 cents wide on a $100 stock. I don't know, man. I don't think I like it there, Joel. I think we might have to pass, my friend. Despite the mega pint bullishness that we might have. I mean, together, like we're a team now, of course. Yeah, liquidity is 2 stars. Yeah, liquidity is not looking too good. But, I mean, this is why you got to check the markets for yourself, because 2 stars in one and 2 stars in another may not be the same at all. I mean, I remember when, like, for the longest time, it was either Netflix or Tesla, but one of those had 2 stars. And it was like, man, like 2 stars, like this thing trades like water. Like this thing trades like no problem. Right. And so I was like, this is at least 3 stars, if not 4. And so it was kind of like, all right, I'm not sure that the liquidity star rating for this specific stock is doing it justice. And so that's why, looking at the actual markets and drawing on your own experience. Now, I've never traded D-Dog before, and today does not appear to be the first day that I'm going to do that. But if it's a stock that you've been trading for a while, you kind of understand. Like I remember back when Chipotle was like a $2,000 stock. I mean, getting filled in there was pretty craptacular. Like it was quite difficult to get a decent fill in the Chipotle pits. Now it might be different because it obviously split and it's much smaller and things like that. But anyway, for Data Dog, yeah, I think we got to pass there, Joel. It's just too wide, right? Because you got to remember a couple of things. Then you can apply this to Data Dog, or you can apply this to any stock where the liquidity is kind of on the fence, right? Be very, very thoughtful about what you decide to do, because number one, if you're going in with multiple legs, so any defined risk strategy, or even undefined risk, if it's anything beyond like a short put or even a short call, but if you're doing a strangle, whatever, every leg you add, that's another bid-ask spread differential that you're going to have to navigate. You're going to have to negotiate. And it's like, the more legs you enter, the more legs you kind of throw into the mix, the more bid-ask spread differentials that you have to negotiate, the harder it's going to be to get a fair fill price. That's just the truth. And so that's the first thing to keep in mind. But the second thing that might even be more impactful than the first thing, as I think about it, don't forget, you're doing this now on the way in, but you're also going to do it on the way out. So you're not just doing it now on trade entry. You're going to have to do all this again on trade exit. At least you hope you do, right? I mean, if you don't, of course, if it's a defined risk strategy, I guess it could all expire out of the money and things like that, but we don't normally carry things all the way to expiration. And so you're going to be getting out of this one way or another, on trade exit, and you're going to be negotiating these bid-ask spread differentials again. So, if you see something that is just not really sitting well with you, which, I mean, I would say that that's the case here with Data Dog for me personally, I'm just going to pass because there's so many opportunities. And not to mention, wait a minute, isn't this week jobs week now? Because I know last week everything was all messed up. I mean, the government was shut down for like 4, maybe 6 hours, right? And I mean, all of our lives were better for it. But then they fired it back up like 6 hours later, and it's like, okay, whatever. But because of all that, they had to postpone the jobs report from Friday. Last Friday it was supposed to be. I think it's Wednesday. Isn't it Wednesday? I think it's in 2 days Wednesday. Jobs Wednesday. Didn't we just have like a Jobs Thursday a couple months ago? Man, nothing is less feng shui than a Jobs Wednesday. I mean, that's like doing back on Monday. That's like doing tries before buys. Like, you can't do this kind of stuff, man. Like, you can't do this kind of stuff and get away with it. Like a Jobs Wednesday, man, it's already not good because it's a Jobs Wednesday to begin with. But then also, guys, I've been trading for a long time, and I'll just say this: this is not good, man. this jobs number on Wednesday morning, it all comes down to this. Like everything that you've been working for, everything you think you've been working for, you think it's AI? You think it's robots? Nah, man. It's jobs Wednesday. It all comes down to this. So good luck and Godspeed to you all out there, because this is just, it's not good. And so Sparky Dog is in the house. What's going on there, Sparky Dog? Sparky Dog says, hey, Doc, when will we see the Finns, or will we see the Finns get there in our lifetimes? Man, I don't know. You're talking about my Dolphins now? Man, I don't know. I don't even know who the coach is. Do we have a coach yet? I don't think we do. We got to get Gruden, man. That would be awesome. Like, we got to get Gruden. Like, I would be so happy if we got Gruden. Gruden, I mean, first of all, he's very funny. But second of all, like, just listening to him talk, I don't think anybody cares more about the thing that they're interested in more than John Gruden cares about football. Like, I really, truly don't. Like, I think I love the markets. Like, I think I love, my show, and I think I love, Tasty. I love all you guys, of course. But I think that's like a fraction of how John Gruden feels about football, just based on his interactions with all things related to the sport. And so anyway, I'd be all in on Gruden for sure. But I think it's going to be a while there, Sparky Dog, unfortunately. Sam L, Eagles got the Lombardi while we were stuck on entry points. What's the play there, Doc? Yeah, that's true. I don't know what the play is there, my man. I do not know. Trader Nate, what's going on there, Trader Nate? Ramsey's in the house. What's up there, Ramsey? Sergio is here. What's up there, Sergio? Rance, what's going on there, my friend? Greg Lutton is here. Man, Jared Kramer is here. And Jared Kramer's digging the Snapchat commentary, myself included, because it basically is an update. So there you go. Let's see. Brian Dowdy is here. What's going on there? Ash Finn is back. That is a B- loser. Yes, it probably was. I can't remember what you're referring to, but that's probably for the best. That's probably definitely for the best. Andrew Fanzo, happy Monday, Dr. Jim. Pumping the algo like a big scoop of Jack 3D. Got to go with the old formula, of course, of Jack 3D. But wow, I'm already done. I'm already out of time. Man, see, we get disillusioned because Friday was an extra long show, and I kind of lose track once you get the extra wide lanes. And so we're back to the Dr. Jim power 3/4 of an hour. So I'll settle back into my midseason form by tomorrow. But I got to run, guys. I got to go. I appreciate you guys. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Hello, everybody. Tim Knight here, and we missed each other on Friday. I was traveling. It was quite the day. There are two big things I think that we should focus on in this environment. Both of them very psychological. One is the Dow, and one is the Bitcoin. Now, the Dow is important because even though it represents only 30 out of however many stocks there are, 4,000 or 5,000, it's the best known, the most famous index, and importantly, it's the one that Trump has latched onto as the benchmark to watch, because humans have a predilection for big round numbers. Whether you're talking about NASDAQ 5,000 back in 2000, or the year 2000 itself, or 50,000 on the Dow, which we just crossed for the first time ever on Friday. And he has loudly proclaimed that not only is the 50,000 a demonstration of the excellence of his decisions he's made, but it's going to go to 100,000, an even bigger, rounder number by the end of his term, 3 years, less than 3 years away. That's quite a prediction. This, to me, is sort of spitting in the face of God, because it's sort of like when the Titanic came out. It's like God himself could not sink this ship. And God's like, you know what? Send the iceberg. It's when you reach a certain point of, and I'm not speaking about Trump specifically, this is just human nature. When one reaches the point of like utter arrogance about this wonderful thing is going to happen or this terrible thing cannot happen, it'll happen. It's just the way it is. I wrote a history book about financial history, and one of the chapters, and it's a long one, is about Japan back in the late 80s, when it was widely accepted that Japan would be the #1 economy on the planet. Oh my God, they've bought the Chrysler Building, they bought the Empire State Building, they bought Pebble Beach, they bought everything. We all better start learning Japanese. We all better start doing calisthenics during our lunch breaks. And Japan, which had risen from the ashes of World War II and was really for the 50s and the 60s known as where like cheap crap comes from, had become the powerhouse and the one everyone was terrified about. And there was a book at the time, around 89, 90, let's call it 89, called The Japan That Can Say No. And it was a very arrogant book that spoke lovingly about the Japanese economic powerhouse and how they were just going to blow everybody away because basically, well, Americans are stupid for one thing. That was one of the thrusts of the book, that Americans were imbeciles and that we're going to rule the roost. Needless to say, Japan is kind of a footnote in the global economy now. If you went back to 1990, nobody would talk about China being the real threat to become #1. My point is that if your president is bragging endlessly about 50,000 on the Dow and how it's going to go to 100,000, it's not. And when it doesn't, you can rest assured about something else, which is that he'll blame somebody else for it, because the words, "I was wrong," will not come past his lips. So that's an important thing to watch. I would also say, as an addendum to that, that as the most important political figure in the country, he will do everything in his power to keep the market up and to keep it going higher. And I've said it before, I'll say it again: banning short selling, castigating bears, jailing them, banning buying puts, you name it. Long human history has despised bears, and it'll happen if and when the bears start to get the upper paw in this market. They'll be perceived as unpatriotic and the bad guys and so forth. Count on it. As far as Bitcoin goes, I've talked about this a lot. It's a crucial psychological in the zeitgeist, and as I've stated time and again, Bitcoin and the equities market should have nothing to do with each other, but they have everything to do with one another. And on Thursday night, as we were plunging to 60,000, which is an over 50% drop from Bitcoin's peak, that was kind of this climactic bottom for equities and Bitcoin. And naturally, you had an historic blast higher on Friday when you and I didn't see one another. Quadruple points gain on the Dow, 50,000 crossed, $10,000 on Bitcoin, and on and on and on. And of course, the crypto crowd is like, we're so back. You're back for a day. I think it is entirely possible, if not probable, that Bitcoin will never see six figures again, let alone the literal 5 million, 25 million, $100 million price prediction that those folks are saying Bitcoin will become. And so keep Trump in mind and the big round numbers, and keep Bitcoin in mind, because those are big floaters out there in terms of what's going to inform what's going on around us. So having said that long preface, let's move swiftly through the charts. Here's the YM, the Dow futures. And as you can see with this enormous green bar on Friday, blasted above resistance, and we are sitting daintily just above it now. A slip under 50,000 would be kind of a big deal. It's a psychologically crucial figure. And if we can get just crazy, a cut below that trend line would be a very, very big deal. But it'll be Biden's fault if that trend line breaks. So keep an eye on 50,000. Very, very important level. As it is now, bulls are absolutely in control of this. It's theirs to lose, as they say. Japan elected, Japan had a snap election, and the current prime minister received a big political boost. And Japanese yen's doing very well. Japanese stock market's doing very well. You can see here on the EWJ, just big blast off higher. As far as Bitcoin goes, it did lose over 50% of its value in a matter of a few months. It bottomed around about 60,000, had an enormous rally, and 73,000, I think, is a little bit of a zone of resistance. It'd be nice if it stayed below that. The really potent resistance is along the lines of around 81,000, and then absolutely like 98,000. I do not think we're going to push back into this zone again. But if we do rally for whatever reason, like if Besant runs around saying God knows what to promote Bitcoin and to push it higher and say that they'll print money to buy it, 81,000-ish would be a very important resistance point. As it is now, I mean, it seems already just kind of stalling out. It's about 70,000 and change, which is where it was on Friday. So just not doing much. Strategy, Michael Saylor's firm bottomed at around 100. During the plunge, it had a tremendous rally on Friday, like 34%, something like that. It's adding a little bit to that today, not even 1%. Here again, this was a $540 instrument. And the fact that it blew 34% higher is great, but it means it's, I'm just making this up, but it's like it's only 75% down instead of 80% down, something like that. So it's a dead cat bounce would be doing it an honor. I don't know what to call this. It's just it's a relief rally. Ethereum, same deal, fallen hard. Key resistance is this price gap, like so, but I'm not even sure if it'll get that far. And I'll also say that I was on a long plane flight yesterday, and I looked at all 90 crypto charts that I follow, which I haven't done in months and months and months. And I thought it'd be kind of a mixed bag. It wasn't. It was like 85 of them all looked like penny stocks. They'd gone from like $5 to a penny. It was like 99.99% drops on almost every one. And there's this tiny handful, Solana, Ethereum, Bitcoin, Ripple, Doge, that were only down 50, 60, 70%. They were still kind of chartable. So that was kind of eye-opening. I didn't expect like almost all crypto to be just utter disasters, but they were. Gold is doing great. It's a triple-digit gain today, over 5,100. I do think we've got more selling in the future to come. I don't think we're going to see lifetime highs again. Maybe not even this year. It's not guaranteed we're going to blast to 6,000, 7,000, etc. I think we need a nice hardy retrace to set the stage for another good rally. So I'm not participating in precious in either direction these days. The miners are rallying too, but up to a gap. And the gap represents important resistance on the miners. As far as silver goes, SI, here again, great rally. God bless it. Love my precious metals, but I'm not really mucking around with them right now. I think it's in a very violent state right now. Very, very tough to trade. And the silver miners, SIL, same deal. They're rallying, yes, but we've got a gap that represents important resistance that's coming up toward. NVIDIA is having a strong day. It's up about 2.5%. And it's a bit of a mess as far as the chart goes. I'm out of this. I'm very pleased to report that on Friday morning, I was trimmed quite light. Last week I was up to like almost 200% committed. And what I mean by that is like using every penny of margin I could, et cetera. On Friday morning, I was like down to 80%. And right now I'm like 85. I'm pretty much still there. So Friday wasn't a great day, but it wasn't a wipeout either. It was pretty reasonable. And today's just barely a nick. But I did trim some items that weren't performing that great, NVIDIA being one of them. I got stopped out of AMD earlier today, so I'm going to wait, see if we can maybe rally up to this price gap. I am still in ARM, because the stop is still up where that tinted zone is. I'm also still have June puts on Broadcom, ABGO. All my puts are Junes. I want lots and lots of time on them. And I still think, in spite of the big rally we've seen the past few days, this is a very, very nice prospective topping pattern. We're pushing into the pattern here, which isn't great, but we'll see if it can at least not push above these kind of highs here. We've got lower highs still intact. So as far as SMH in general goes, the semiconductor index, it looks a lot like the S&P, in which we're in the vicinity of lifetime highs, but short term we have been edging down with lower highs over the past couple of weeks. And another item which is looking toppy is the FANGs FNGS. This rallied big on Friday, even more today. And I'm staying away from this, and more specifically FNGD, which is the triple bearish critter based on this. This may have some more to go, because it was really beaten down hard as of Thursday night. So I'm staying away from that stuff. But the closer we get to this zone, the more likely it is that the bulls have shot their wad. Speaking of wad shooting, here's HIMS, which is getting zapped hard today. This is down about 16%. It was down like 25% earlier. It's been just falling tremendously. It had been a real darling of the market, just higher highs, higher lows, just very dramatic, just this enormous push from like $5 up to almost 70. It's just falling to pieces since then. So big down day on this. I read a post suggesting this is a short back on December 2. I looked at the post that day. I did a short recommendations on 3 stocks: Palantir, HIMS, and another one which of course escapes me. They're all down hard since then, which I'm pleased with because the market's way higher than it was. But yeah, HIMS is down about 60%, 70% from when I suggested it as a short sale. Some other things that are still looking decent on the short side. Terrific day for HAG. This is my biggest short position. Arthur J. Gallagher down, I don't know why, but I'll take it. We're down almost 7% on this. Very nice drop on HAG. Relatedly, another insurance company which is down a little bit, PGR, 0.5%. Talked about this a bunch of times. IBM, even with the Dow at lifetime highs, IBM is pretty much, it's down a little bit right now, about 2/3% drop on IBM. We sneaked below this range for a little bit last week, but got back in above it, but hopefully we'll break down from that and prove that as a distribution top. Running out of time here, so I'm picking up the pace. Some other shorts: Lumen, LUMN, approaching that the price gap. Micron, MU, still sticking with this one. We had a nice tumble last week on that. And even SNDK, SanDisk, which has just been a dynamo until recently. This is down today almost 2%. And here's a new one for you, one I'd never stumbled across before, but I really like: CRDO. This is a Credo technology. Beautiful top, beautiful rounded top on that one. So I just bought puts on that a little bit earlier today. I am out of time, so I will safe fairly well. Good to see you again, and I'll be back here tomorrow. Hope you're doing all right. See you Tuesday. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was not a
awesome.
paid, you're not getting paid
Right.
for this advertisement.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back for the last call, and I got to ask you one thing. After Super Bowl Sunday, was this the kind of day you wanted for the market? Kind of complacent, kind of upticked all day long, didn't really have too much velocity to it one way or the other. Were you feeling a little, I could use a breather?
You know what? It's a lot like the Super Bowl. I mean, it was, there's lights were on, a lot happened, but an otherwise boring day that, I guess ended good for the good guys, if you call the Seahawks the good guys, I suppose. It seemed like that. Nobody wanted the Patriots to win, that's for sure. Everybody got what they wanted.
Yeah, I asked around the office. Nobody wanted the Patriots. I couldn't find one friend who really wanted the Patriots. It made me feel like the Seahawks were destined to lose because,
I know, right?
Everybody wanted the Seahawks, but when the Seahawks win, that's the conference that the equities and the market usually does better per year. Not the
Is that what they
AFC.
say? I have never once paid attention to those things.
Me either, but you know what? If it fits the narrative, why not? Even the S&Ps are up 30 handles after kissing 7,000 again for what seems like the 15th time in the last 5 days. NASDAQ up 180 and change. 25,350. Russell up just about $17 to almost 2,700. Russell and Nasdaq are your two leaders in the clubhouse. I guess even the S&Ps are there too. The Dow is down 15 or 17. It's been down all day long, but you can see here the Dow had a monster day on Friday. Volatility in by 56 cents, well off its lows it made last night, when even the S&Ps were actually closer to where they are right now. Volatility contracted a little bit too much last night. It's in by 54 cents, just about 1860. Bonds are up small, one tick to 115.17, but they've been a little, they've been a little weak-ish as of late. Bitcoin up over 70,800, got up to 72 and change. Ethereum on a percentage basis up a lot more, 3%. These numbers didn't really change that much since the last time I came off the show early this morning at 10 o'clock. Oil up 69 cents to 64 and change. Good IV rank in there of 53, although it's come in a little bit today. Gold up big, a little over 2%, almost 2.33%, up $118. Got all the way up to 511.11. That's sticks. Remember those from the
Yeah, sticks, of course. Sticks, ducks.
Yeah, sticks and ducks. Ducks would be the twos. We got more than twos on silver, up $6.50. That's an 8.5% move approximately. Nat gas down almost 30 cents. That's the big mover to the downside on the commodity side, 8.5. When we go across the board here and click on the net change, you can go from top to bottom on the stocks that have been the weakest and the stocks that have been the strongest. The weakest right now is SanDisk down 12, MU down around 8. Apple, which has been soft all day long in the face of almost 0.75% move to the upside in the NASDAQ, been down all day long. Apple down $4 right now. It's down a little bit more like $5 before. GM down around $3. Costco back under 1,000 after trading almost 1,010 today. But you can see here they're few and far in between to the downside. Amazon down $1. Pretty broad-based rally. Apple 11 up 50 and change. Meta up 18. Oracle, I needed that one, up 13. I can use it a little bit more. Roblox, RBLX. I don't know if you had a position in here. No. It's up about 11%, $7.60. That's a stock that I won't be trading again for quite some time. Markets are good, not great in there. But I bought Roblox right here at $73 when I did a diagonal spread on there back on, I think, the 20-something. Yeah, right around the 26, right here when it was making lows and looking like it was going to catch a little bit of a bid. It ended up going about $15 lower than that without an uptick, and the last 2 days got me back to a 70-cent winner. How does Daddy do it?
What's the news in there today?
Oh, I don't know. They're going to let Tony out, is what they said. We're going to let Tony out.
It seems like it.
Yeah. Tell him go away. Let him lick his wounds for another day, and then we'll be done.
I tell you, seeing all those moves, it makes me think back to the last time we were talking, which was Friday morning. And at the time, I mean, the software names are down. Gold and silver were still kind of down. Mm-hmm. The consumer staples names were kind of ruling the roost a little bit. Fast forward to today, obviously we know we had a huge move on Friday. This is probably a little bit of extension to that. A lot of those software names kind of moved a little bit today, but not that much. But you showed a lot of those losers. Some of those consumer staple names are on that list. Walmart, Costco, like that. So clearly there's a little bit of turnaround in that unwind we were seeing most of last week.
Yeah, it seems like is there an unwind in the equities? I mean, we got a question today on Confirm and Send, and they talked a little bit about, like, I mentioned the unwind in the metals, the gold and silver. They were just acting, too parabolic. I mean, silver was up to 110. I know it got up to 120 or so. We're just talking about how it just seemed like everything was just too I don't know,
frothy.
too frothy. And I said, you know what, the great unwind is bound to come. I don't know when it's going to come, but it's going to come. There's going to be velocity to the downside, the opposite of what you see here on the upside. But is there an unwind in the equities, or is it just a rotation?
I would say it's a rotation. I mean, it's weird though. Like the software names, it's not like, those were on big time highs or anything. It was just kind of this fear of whatever AI is going to start taking over software. That was the big fear there. But I mean, there was some unwind, I guess, out of the tech names, right? I mean, when you talk about earnings last week and how much they were spending, and so there was, sort of a sell off in them a little bit. And where else are you going to go?
All the earnings on paper were pretty good. I mean, if you were somebody who got the newspaper the day before, you would have thought that these stocks were all going to be higher.
Yeah, I agree. I mean, that's exactly it. So I don't know. It's hard to say it's an unwind. I think there was just sort of, but it's what we call it when we see money move out of tech, and it's just in a different way. It's not like it was all of the same tech. It was just certain tech names and into consumer staples. Nobody's out. I mean, you saw the charts. Like you saw Coke's chart. You saw Pepsi. Coke has earnings tonight, right? Is one of them. But you saw those charts. I mean, they don't move like that. So that's why I think the word unwind is kind of sticking around right now, because of the way that the money was moving into those. You look at the XLP chart. You look at the oil names right now. I was looking at it today. XLE and Exxon, similar chart, of course, because Exxon is probably the largest constituent of the ETF. But those are like on highs right now, man. When you look at the chart, look at that.
Yeah.
So I guess that's why we're saying unwind.
Yeah, that's amazing. That's me getting out of my little TLT position. I put on a directional trade. I got an email, or I was getting a bunch of emails on my option trades today, what I do every Tuesday and Thursday. Then I'll get to your XLE. It's not something I normally trade, but I do like the way this has been parabolic and volatility is expanding. So maybe there's something we can do in there in just a minute. In TLT, I was getting emails that, I use a lot of buying power in my option trades today. Can I do something smaller with, using less buying power? And I went into
people complaining about all these wins you're giving them?
Well, I don't know about all the wins. I was hot, and then I got real cold, and now I'm like lukewarm again. I'm back in it. Got a couple of trades that have come back for me. But in TLT, I only used around $300 in buying power. I did a stupid. A stupid is just when you do two trades on both sides. So I bought a call spread, sold a put spread. TLT has a $2 expected move, and it's moved about $1.50 since I put it on. Spread moves small. It has a small amount of delta to it. Made about 70 cents or something like that. But on $300 worth of buying power. So I wanted to ring the register there. It was with bonds basically unchanged right now. I was able to capture everything that the bonds have moved higher since this move. Earlier this morning, when they were down around 10, 15 ticks, it was only up around 40, 50 cents. So I'm taking my profits and running, and long-winded in TLT. So
this can move.
Yeah, well, I don't know how nice it is, but it's better than a sharp stick in the eye.
We started calling those trades either super bull or super bear because we didn't want people to feel bad. Translation, we didn't want the stupid people to feel stupid. So we just started calling them super bulls. So we call it super bull now, I guess. Yeah. And then I guess because I swallowed my words, growing up down south a little bit, people thought I was saying super bowl. Like, no, super bull, super bull. At least when you sell the put spread and buy the call spread, obviously.
Yeah, I think that's probably a better way of saying it, because it's not a bad trade. It's just a directional trade. I mean, there's nothing silly about it. Actually, it's an intelligent way of using your buying power. Anyway.
Well, we should tell people too, though, that the idea of stupid comes from when you're learning, right? And you basically are going the same way directionally on that type of trade. Yeah, they call us young people if you're starting out stupid because it's a stupid trade. That's what we would say, right? That's where it comes from.
Yeah, that is where it comes from. Yes, and not too much you can do about it either. What can we do in XLE to be a little supportive here on what you found here, which is XLE going parabolic.
I was thinking the same thing earlier today. I don't know. Obviously, the first thing that came to mind was looking at selling a put, but there's not a whole lot there. You know what I mean? Like, I don't like selling puts under than $1. And I'm not that
you want to
bullish.
sell a put. You want to continue this rally higher.
I would, yeah, I would in that case. Yeah.
Oof.
I would sell downside.
We're on the opposite sides here, just from like I was looking at selling stock, selling put. You know what I mean? Like you got an IV rank at 37 is pretty good. I mean, listen, the directional bias. I'm just taking a shot. You're just taking a shot that's continue going higher. But that's the way I look at it. You only have an expected move of around $2.80 for this stock, relatively low for this ETF, relatively low expected move. It doesn't really kind of get you going. I think it really is.
That's the problem.
Yeah, probably a stock play one way or the other.
I mean, the main way I've been dealing with oil in general is CL, just selling iron condor. So I'm short, you know, 1 point wide, but I'm short the 58 put and the 68 call. I mean, until proven otherwise, I'm curious to see if this is going to break out of a range. It does look like oil's found like this new higher range in like 63 in the orders or something like that.
Yeah.
It has been like 59, 58, right?
Yeah.
So, so I don't know. Until proven otherwise, I'm going to stay in that iron condor. I think that's the best way. And look, there's some volatility on that, right? 53 IVR. That's kind of giving you a little something. I think that's the play.
Oh, definitely. I think in /CL is the way to do it too. I like it a lot better than XLE. We have a bunch of iron condors on in /CL. Some of our short strikes are on the call side are closer to I guess the average price would be around 76, 77 with it at 74, and our puts are closer to about 57, 58, but our put spreads are a little bit tighter than our call spread. So we really have no risk to the downside in oil, a little bit of risk to the upside in oil. So I guess we'd want it to bounce around just like it is so that you could be happy and we could be happy. And we can all live happily ever after.
There it is. You know what's crazy about yesterday's game is I think in 10 years you will not remember who won the Super Bowl.
I think that's something that could be said about a lot of Super Bowls, but this one was pretty. It was a defensive struggle on both sides. I mean, you got to give both teams some props. I mean, the Patriots played well on their defensive side of the ball, and so did Seattle. I think that defensive scheme will be looked at all year long. There'll be a lot of teams trying to do exactly the same thing that Seattle did in the Super Bowl next year. Kind of like when the Bears had a dominant defense, how everybody started trying to try to emulate their defensive schemes that they had. And I'm going back to the Ditka eras when I'm talking about. You know what I really think the other factor was? You didn't have a dominant quarterback.
Well, that's what I was about to say. There's no superstars on any side of the ball really in the game, right? And I just don't think you're going to remember a whole lot of this one. I mean, the teams, like you will not remember that Seattle kind of dominated the league a little bit this year in 10 years. You won't. There's no way you will.
We didn't get to see him play that much. I mean, I didn't get to see him play that much. I mean, maybe I missed some of their games, but you didn't really see them on TV that much.
Yeah, no, it's kind of how it goes, right? I really didn't see them at all. I mean, it's just, I don't know, man. It's one of those. I mean, but not to take anything away from them. Good for them. They won the game. I know the Seattle people out there about to cuss me out. I'm just saying, you're not going to remember the Super Bowl.
You're probably not. When you say it like that, you're not.
I mean, because I'm one of those guys who likes to be in like trivia things. I used to. And I used to like kind of remember, but you remember from the era kind of when you grew up, you know what I mean? Like I remember very clearly a lot of the Super Bowls, at least who was in it and definitely who won. Sometimes the score even, right? What year was it? But I know the 49ers beat the Broncos like 55-10 and like, I think, what was that? Was that 89? I think.
Yeah, I think you're right. I think
you know what I mean? Like things like that. But, Giants, Bills, you remember the memorable ones. Because of the team.
The first shutout. I know there was nowhere near.
It would have been the first shutout.
Yeah, first shutout that we would have had in the Super Bowl. I mean, I think they had, I don't know, 60 yards of total rushing, except for the total yardage for the Patriots, except for the fourth quarter when they got 250 yards or something like that, when it didn't matter. They were down by a couple of touchdowns. It didn't matter, kind of thing.
When it was coming out of halftime, I looked. They had 51 total yards.
There you go.
and it was 9-zip. I mean, yeah, it's rough.
Yeah. What do you think about some of these stocks catching a bid now that have been a little depressed? The Microsofts of the world. What do you think about there?
I think it's about damn time, Tony. I mean, it's been a while. Yeah. It's the Microsoft thing. Somebody asked about Netflix is not one of those catching a bid, I don't think, today, but just bringing up these names. It's been interesting watching Microsoft just be either quiet or down for the most part. Netflix hasn't been able to catch a bid at all ever since the deal mentioned and the split. Mm-hmm. I mean, these are names, we were trading real heavy for a while there. And yeah, this one is just like, and it's like, why should I put on a trade in there? There's nothing going on.
But here we are, just a skosh off of all-time highs again. So the rest of the 490 S&P stocks or the majority of the NASDAQ stocks have picked up the ball and ran with it. Now you've got them at highs, and you've got the Mag 7 at sale prices relative to the rest of the market. You think that gives the bulls a little bit of hope going into February here?
Kind of seems like it. Kind of seems like that's the scenario you want.
Yeah, I agree with you. And then you throw in volatility back down into the 18 handle. Man, I tell you how quickly this has collapsed. It was just 48 hours ago, really Friday morning, pre-market when volatility was 22. And now here we are, in the 18 handle. I did not think we'd get into the 18 handle this quickly. I thought we would meander around in the 19 handle. I actually thought the market would meander around a little bit. I didn't think we would hit 7,000 so quickly again.
Yeah, it's true. And the other thing I just thought about that whole, Russell 2000 thing. I mean, the Russell had been outpacing the others at least for a while, right? S&P and NASDAQ. And I don't remember what happened on Friday, but I'd have to assume it was.
Friday was a big day. Right? It was Dow and Russell were the two biggest movers. Obviously the Dow. You got the Dow 50,000 hats on, so the Dow made new highs. Going to make it here in another 8 minutes if it closes here, and then you had the Nasdaq nowhere near highs, and even the S&Ps, near highs, but not quite there yet.
So then this is the first day the Nasdaq is outpacing the Russell in a while.
Pretty much, and it's only doing by a little bit too.
Yeah, you see, I wonder if that's gonna.
You like a little bit of these numbers in the S&P. The breadth is a little thin. 270 up, 229 lower. Bother you?
What'd you say? 270 up, 229 lower.
270 to 230, 270 to 229, basically.
That doesn't bother me as much, I would say. The other metric I look at, which is very similar actually, it's two ways of getting the same thing, but the number of S&P 500 stocks above the 50-day moving average is 67%, which is pretty decent. That's holding in pretty good. Usually when we're around, usually when we're around 50% or below,
it should be. Right.
We're sold off. Usually if we're somewhere in 60 something, 70%, we're close to all-time highs, which we essentially are. But like you said, 7,000, we keep getting rejected somewhere around there. We keep getting rejected. I wonder if that's in store this week or if we finally punch through.
Yeah, back in early February, I know we're only February 9th, but back in early February, when the market was right here behaving pretty much exactly the way it is right now, and volatility was pretty much exactly where it is right now, Nick and I were both getting the ick. He was getting more of the ick than me, and he was a little bit more right than me as we went lower in the market. But I asked him the same question today. I'm not hearing that kind of bearish sentiment after going down the way that we did the last couple of days. And I was wondering, so you feeling any of the ick, or because we're right where we were before? I mean, we're a skosh off of highs here.
I don't. I again, a lot of the sell-off had to do with NASDAQ names, and it was related to these fears of AI. So I don't know. It's not like there's this overhanging, overarching thing, that is the problem. It's not like, we're worried about jobs or, again, which is later in the week, we got the jobs report. I guess we got inflation report as well, which from what I've seen, I think there was some inflation thing hit today that says inflation seems to be pulling back. So,
Yeah.
I mean, usually those are the big box things that are the worry that are overhanging the market. I don't feel like we have that. So I guess that's the only reason why I don't feel the ick. I mean, if the market were moving like Bitcoin is looking, maybe I'd be a little bit more nervous, which again, we're back above 70, but I don't know, man. It still doesn't look like it wants to make a move anywhere.
How about the metals? I don't know if you've got involved in the metals. I did. I was fairly bearish, close to the top, bought them way too early, somewhere around 5,000. We're 5,100 right now. Watched them go all the way to 46, 47. 100 and had to scramble. How is your gold and silver soiree? By the way, gold has horrible markets to trade. If you're looking at the monthly options, they're $2 wide. Now here's
GC you're talking?
GLD in a moment.
So you referenced this trade the other day. I'm in it with Chris. I have the April 5,000, 5,100. We got that at the same time. We got it for $1,800. It was worth $7,300 at one point, $7,300. I should have closed it. As a matter of fact, I remember talking to him that day, and I was like, talk me out of closing. It was literally the day before the big turnaround. I said, talk me out of closing this. He's like, hey, look, this thing keeps moving. He gave me one of his Chris Vecchio, upward New York things. I fell for it. I bought it, Tony, and I held on to it and suffered through the downturn. But I tell you what, it's turning back around, and gold is looking the stronger of the two. And I feel fine holding on to it. And again, it's April. It's further out. So that's one of the trades. The other two I have are in those ETFs. So I got Strangle and SLV, which again was sweating a little bit over the last couple of days, but it's looking pretty good today. And that's some high vol, man. So I don't mind.
SLV has great volatility, and they got great markets too. You look at the markets here; they're 10 cents wide with monthly implied volatility that's 90. Basically, you're looking at a double here, $16 expected move over the next 13 days. If you go out to the year, you're looking, or more, you're looking at maybe 30 days. So you're going to get most of your movement probably in the next month or so. That's what volatility is telling you. I think if you were looking for a trade to make, if you were looking at the metals, silver's the trade over gold, in my opinion, just because the markets are so much better.
For sure. And I'm not really a strangle happy type person, but these are the types of situations where you don't mind doing a strangle when this vol is double what it normally is. I mean, typically SLV is like 35, 40 vol, flat vol. Yeah. It's 90 something vol right now. And then GLD, I have a calendar spread. So Mike and I both had that on short the 500 in Feb and long the 500 in March. And then it worked out well, especially
today. That's a great calendar. I would prefer some sort of diagonal spread in there, but I don't mind the calendar too, slow moving. And yes, my Taiwanese sources tell me the gold silver ratio is about 60.5. Man, that thing at the end of January, which was only 9 or 10 days ago, was closer to 45. And 48 hours ago, it was closer to 72. You're talking about from 72 to 60,000. You're talking about a $12,000 move on just one of the /SIL small micro futures. It's a big trade. I almost think it's just long or short silver at this point. I mean, that's the way it behaves. If silver goes lower, it goes lower. If silver goes higher, it goes higher.
I'm not sure the last time you've had a situation like this where you got so many different products, you can trade them a whole bunch of different ways, and you can actually work out to be right. And on one last point on your Taiwanese sources, so inspired by you, I went out and found another source, and I found some Yiddish sources.
Did you?
Our Yiddish sources exist as well, and so they are part of the team. We are using them as well. People have asked where's the Yiddish sources come from? They come from Yidden, is where they come from. That's the place.
That's right. I'm not gonna lie. A lot of my Taiwanese sources are not from Taiwan. I mean, or Taiwanese.
No.
Yeah. Either one of those places. No. They might be some of the same ones you're using too. Anyway,
I would have never guessed.
We're limping into the closer. Even the S&P volume around 1 million, a little bit over 1,000,007 on the light side, more like what we were seeing 2 weeks ago. We've been seeing some great volume, a lot of volume on the way down. We were getting well over 1 million contracts before noon earlier last week. So volume a little bit in, markets a little bit higher, complacency there, volatility contracting to 1835, coming much more of a directional trade now. Bitcoin over 70,000, gold back over 5,100, silver off of its lows by $23. I mean, that's a huge move in silver, back in the middle of its range. I mean, it's place your bets now. Bulls and bears can both make money here. We're gonna have some movement in this market coming up.
Bulls,
my friend,
bears,
thank you
volatility sellers, all of them.
Yep, thank you so much for coming on today. I really do appreciate it. We're gonna take a quick 90-second break with the E-mini S&Ps at 69.83, up around 30. Peace, my friend. See you tomorrow.
Later.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick.
Retweet.
Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time is completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds.
It's so totally boring.
My card's on the table, hash mark. Facebook is disabled.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Well, we are back. What an interesting Monday it has been. This is Overtime. I'm Elias Piavek in San Francisco. That's Mr. Jamal Chandler in Chicago. Sir, make it make sense. What was that out there today? Let's start here. How was your weekend? Did you watch the game? And did you enjoy my know-nothing prophetic forecast from our conversation Friday?
Well, when you said what was that out there, I thought you might have been referring to the game. I wasn't really sure. Your West Coast won, though. I know
That's
you're
right.
happy about that.
That's right.
West Coast won. Everybody in the West woke up happy today. A lot of people woke up happy, apparently. Nobody seemed to be rooting for the Patriots, which was pretty funny, if you will. But no, weekend was good, man. Weekend was good, pretty chill for the most part. And, I did watch the game loosely. Was hanging out at a friend's house. You know, a couple of people got a little gathering. Kind of nice considering how boring the game was. It was nice to have some people to bounce some things off and talk because that game was fairly boring and kind of one-sided. But yeah, man,
The game kept occurring in the background for me. Like I'd walk into a restaurant that have the game on. I'd walk into someplace else that have the game on. And so the game just kind of followed me around over the course of the day.
It's the largest game of the year, Ilya. I mean,
Sure.
I know you don't care about football at all, but it's going to follow you on this one. Everybody has it on, even just casually talking about it, right? But yeah, no, this was definitely a boring one, even for people who love football. I challenge them to remember who was in this game 10 years from now and who won. It's going to be hard because there was really not much memorable about it.
Well, I'll tell you what was memorable. The dollar got absolutely shellacked today, but we'll get to that in just a second. Let's take a moment and get our sanity on this stocks front. I mean, it doesn't look like we really went anywhere today. It looks like we're sort of waiting for whatever next week or this week might bring, rather, in terms of data. Because I mean, there's so much on this calendar this week. I look at the S&P here. I'm like, okay, well, we were stuck in a range. We're stuck in a range. We haven't really gone anywhere out of the range. We're still trying to figure things out. Looking at NASDAQ here, in my mind, we're still testing the underside of whatever this attempted breakdown was, but we're basically still in this chop, and we're back into it again. We tried to break it last week, but ultimately landed back at that bottom from October 10th, and that's it. Back into the middle, back into the grind. Anything here spark anything for you? Any ideas from today's price action that you find compelling?
Not a whole lot on the equities front, honestly. I mean, this market has been sort of toned by what's happened recently with the software names, right? We've seen a lot of sell off in that. And so if you would expect that today would have been a day where a lot of them turned back around, and that was not necessarily the case, honestly. There was some pullback in some of the consumer staples names, which again, that's where money flowed out a lot of tech and went into some of that, I would say, over the last several trading sessions. So there was pullback in there, but I didn't necessarily see that much of a huge corresponding move in all the tech names concernedly. There were some, obviously, but even Amazon was down today from what I saw. Google was down at one point in time today when I was looking earlier. But then you did have some of the Metas and AVGOs of the world making moves. So I don't know. This was definitely somewhat of a mixed bag, if you will. So you're right. This didn't really move the needle, I would say. It's just a little bit of continuation from what we saw from Friday.
Yeah, and I mean, tech bounced back a little bit today. Sure, fine. Industrials had a good day. Materials had a good day. Energy had a solid day. Most of it is up. Really, communication services was the sort of one red dot on the board, but otherwise, everything was pretty straightforward, but nothing ultimately made a whole lot of progress. It seemed like last year was this big kind of kick tech in the teeth kind of a week. And then this week, we start off with, okay, let's just let this dust settle for a second. Let's not go everywhere all at once, all at the same time. So whatever kind of thing people were concerned about with tech, whatever people felt after earnings last week, and they were overwhelmed, underwhelmed, whatever it was, which was interesting because it seemed like the general kind of consensus was this is soggier than we want, but then did we really go anywhere on that? Not really. Mm-hmm. And so it was an interesting kind of a set of circumstances, though in fairness, I mean, when it was all said and done, right, NASDAQ was down 2.1% last week. So on net, not great. And I think at the start of this week, it sort of looks like the dust is settling. before we get into what will be a spicy macro week. Do you think this jobs data matters this week? I mean, I already know my answer, but I'm a nerd. So from those of us that don't obsess over macro numbers.
I don't think so. I don't get the feeling it does. Matter of fact, it's funny you mention this. I mean, what really matters is, does the market think it matters? And from what I can tell, it does a little bit, maybe, at least as of today. I don't know if the 16 vol is remnants of just the week that we had, but it's, I don't know, man. I mean, there's been so much cloudiness around these numbers over the last few months, right? Just because either there's been, coming out of a shutdown and, there's just not enough data, or I don't know what it is, man. You tell me, you make it make sense to me if it matters. This is definitely your area.
I mean, I think it matters in the sense that the data is now a sentiment indicator. I think it matters less for what it actually says about the economy and matters more as a barometer of where everyone's mood is. Because I think where you go now is, in my mind, you've arrived at this place where the S&P is really telling you exactly where the collective mood is. And the collective mood is just not happy with the fact that there's not going to be more easing, or at least as much easing as they want, because they see the collection of sort of potential pitfalls as demanding of basically a backstop. I don't think the markets actually see anything terribly wrong with the economy. That doesn't seem to be anything terribly wrong with the economy. We got a bunch of soggy labor market numbers last week, but maybe that's a one-off. It's unclear. It's 1 month's worth of data, and some of it is really delayed, like the job openings data was for not even December. It was for November. So how does that line up with the job cuts data that was more recent? How does that line up with jobless claims that popped but are still in a downtrend for months and months? So it's kind of mixed. I think from the market's perspective, they look at something like an ISM report and go, well, this tells you the service sector is booming. So hold on a second. And oil prices are going up and holding up. That's inflationary. So you look at all of this together, I think, and the markets say, we just want for there to be cheap enough money where we don't have to feel bad about all of these crazy risks out here. Because if something goes bump in the night and we get something wrong because a tweet comes out, True Social post comes out, something happens weird, then, and we end up on the wrong end of it and we crap out, the money is cheap enough to borrow back and go again.
Mm-hmm.
And I don't think they're happy with the fact that that basically Powell told them back here, right here, is when he said it. This was the 29th of October. This was that Fed meeting where he came out and said, you all are over extrapolating. You think we're on autopilot. We're not on autopilot. We thought we needed to backstop the labor market a little, and we did. And we don't feel like we need to do very much more. And I know I come out here and say data dependent this and data dependent that. I'm telling you more than that now. And like really spelled it out. And the S&P hasn't been able to break higher since.
It's true. Yeah, markets, that's what I was going to add. I mean, the markets have struggled since then. Yeah, I mean, I would say the market is starting to look forward to this catalyst to see if it does have some meaning. I mean, I think that's a little, that explains a little bit of the move today. I mean, we were in the red for a little bit. We did eventually reach as high as about 45 handles to the upside in ES, but we didn't quite hold on to those. And I think when you see a day like that, it says, let's not get too carried away because we do have something down the pipeline. Isn't there CPI this week too?
There is.
Am I seeing that? Did I see that right? Yeah.
There is. So we've got both sides of the Fed mandate this week. We got the inflation side. We got the jobs side. We also have retail sales tomorrow on top of everything else. And a really interesting thing here, too, because the Fed argument would be, well, the economy is fine, but the labor market's a little soggy. And the hawks would say, okay, fine, but it's not like people are getting fired in droves. It's more like they're just not being hired. The economy isn't necessarily shedding employment because there's a collapse in demand or anything of the sort. Demand is strong. The service sector is strong. All of that narrative hinges on the labor market because 68% of the economy is consumption. And on Friday, we got these consumer confidence numbers, and they were way better than expected.
Mm-hmm.
So we can look at this and go, yeah, okay, people are concerned about the labor market, the Fed this, the Fed that. Consumers are out here buying things. And if retail sales numbers start us off on strong footing as far as where the consumer is when we see those numbers tomorrow, it'll be a really interesting time to think like, okay, is that the market's going, oh, great, the consumer is healthy, growth, earnings, la-di-da. Or, oh, no, this Fed's not going to cut rates anytime soon at all. And we want these cuts not for economic reasons. We want them for SOS policy uncertainty reasons. So won't you please with the cuts? But if the consumer is strong, they'll be tough to sell.
Well, the other thing about that chart that we have in front of us is 7,000. It is the number that the market has been struggling with recently. I was looking to see, I know in the SPX, we have not closed over it. I can't remember in the futures if we've actually, we've had a couple of closes over 7,000, but we've been rejected from that area a couple of times. So I think if there's anything that I'm really paying attention to, it's for that this week. I mean, do we actually maintain a close over 7,000 and do we eventually kind of put it in the rear view? Much like it looks like the Dow has with 50K, do we put it in the rear view at some point? And, so, I mean, it's just, I would say the only thing I care about the jobs report for this week is that the catalyst that's going to allow us to do that.
Yeah. I mean, it'll be very interesting to see. I mean, the Dow here, excellent example of an index that's unambiguously breaking higher. Now, of course, there's some fun stuff with Dow construction. The way that this index is put together is not like the others. But nevertheless, I mean, there's volume behind it, and that volume speaks to sentiment, and that sentiment is unequivocally supportive here. So certainly something to keep an eye on here. And if you want to kind of take a look at the other side of the cyclically sensitive universe, Russell is very strong here as well. And that seems to be more well-founded than what's in the NASDAQ and thereby what's in the S&P, because it seems like the S&P is really being held back by whatever's going on in the NASDAQ. I'm just not sure that all of this in the kind of growthier indexes that are a little bit more away from tech, I'm not sure that that matters if tech really started to see divestment, because there's so much market cap that's trapped in there. How do you escape?
Well, I wonder too with this Russell 2000. I mean, the highs there was January 22nd. I mean, it was outpacing obviously the NASDAQ to start the year. I mean, are those the highs for the year, or is this train still have more to run against the NASDAQ? Is this the year where this really outpaces the other big boys in the market? I do wonder about that, because it started off so strong, but since then it's kind of laying in the weeds. And this is another one you look to see if it's going to break to new highs. Again, 2750 was the high before, I think, or very close to it. Is that going to be something we see again?
It's interesting because if you want to take the kind of benign view, right, then you would say, okay, we're going to get some cuts. We're going to get an economy that's okay. And what's really going on here is just one narrative is exhausted. And so we're going to see some rotation. Market overall is going to kind of hold up. S&P is going to maybe grind sideways-ish while the leaders change and the mix adjusts. It seems fanciful to me, to borrow a frequent word I hear when I read The Economist or hear it in my ears as I walk around. It seems fanciful to me that that's going to happen smoothly, given all these other risks that are out there. And I mean, just looking at crude oil again, here we go.
Yeah.
We do not want to come down. We didn't strike Iran. The Armada didn't do anything. We do not want to break whatever this is. We're holding and we're consolidating. And this is just one example of what's going on out here as far as the many contradictions of the current environment. This is not up necessarily for growth reasons. This is up because supplies might be more strained than expected because captured another tanker over the weekend. This is 8 now. And France caught up with one last week. So apparently we're not the only ones catching Russian shadow fleet tankers then. So, and would China actually act in some sort of geopolitically provocative way were we to continue to capture their pennies on the dollar oil supply? So this gets into some interesting territory. But before we
before you move from that though, haven't we seen this story so many times though with oil? I mean, October,
I don't think so.
August, May.
I think this is a different
the chart
story.
says, yeah.
I think this is a different story. I think what we saw, for example, here, this run-up, this was the Israel and Iran.
Yeah, that was super scary.
Shoot missiles at each other
at the time.
Run-up. I think this is fundamentally different. I think the reason this is different is because it's not about whether somebody shot a rocket someplace or didn't. In fact, the protests have been off the streets in Iran. We're not really doing anything actively. They're not doing anything actively. We've moved assets out there. There's certainly the threat that we might do something, but nothing's actually going on yet. So I don't look at this as that. Not only that, but the breakout was earlier, before we moved the assets in the region. So in my mind, this is not about we strike Iran, we don't strike Iran. This is about China gets a tremendous amount of its oil supply from Iran, Venezuela, and Russia, mostly, before all of this stuff happens at the beginning of this year. Now Iran is teetering. We're capturing Russian sanctions, defying ships, and obviously we went and decapitated Venezuela and told them if you're going to sell to China, it's got to be at market rates. So we've basically told a world that was completely forecasting across whatever agency you like, EIA, International Energy Agency, OPEC, pick your forecast. Everybody was looking for a glut this year, next year. We cut off this much of China's oil, and they're going to have to go buy from their not illicit sources. Saudi, Iraq, all of those supplies don't expect a big Chinese bid. So they're going to be tighter. They're also going to have to be purchases at market rates. That's going to be more expensive. So to me, this is a story about China having to reshuffle its oil mix, and that's a months-long thing. That's not a firefight.
I hear you though, but when I hear missiles flying in May, that's a hell of a lot scarier than capturing drones in February. You know what I'm saying? And
yes.
maybe oil is finding a new range. That's what it kind of looks like here. But I guess we'll have to wait and see. Until then, I'm playing it for a fade back into the middle of a range.
I'm still long, but obviously, if we were to get back under 62, let's say, I would say thank you very much. It's been a nice run. Goodbye.
Mm-hmm.
because that would say that whatever is going on here has run out of juice. To me, this seems like a lot of people are still wrong. Because, I mean, everybody had a massive glut years out. And that may just not be the case, especially if we keep cutting off these tankers. And The Economist estimates a fifth of global seaborne crude supply is this shadow tanker fleet. There is only one buyer big enough to buy all of that. And they're not going to be happy. They're going to have to go buy elsewhere, and they will. It'll just be more expensive. What's interesting in this whole environment then, and this is the perfect segue before we lose the opportunity to talk about it here, is the move in the dollar. Because if all of this coalesces into anything, I mean, the dollar got just smashed today. This is the euro, just as a sense. I mean, we can look at DXY here for the index. It'll look exactly the same because DXY is basically euro upside down. That basket is overwhelmingly euro currencies. If you look at the yen, same thing. If you look really all over the place, here's the Aussie. Dollar's getting creamed here. Here's the Canadian dollar. Same thing. Here's the pound. Same thing. What does this say in your mind? And before you answer, there's a reason that The Economist is on my mind. They had a cover for this week's issue. And I'm just going to go ahead and put it up on the screen here. Because this is something of an indicator sometimes. So here's the recent covers for The Economist, and there's the one for this week. The dangerous dollar. Now, when a currency ends up on the front cover of The Economist, oftentimes, especially if there's a bias to the story, that is to say the story is bullish or bearish, and this story is very bearish, it's usually a sign that within a month's time, at most, it's a contrarian indicator.
I can believe it.
And according to studies done by Brent Donnelly over there at Spectra Markets, 68% of the time that this happens, whatever signal is given in the cover, within a year, it is the opposite of that. So
I can believe it, man.
So a year from this cover would imply that there is a 68% hit rate on the dollar being up between now and the year from now on net.
I can believe it. And look, when we were looking at the dollar at 4-year lows not that long ago, I was like saying, like, look, I want to find, remember I was saying I want to find ways to get long the dollar. I was looking at Aussie. I was looking at Euro. Remember I asked you, which is your favorite vehicle?
Yes.
The thing is, it didn't materialize.
And I'm still short
like
dollars.
that. It didn't materialize the way I wanted. When you look at, let's go back to 6A. I mean, this never really fell down a whole lot, honestly. No, and I was in the trade. I'm glad I kind of got out quickly, because it didn't do what I was expecting it to do. I was expecting to see some type of reversion, at least back to 68s to 67s. It didn't quite do that. So I do want to see if the dollar's going to fall more. I'm looking for that reversion because, dude, everything eventually, you can't, whether it goes too low, it goes too high, like we saw in silver and gold recently, there's limits at some point in time where things eventually turn around, particularly in trade. And so it can be painful, though, along the way. Again, we always say that old adage, the market is can be right longer than you can be solvent. But I think if you can find smart ways to start getting long the dollar, I think it's kind of worthwhile. And today that was what I noticed. You talk about these moves. I mean, 1%, this is a massive move in Aussie today. The rest of them, big moves across the currency space. That was something notable. And I think now is the time again to start looking at ways to get long the dollar, because I think it's coming at some point.
It is coming at some point. And I'm still short I have to go with the price action. So when we saw these moves in the euro last night, and this is why Ilya doesn't sleep, because I was trading the European market open, and when this break happened on the 4-hour, I added into my euro longs. This was
there you go,
and that kept going. And when this happened, same thing happened with the yen. Here was the break on the 4-hour in the yen, right here. So
money never sleeps, and neither does Ilya.
No, got me some yen. Same thing with the pound. Got me some pound on this break here. So I am of two minds here. On the one hand, momentum is definitely favoring a weaker dollar, and it seems to be breaking levels, and it seems to be going. On the other hand, I think you're right. We're getting to a place where this is getting a little fuzzy, and the dollar is going to have to come back here. And my sense is I'm starting to get a little deja vu from the first half of 2008, where everybody thought the U.S. was going to go in a corner and have its crisis, and the dollar got just shellacked until everybody realized a U.S. cold is everybody's flu. Mm-hmm. And there was a correlation, one sell-off eventually. And the dollar surged because when people cash out, that's the cash. So I wonder if there's something like that that ultimately makes this economist cover indicator make sense. But we're going to have to talk about it later because overtime is out of time. As our producer Josh here reminds me, I'm cutting into my own time here because I'm staying around. You all should too. Macro Money is coming up next. We're going to talk about all this economic data that's coming for the week. And of course, we'll be back with Mr. Chandler later this week to pick it all apart again. So don't go anywhere. We'll be right back.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
It is another jam-packed week of economic data here for these markets, and we start the week with a little bit of concern, it would seem, and certainly quite a lot of indecision, because we start the week with the markets going nowhere. The S&P 500, the NASDAQ, general sort of mood on Wall Street, relatively flat. U.S. dollar gets sold off. What does it all mean? We're going to try to figure it out here on Macro Money. This is Elias Pilak, head of Global Macro here at tastylive. And we're going to go through this economic calendar here and try to see what is on the menu and what it might mean. Because we have quite a bit to consider. And of course, not only is there a lot, but it speaks directly to what the main issue seems to be for traders. So let's start with just a look at the economic data stage setting here. And as ever, that's first and foremost the price action. Kind of a flat week. Kind of a flat several weeks for the S&P as it continues to idle near those October highs, where the Fed Chair Jerome Powell told markets, yeah, you're over extrapolating how much rate cuts you think we're going to do and the inevitability with which we're going to do it. And ever since then, the S&P hasn't really gotten out of this range. And for the past 2 weeks, we can see no real progress there. After a rise of 0.4%, last week we get a decline of 0.2%, but ultimately we're just idle. Lots of fire and fury, but we're not actually getting anywhere. On NASDAQ, things look a little bit soggier, despite the fact that the earnings conversation last week in the tech space was by no means terrible. There was this new version of these earnings aren't good enough because CAPEX spending expectations are fill in the blank. And the fill in the blank seems to be some version of let's find why this is not enough versus what we thought. And if you look here at just overall performance, year on year, tech earnings are on course to rise 30.4%. versus the year before. Overall, S&P 500 earnings on course to rise 13% versus the year before. So these are very strong results. By no means are things doing badly. And yet when we look at the overall kind of surprise versus results in the markets kind of thinking here, where you say, okay, well, most earnings surprises have been on the upside. The situation looks relatively positive for growth. The general sort of landscape seems favorable. What is the price action doing in response? And the result is, well, not very much in the best case. And in the case of tech, where, of course, most market cap is buried, and we've seen unequivocal leadership for going on 3 years, things are getting soft. And it's almost as if the markets don't want to hear it about these earnings and have reached a level where maybe what optimism they're seeing in the numbers is already priced in. On the yields front, we get a little bit lower readings, and that mainly follows a whole slew of weak flavored jobs data. Job openings were softer than expected. Job cuts from a survey by Challenger rose. The 4-week average for jobless claims rose. ADP was a little bit soggy, and that's the private sector estimate of payrolls growth. So all of this put together created this sense that the labor market is weak-kneed a bit here as we go into the new year. And with that, we seem to have extrapolated a sense that there is more rate cutting perhaps to be done. And so yields were a little bit lower on that. As it stands, the markets have once again baked in a full 2 rate cuts for this year. That's 55 basis points on the menu now. Next year looks flat. And of course, we're going to find out if that's going to hold up because the set of economic data for the week is firmly aimed at precisely that conversation. Before we get there, though, crude oil last week a little bit lower, but ultimately just digesting in its range after surging 7.3% in the prior week. Gold up 1.7%. The prior week, of course, had those massive sell-offs in precious metals, but after all that fire and fury, ultimately they came to just a decline of 2.2%. And this week we're up this past week we were up 1.7. So gold is attempting to get on the mend already. A euro, yen, not much by way of movement over the past 2 weeks, though the yen was a little bit soggier going into the snap election this past weekend. As it happened, Takaichi Sanae, the prime minister, won that election handily with a landslide-looking majority now taking shape in the Diet, which is Japan's parliament. So she's going to have all of the political capital that she wants to have for a relatively expansionist fiscal stance, which, of course, is how we end up seeing Japanese markets surging on that as we start the week, and the yen looking a little bit weaker. Last week turns into yen's strength out the gate this week because it seems like the markets are saying, well, she's going to be more expansionist, more stimulative on the fiscal side, and that's going to perhaps get the Bank of Japan to keep pushing rates cautiously higher. So the yen looking quite a bit stronger here to start the week after last week's kind of before election jitters. Bitcoin, on the other hand, just accelerating lower. It was down almost 6% the week before last. Last week, it was down 16.5%. So the sinking continues in Bitcoin unabated, and giving a sense that risk sentiment remains on weak footing, because if people are divesting in an almost liquidation sense at the far end of the risk sentiment spectrum as far as assets go, at the very risk-on side, one might surmise eventually the selling starts to move inward along that spectrum towards safer assets. And some of the initial inklings here start to show up, with Bitcoin as weak as it is, and NASDAQ looking relatively weaker, but meaningfully so, than the S&P. Now, on to the data that's going to give us a sense for what happens here next. We're going to have retail sales coming up over the next 24 hours. Expectation is that we're going to get a slowdown there from 0.6 to 0.4% on the month. But the really big news comes Wednesday and Friday. Wednesday, we're looking at non-farm payrolls. That was, of course, delayed from last week by that very short government shutdown. Expectation is that we're going to get 70,000 jobs, 4.4% on the unemployment rate. And then Friday, CPI, 2.5% expected on the headline inflation rate. So a step down from 2.7 in December. Let's look at the jobs report first. We can see here 70K would fall broadly within the range of recent values. So not a controversial report if it lands generally nearby expectations. We can see it's right near the middle of where we've been really going back since, let's call it, the beginning of last year. Jobless rate seen steady at 4.4%. Using the haircut methodology that Fed Chair Powell has been teaching us in his pronouncements, where he says chances are that BLS NFP data is overcounting by about 60K a month on average. If we're expecting 70, then netting that out, we end up with a positive 10K. On the one hand, that's, of course, relatively small. On the other, it's better than what Fed Chair Powell has himself indicated is the running trend average that he sees, which is about a gain of 40K a month headline minus 60K, loss of about 20K a month on average. And when you look at these months here, especially going into the second half of last year, you can see how that would happen. But you can see where that average starts to take shape and how the numbers get skewed to be that negative. But at a positive 10K, you're ostensibly 30K better than what that baseline meant. And so maybe there is not the kind of urgency in this data to run and cut rates with abandon. On the inflation front, we're expecting to come down to 2.5%, both at the headline and the core, which excludes volatile food and energy prices, which is an interesting thing because, of course, it seems to endorse this idea that inflation from the tariffs is something of a one-off, that goods inflation is leveling out because the impact of the tariffs is already washing over the numbers. And come the next month or two, sort of February, March, April data, perhaps, you're going to see arrival at a place where you're no longer counting inflation as how much is it higher relative to a month before the tariffs hit. And this January data might be the last time that you even really get that kind of a comparison, because as you get into February and March, you already have the initial kind of rolling out of tariffs last year. So that should start to already appear in the base data for calculating year on year, March of this year, February of this year. So the argument that the Fed has been making is essentially goods inflation will shrink to next to nothing once that adjustment is made. And that will allow the Fed more room to ease as long as services continues cooling. But of course, that's a big if. And so if you look at the dynamics here as they've presented themselves, you can see the Fed has some reason for optimism. So far, the data seems to be bearing out their idea. Services inflation is cooling. Goods inflation is showing signs of a plateau. So ostensibly, there is some confidence that you could have in saying, yeah, okay, the Fed is not out of bounds here. It's really going to be a situation where inflation really is, at least as far as the tariffs are concerned, a relatively transitory thing, to use what has become something of a dirty word, at least in Fed parlance. And with that, maybe you have the room to get these rate cuts. But of course, not everything is quite so straightforward. And where it isn't so straightforward is, first of all, in the inflationary aspects of what's going on with oil, as we just talked about, but even just the economy itself. And here we get into, is the economy actually too hot to assume not that this will factor out on schedule, but that this, the main component of inflation, we can see here, by far, the core services piece, that this will continue to ease. And this retail sales report that we're going to get over the next 24 hours may well be a very important input into that conversation. The expectation is that we're going to get a little bit of a downdraft, 0.4% after a 0.6% increase the prior month. Not the most sort of dramatic set of numbers, at least as far as forecasts are concerned, but we saw something very interesting when we looked at consumer confidence data that came out on Friday. It was much better than expected, and consumers' one-year inflation expectations fell in line, again, with what the Fed might have surmised, to 3.5%. And of course, against that backdrop, consumer confidence improved. The overall sentiment index here jumping to 57.3. That's the highest since August of last year. The expectations index up to 56.6. That's also the highest since about the middle of last year. The reference date there is July. The current conditions index, so how badly do consumers feel squeezed by prices currently, and what is their sentiment currently, that ends up being a little bit more modest. That's the highest since October of last year. But nevertheless, sentiment ends up looking stronger than anticipated across the board. And of course, this is the majority of the economy. And most spending, as we can clearly see from this CPI data, lives in the service sector side of things. Note, until the tariffs, goods inflation was negative. The tariffs had to happen to even push it into positive territory. Here's that negative goods inflation situation here. In the black is, of course, the running year-on-year rate of goods inflation. It only really returned to zero by the beginning of last year and really only started to build once the tariffs started to appear. Most demand, actual demand, is in services. And most spending is in services, as we can see, because this is where the price pool is greatest. And from that perspective, this starts to look very interesting indeed, because first of all, it suggests that consumers are happily buying those services. And secondly, it makes the service sector, which employs the overwhelming majority of Americans, grow faster, as we saw from this ISM data last week that also sailed way past expectations and showed us a much stronger economy, both in the services and in manufacturing. This was the strongest manufacturing reading since 2022. So we're looking at a story where maybe the tariffs do rebase, but maybe once we look at the retail sales numbers and put them in context of the consumer confidence and the ISM figures we saw last week, and we see an economy that just isn't weak enough for anybody to be cutting in a hurry. Indeed, we can see here from the Citigroup Economic Surprise Index, U.S. economic data is, for all the messy jobs figures last week, it's tending to beat relative to forecasts and by a widening margin. The widest margin, in fact, if we zoom in here, since back in this period right here. Back in, let's call it the second half of 2023. So it would seem the U.S. economy isn't doing badly on the whole, but the markets have only increased their rate cut speculation. Now we have the first rate cut in June, and we can see here it is firmly baked in there at this point. And then the second cut has moved up to September. So the markets see a pair of rate cuts here in relatively quick succession, despite the fact that the Fed itself only sees one cut for this year, and in fact has argued this much since June of last year. So it's not like easy come, easy go, these forecasts. This has lingered for quite some time. The Fed has had the benefit of a lot of data to stay settled on that idea. So, as we've talked about before, the key question is, if the economy is relatively fine, why does the market want these cuts? And what happens if the data is relatively strong? So we get decent retail sales, we get a jobs report that doesn't raise any alarms, we get an inflation report that maybe goes along with the established trajectory, or maybe gives us a surprisingly buoyant service sector pull on prices. And we end up in a place where we get a strong economy, or at least an economy that appears relatively well supported as far as its pace of growth. Obviously, the labor market indicators aren't friendly, but so far that doesn't seem to really show up in actual activity data. So far, the growth side of the story is there. And so we get an economy that's relatively growthy, as it were. The price of oil has rallied significantly since the beginning of the year and shows no signs of abating, despite broad expectations for a glut this year. And so there's the calculus that says it takes about a month for that to work its way into CPI on average. So there's an inflationary shock that's coming somewhere here in this data. Not surprisingly, measures of inflation expectations in the bond market, so-called break-even rates, they've been going up with crude oil since the beginning of the year, suggesting the markets are noticed. They can see the inflation risk. And so, on one hand, the backdrop doesn't really favor a more dovish Fed. If anything, the Fed could make the case for neutral. But the markets still want these cuts. In fact, they're growing more restless about them. And this further increase in the trade policy uncertainty index more recently, that seems to be telling the story. And as we've said here before, the main issue here seems to be not that the markets want these cuts because the economy is somehow in a bad way. They want these cuts as insurance, because there are so many uncertainties around the policy outlook that what they want is insurance against something going bump in the night, against something going wrong. And we can see here that even as this uncertainty index, we of course look at the trade policy uncertainty index because the president likes to use tariffs as his modus operandi for a lot of what he does, and a lot of the uncertainty that now worries markets. We can see here, even though overall uncertainty is down from April last year when we had that episode with Liberation Day, quote unquote, reciprocal tariffs, the actual volatility around the averages here is breakneck. Whereas even during COVID, the volatility around the averages was virtually non-existent. It was very clear what the rules of the road were. Even during COVID, even during those shutdowns, which is shocking. Because the preceding period, the first Trump administration, we again see volatility around trade policy, though of course nothing like this. And that volatility is already something that created a drop in global trade volumes just around uncertainty. the first decline since COVID and the largest one since the 08 financial crisis. And one might even look at the labor market in the US from this perspective and say, well, how do you get a no hire, no fire labor market? Uncertainty. People are just not sure. And they don't want to hire. They don't want to commit. Much the same as last year, they weren't sure about the trade policy equation and just did less business. And that, of course, is a vulnerability for markets. That, of course, is something the markets need to be concerned about, if nothing else, because they have a very global supply chain for that AI story that has been powering them, as we've just seen for the better part of 3 years. And perhaps this is how you get the NASDAQ looking as soggy as it is, at the same time that the economy looks relatively well and their earnings in the space look relatively well, but the markets want rate cuts. Because perhaps what they want is to avoid what is now threatening them from the trade uncertainty last year compounding. And all of this isn't really about, is the economy doing well? It's more about, will the Fed backstop markets with cheap money in the event that something on the White House's side of policymaking goes wrong? So with that in mind, my exposure has only changed a little bit since we talked about it last week. I am more short the dollar here. I've added the pound into the mix. On the spot side of things with our friends at tastyfx, I'm also short the dollar against the yen. I'm not doing it here because those 6J contracts are just way too big. I'm still long gold by selling a put vertical here in GLD, still short Bitcoin with long a put vertical in IBIT, still short the belly and the long end of the curve, looking for rates to come up because all of these expectations for rate cuts end up being disappointed, and the data seems to point toward an economy that doesn't support them, that is hotter than what dovish markets want to see. Short risk. In fact, I've added into my short NASDAQ position after last week's moves, rather. Those seem like a more meaningful breakdown could be underway. Still long crude oil, looking for that breakout to continue. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host usually with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.